Good morning, good morning, good morning. Welcome everyone to the Benzinga Small Cap Conference, or the latest Small Cap Conference, Cleantech version. My name is Spencer Israel. If you've watched our YouTube channel, you probably recognize my voice or my face. Super excited to have this conference today of all days. Not only is it Earth Day, which was intentional, I will tell you. Also, we do have news this morning. Joe Biden announcing that the U.S. is going to aim to reduce our carbon emissions by 50% by the end of the decade. So this space is happening. There's a lot going on here, and we're going to talk about all of it today on my track and on the other track that Neil Hamilton is moderating as we speak right now. So for those of you watching on YouTube, please go right ahead. Take a second out of your day and smash that like button for us. We appreciate that. For those of you who registered via bzsmallcap.com, don't forget about the networking platform. You can do that throughout today, tomorrow, and I believe even into Monday. So check that out for those of you who again registered on bzsmallcap.com. We got a full day of programming, literally dozens of executives from public companies presenting today. I'm going to share my screen just so you can see here just how jam-packed our agenda is today. Look at all these speakers. We have investors, we have executives, we have influencers, thought leaders all throughout the day. Public companies, small caps, companies that trade on exchanges, companies that trade on OTC markets. Just so much content. So excited to be having this conference today of all days. So as I mentioned, we've got executives. Our first executive is here. He's in the background. I'm going to bring him on in a minute or so from now. Do you want to mention? We're talking about what's moving Cleantech forward. But we're also talking ideas, right? Trading ideas, investing ideas. Throughout the day, we will have those ideas presented to you. I will be giving you some ideas of my own, some personal investments that I have made in this space, and we'll be giving those throughout the day, whether it's me or people that we bring on, just talking about how they're investing in clean tech, in ESG, whatever you want to call it. This track that you're on right now is more the renewable energy track, more lithium, commodity focused. But I do want to mention that that's not the only avenue with regards to clean tech, and hop on over if at any point you want to Neil Hamilton's track, also available on YouTube right here. So go ahead. Yeah, Patrick Lane, I wore a blazer. I did it for you, my man. I did it for you. All right. So go ahead and smash that like. If anyone has at any point any comments, any questions, just go ahead and drop them in the chat right there. I can see the chat. I see it right now. I see your comments. Drop a question in there, and your question very well could get asked, right? That's the whole point. Is it's a virtual conference, but it's all about engagement, right? It's all about you. You have a question, you're watching your presentation, you have a question, drop it in. We'll ask it, right? It really is that simple. It's a democratized conference. It's a virtual conference. It's all about engagement for you. So I have a question. Yeah, Bass, I see your comment. I see your comment right now. It's amazing. I know, technology. Something else. All right. 9:30 is here. Market is open, and we're kicking off here. I'm going to bring on our first speaker on this track, Will Ralston, who is the president of SinglePoint. Will, welcome to our Cleantech Small Cap Conference.
Wonderful. Good morning. I love the energy. Just really making me real excited to be here with Benzinga today. And thank you for having us on. And happy Earth Day. What a great day to be running this conference.
Yes, exactly. It's Earth Day. We're cutting our carbon emissions in the U.S. I didn't even mention that, all the things happening in Europe, but we got a lot to talk to today. What are you going to be talking about?
Well, so today I'm going to run you through our presentation. I'm going to show everybody why they're going to want to pay attention for SinglePoint, show what we're growing, see what we're looking to build, and ultimately hope to put SinglePoint on everybody's radar out there for 2021 as we're looking for a year of heavy execution and strong growth.
All right, let's go ahead and bring up Will's presentation if we can. And Will, I will cede the floor to you.
All right, sounds good. Thank you again. Welcome, everybody. Thanks for joining. My name is Will Ralston. I am the president of SinglePoint Inc., OTC ticker symbol SING. As you know, today we're going to be going over our presentation. We're going to be looking at a few different areas of the markets that we're looking at. and tell you how we got there and where we're going. Ultimately, SinglePoint, we're looking to provide renewable energy sources and accretive assets that ultimately give people healthy living solutions through solar, through battery backup, reduction in emissions, reduction from being able to pull from traditional energy power services in the grid. As everybody's probably well aware of, we're tapping into a massive market here that's only growing. As Spencer mentioned, the Biden administration is investing heavily and wants to reduce those emissions and be able to continue to grow the infrastructure of solar, of battery backup, of renewable energy sources. So we're looking forward to see what the next decade has to come, as this decade has already been labeled as the solar plus decade. So it's a very exciting time to be looking at renewables, solar energy, battery backup, wind, different aspects that are all mutually accretive to each other. So here at SinglePoint, we really look to acquire businesses with the ultimate goal of creating the first truly national solar network. And in that, it's important for us to find entrepreneurial-led companies. So here you can see a little bit of our organizational chart. About 2 years ago, we've acquired our first solar company, Direct Solar of America. Most recently, we acquired our first healthy living asset, which is Box Pure Air. I'm going to explain to you how we tie that all together. With our initial focus in solar energy, we really set out to find a great model that was quickly scalable. We looked at multiple different solar companies that were difficult for us to go ahead and swallow the installation process because of the different intensity of capital to grow that side of the business. So we found what we believed was a great model in Direct Solar, which started us out on the solar energy part of that. As we continue to grow, we're looking to add different companies to that footprint that will help build into that network, and that we can insert different solutions into that solar network. But everything we're doing stems from solar installation, solar sales, and being able to acquire different companies that create a better, broader network to ultimately develop the first truly national solar network. As solar's continued to grow, it's been a great time. This is the second wave. We really feel that this is where the solutions are going to come out of the market. Prices have come down. Only about 4% of the eligible homes in small commercial areas have actually solar installed. So there's a huge market opportunity here for us to take advantage of. At SinglePoint, we want to be the single point of a contact for somebody that's looking to get into solar, get into battery backup. So we've really worked to make those networks through our subsidiaries that have done a wonderful job of creating that network, so that a homeowner, small commercial business, or whoever it might be that's looking to get in and have a renewable power source on their home or building, we can help them get with lenders, supplies, contractors, and really help them coordinate and understand the whole process from, well, what's really the best solution for me, all the way through to figuring out the right tax credits, ITCs, and everything else like that. And in going through that, we've really been able to create some great partnerships with some of the industry leading suppliers out there. Through our subsidiaries, we've been able to create partnerships with companies like LoanPal, who is a massive solar lender and supplies about 80% or more of the residential solar loans out there. We've been able to connect with Solagent, who is North America's largest material supplier in the space. And we've also developed solutions with real estate groups such as My Home Group, who's the second fastest growing real estate group, which helps us bring more clients into our network to help spread the installation of solar and bring in new clients and new leads for our sales teams. And as we've built this network, we've been looking at backfilling it with the actual installation side. So because we're in the market, we're able to see, okay, where's the right installers? Where's the hot areas where there's a lot of activity happening? And that allows us to really make educated acquisitions and look for different installers that we believe would be accretive to our network and our customers. So diving into our first acquisition here of Direct Solar America, we acquired them 2 years ago. They've really done a great job of building the infrastructure and the scale. At the point of acquisition, they were operating in about 4 states, and throughout 2020, they were able to build that infrastructure to operating in over 38 states. We're building a huge network of dealers. We're building a large network of installers that we're able to have preferred partnerships with, and that all is in the effort to modernize the solar sales model. And by modernizing that model, as you've probably experienced, there's lots of door knocking that goes around, and that's a great way of bringing in customers. But ultimately, we want to be able to provide a homeowner with the best solution, the best way, and the most comfortable way for them to understand solar and eventually go solar through direct solar. It's about improving the customer experience. It's about helping the contractors improve the efficiencies. So, for example, the partnership we have with Solagent and the collaboration agreement, we're able to help contractors procure materials much easier, which ultimately helps the ordering, it helps the efficiency, and helps the customer because they don't have to ultimately work through the person that got them in the door to go ahead and close the deal, and then work with the contractor, and then follow up with the loan and financing. We're able to help the customer through that entire scenario. Again, it's been a rapidly expanding, and that's what we're looking for. We're looking for scalable, quickly scalable companies within this that we can then backfill in accretive solutions, such as the Box Pure Air. The second acquisition we made here in the solar space is called EnergyWise, and it is our digital marketing online lead generation solution where we're actually able to provide leads to companies like Direct Solar. And the acquisition, again, is an entrepreneurial-led group of people that have actually been in the industry for quite a long time and developed leads for some of the largest companies that everybody's heard of, such as Sunrun or Vivint, and they've consulted for these companies and actually helped lead their lead acquisition strategy or have sold into them previously. So through their network, we are able to bring on some marquee clients within the space, which has been very exciting to watch this company bring on these clients, watch them scale, develop the leads out, and that model continues to grow. But again, we're looking at a customer experience. We're continuing to improve that experience. And Single Solar, this is an in-house company. This is what we started when we got into solar, and throughout different things, this is kind of our testing ground. We ultimately want to be able to provide the customer a seamless solution where they can go from simply going to singlesolar.com to getting a quote, to getting approved for financing, and ultimately scheduling that installation and making that purchase. We believe that the model is quickly moving this way as we have companies such as Tesla, such as Carvana, that are making these large purchases a normal place of happening online. And here we are to our latest acquisition, Box Pure Air. Now, this is a company that is providing air filtration systems, and they're top of the line. And we believe that this fits right in because right when you're thinking about going solar, there's a big thing. Okay, I'm going to go solar. I'm going to try to offset my energy usage. So part of that is also reducing your consumption. And it's very top of mind right now for clean air. Not only the current environment with COVID and everything else, but there's allergens, there's pathogens, everything else. And really creating a clean air, healthy living environment is not just about solar or battery backup and reduction in what you're pulling from the grid, but it's also about cleaning that air in your environment. When you're sharing a room with somebody, you're breathing their air, they're breathing your air. And it's important that we're able to create clean air environments right now. So we set out to find this company, and we were able to close that acquisition just about 45 days ago. And since then, they've been able to go ahead and submit bids in excess of $70 million to different schools. Now, this is a top of mind thing right now because we are just entering a time when the first COVID relief bill is being disseminated. The funds are being disseminated to the schools. So between that one and the American Rescue Plan that was just released, there's about $180 billion for schools to clean and make sure that they have clean air and improve their HVAC. So we've submitted those bids. We've got responses back, and it's just a very exciting, really an opportunity that we could not pass up as part of our growth strategy. We expect 2021 to be a huge year for Box Pure Air, as well as our solar companies, and all of which is very top of mind right now. So here's some of the key operating metrics from our 2020 and leading up from 2019 into 2020 and as we head into 2021. So we were able to increase installs, increase sales. We really increased the size of our network as late 2019 throughout 2020 was really about infrastructure building so that we could have a solid foundation to grow on, to continue to catapult the sales and the metrics and increase profitability and revenue. So 2020, lots of infrastructure, lots of focusing of the company. We spun off some assets, and we're going to continue to do so. But now we've got the platform to grow and meet those ultimate goals of getting to a listed exchange. Just a little bit of the financial overview of the company here. The first 9 months of 2020, we were able to reduce our expenses. We were able to increase revenue to some of the most revenue the company's done in its history, which we're going to quickly outpace in 2021 here and are on track to do so. Gross profit we were able to increase, and the biggest exciting part about what we were able to do infrastructurally is we removed all of our external convertible debt, and that's huge because as we look to uplist, as we look to do these things, it's very important that we have a strong balance sheet, and that's something that was massively changed late 2020 and first quarter of 2021. So very exciting stuff there. SinglePoint was founded in 2009 by Greg Lambrecht, CEO, chairman. My name is Will Ralston. I'm the president. Been here about 7 years now. And we've got Corey Lambrecht, who is the chief financial officer. All of us have history in public companies. Mr. Lambrecht, Greg Lambrecht, has taken a company to the NASDAQ before on an IPO. Corey Lambrecht sits on the board of multiple different publicly traded companies at the NASDAQ level and has taken one there himself. And we're looking forward to taking this one the same way, get to a listed exchange and ultimately be able to grow that revenue, profitability, thus maximizing shareholder value for everybody. So as an overview, as in closing, we are looking to build the first truly national network of solar and solar solutions that create environmentally friendly and healthy living solutions for everybody. There's a massive market opportunity right now, not only in just the clean air, clean tech side of the business through the Biden administration and everything. It's been continuing to grow as the economies of scale have improved, as costs have come down, as education has happened. And again, there's only about 4% of the market has been covered for solar and different solutions within that space. Lots of opportunities for us to continue to add accretive acquisitions to grow this company very quickly throughout 2021, as we've spent a lot of 2020 laying that infrastructure and that foundation. And at the end of the day, we are looking to help create a holistic solution for creating these healthy living environments through utilizing renewable energy sources and really the top line engineered products for cleaning air within conference rooms, schools, anywhere where there's a waiting room or a lobby. It's really, blue ocean out there for these clean air solutions. Again, my name is Will Ralston, president of SinglePoint. Thank you for coming through this presentation with me, and I will be happy to answer any questions, have a discussion with Spencer here, and I'm going to come back into the chat now.
Yeah, I want to mention that Will is Will. We're not done with you yet.
All right, good. I like the conversation, the dialogue. That's where
Will will also be on the panel later. What in like is that 45 minutes? I guess time for
7:30.
The business case for reducing emissions will be on that panel. So if for whatever reason you have a question doesn't get addressed now, it can be addressed later on. That being said, though, Will, just a couple questions from you, and then by the way, if anyone in the chat has anything, I will certainly prioritize your questions over my own. But Will, what would you say is the biggest catalyst for you guys in the next 12 months?
Well, I think there's just so much coming down the pipeline right now, from whether it's, federal dollars for the clean air energy stuff, the COVID relief bill, where those dollars from the Trump administration on the first COVID relief bill are just getting allocated now. And then we have the American Rescue Plan coming in from the Biden administration that will start to get distributed in the near future. So there's a big catalyst there in that aspect of it. But I also believe that, solar and renewable, with different events that have happened throughout the U.S., even recently in Texas, right? There's a very top of mind thing for going solar, battery backup, getting that safety, getting that redundancy. And now it just makes economic sense to go solar or add a battery backup system to your house. So we're excited for that. And again, the potential for the 10-year extension on the ITC credits being specifically applied for battery. There's a lot going on in these industries right now that we're in the right place at the right time with the right solutions.
I'm curious if there's still like one common misconception that you come up against the most.
Well, the common misconception for us is that there's a one size fits all solution, right? I mean, it's important for people to really evaluate the different systems and the different options, and that's really what we're trying to build here, is the ability for us to go in and help really design a customized solution for a house or for the specific need of what the individual is looking for in their solution.
Those are the only questions that I had, but as I mentioned, Will, you are coming back, so don't go too far. We'll see you on the panel at 10:30 a.m. Eastern time here for the business case for reducing emissions. What timing to have someone like you and your company on today of all days on our conference? So we appreciate it, and we'll catch you in a few minutes, man.
Hey, that sounds great. Thanks again. Thanks for tuning in, everybody, and we'll talk to you soon.
All right. A couple more things I wanted to mention. Thanks a lot, Will. A couple more things I wanted to mention here throughout the day. We are doing a giveaway. You can win a lifetime subscription of Benzinga Pro. I know. It's crazy. It wasn't my decision, but it's a great value is all I'll say. Tremendous value. And so what we're doing throughout the day, we have an ongoing trivia / poll. It's sort of it's an amalgam. It's a trivia / poll happening throughout the day. I'm going to bring it up on my screen so you can see exactly how it looks like and what you can do to engage with it, how to engage with it. There's that QR code. You can go to slido.com. We've got a number of questions. The person that engages the most throughout the day will win a lifetime subscription of Benzinga Pro. We'll also have other winners randomly selected throughout the day. We're giving away a free subscription to Benzinga's option newsletter. We're giving away a free subscription, a lifetime subscription, I should add, to Benzinga's breakout newsletter. Those winners will be chosen at random throughout the day for people that engage in the comments in the poll / trivia we got going on. So check it out, and we'll go through these questions throughout the day as it comes. So that's slido.com. And again, if you haven't already, guys, go ahead and smash that like button on YouTube. We really appreciate that. Leave us a comment. Let us know what you think. You want more of this? You have an idea for our next conference? Drop it in there. We're all about the feedback here on Benzinga for Cleantech Day. Okay, our next speaker, I should say, is in the green room. I'm going to bring him on here in just a couple of seconds. Let me make sure there's anything else I wanted to get up in the way as far as housekeeping is concerned. No, I think I mentioned the poll. I mentioned the trivia. I mentioned Neil's track, guys. There's 2 tracks going throughout the day. I'm not going to advise you to leave me in my track, but if you are going to leave me, the only place to go is over to Neil's track and check that out there. This is the more renewable energy commodity focused track, as I mentioned. All right, it is 9:50. Our next guest is here, David Corsott. He's the CFO of American Battery Technology. David, good morning.
Good morning. Glad to be here. I grew up in Michigan, so happy to support a Detroit company. Thanks.
Oh, really? Yes. Awesome. Yeah, there's like Michigan pride whenever someone is from the area, from Detroit or from Michigan. There aren't too many of us, so we appreciate that. Ticker ABML. We've already gotten questions about you guys today, so I'm just gonna not take up any more time, give you the floor, and let you go because I have a feeling that people want to know about ABML. You guys have been one of the high flyers this year.
Well, thank you. Happy to share. And
go ahead and just click that share button down there on the screen, and that'll bring up your presentation. And ABML chat's already buzzing about it. They want to hear. They ask, we deliver. There we go.
Right. Yeah.
I see part of your screen.
Right. Okay, so a couple of things. This presentation is available on our website, by the way.
Yeah.
So, but probably a few things to just cover.
Wait. Before you get started, though, can you go into present mode on the PowerPoint?
I sure can.
That'll make it easier to see.
Okay.
Awesome. Thank you.
All right. Sure. So we're American Battery Metals Corporation, doing business as American Battery Technology. We are a technology company. And so a few things to kick off here. We are a pre-revenue company. We're in the final stages of our permitting process in Fernley, Nevada, to build a 20,000 metric ton recycling plant. Our focus is lithium-ion battery recycling, and our recovery process and our refining process is all about cathode quality nickel, cobalt, lithium, and manganese. And so the process there is to disassemble the various battery modules, extract the metals and refine them, and sell them to cathode companies. I want to also mention that later today on the panel discussion that was mentioned earlier, our CTO, Ryan Melsert, will be on, and he is certainly our subject matter expert on the technology. So I think you'll find that interesting as well. So we've assembled a senior crew, very experienced, a lot of different experiences and accomplishments. So extending from software, logistics, manufacturing, strategy at Facebook, mining from the Comstock Group. Many of our tech team were at Tesla and involved in them building the Gigafactory outside of Reno, Nevada, as well as how to construct and deconstruct batteries. So again, you can see some of this on our website. This is a fairly common representation these days of the projected growth in electric vehicles, and then how the demand for various metals is also going to be tasked. The important thing to remember is 99% of lithium, nickel, cobalt, and manganese battery metals are produced outside the U.S., and most of them are recycled in Asia. So we are trying to disrupt and change that. So the standard illustration here about how battery recycling occurs is on the left. Unfortunately, a lot of the critical metals end up in a landfill. And so again, what we propose to do is to change that through a circular economy approach. So nickel, cobalt, lithium, et cetera, are almost forever recyclable. They're not destroyed in the recycling process. So we're very focused on keeping those metals in play again and again. Our process is very high speed. It is mostly automated. It has been tested and affirmed by the likes of BASF, the Department of Energy, DuPont, automobile manufacturers. So we have solved 50% of the problem in that we can create a product. We are involved now in, again, the latter stages of our permitting process to build the factory. And we are in the process of constructing our offtake agreements. So lining up feedstock on one end and customers on the other end as we process the metals through the factory. This is just a quick slide on the competition that we won that was hosted by BASF in late 19 and then into 20. So BASF essentially ran a competition, I guess you'd call it, for the best recycling technology for EV batteries and such, and we were the sole winner. So we now work closely with BASF. Again, an illustration that some of you have probably seen, but this is sort of a pyrometallurgical process of how some recyclers extract metals. Ours is a very, very low, has very, very low impact on the environment. We are able to move feedstock through our factory very, very quickly. We neither massively crush nor melt battery modules. We have a deconstructing process that moves feedstock through our factory very, very rapidly, and it contributes to having a low cost of goods sold and a high EBITDA. So again, just what I mentioned. So we have a high-speed reverse manufacturing process. So we could, for example, move a ton of feedstock through our factory in an hour, as opposed to days or weeks. And we will be based in Fernley, Nevada, so no reason to have a long supply chain of shipping end-of-life batteries or battery waste to Asia, having it processed there and shipping it back. Some of our engineers, when they were part of building the Gigafactory, also were instrumental in the battery manufacturing process, which is why we know how to take them apart very efficiently. Another classic illustration that you probably have all seen, at least in today's this industry niche, of just how batteries are built, and we understand that very well. And again, we're focused on nickel, cobalt, manganese, and lithium. So we are very adept at disassembling these batteries, extracting the critical minerals, refining them, and turning them into cathode grade so that they can be put right back into batteries. This is an example, and another slide about the BASF challenge that we won. So the evaluation of our technology has also occurred through the United States Advanced Battery Consortium, which again includes the Department of Energy, the major automobile manufacturers, and others. And we are we've been notified about that grant. We are completing contractual matters now, and are excited about being part of this. The other grant that we have been notified recently is different, because our technology also plays into extracting lithium from claystone. So in addition to having proprietary technology about recycling, we also that same technology is well suited to extraction of claystone that contains lithium. So we are doing a 3-year practice pilot facility, if you will, that demonstrates how our technology can extract the lithium from claystone in western Nevada. This is something separate from our recycling plant that we're building. So it gives us, we're able to, showcase what our technology can do also in the extraction from mined minerals. Artists' rendition of what our first factory will look like outside of Fernley, Nevada. 60,000 square feet for production, about another 35,000 feet for lab and various experiments and testing of technologies. The state of Nevada, the Lyon County, and the area in Fernley has been really helpful and welcoming, and we've received some tax abatements and incentives that the Nevada estimates will contribute to the local economy over a period of 10 years of $348 million. We are also located in an opportunity zone that may also play into our successive factories that we intend to build. In terms of the landscape, these are some companies that we follow that we're aware of. The differentiation here is that we're more vertically integrated in that we have mining claims. We're not in the mining business right now, but we can also extract metals that have been mined. And we have technology that is very conducive to the battery recycling industry that we're about to enter into. You can see the valuations here. We haven't, we have filed to uplist to NASDAQ, so we just haven't given ourselves this kind of evaluation. Northvolt, for example, has raised a bunch of capital, very successful at that. I think as of yesterday, our market cap was around 600 million. So where are we at and where are we going and what does it take? So our budget for the next few years is 150 million. That's $35 million to construct the pilot plant, 100 million for the next full-scale recycling plant, which will be 5 times the size of the 20,000 ton pilot plant. And we've set aside $15 million for working capital. If you go through the timeline here, strangely enough, in Q2 2021, that's exactly where we are at. We're trying to wrap up permitting, beginning to order our plant equipment, and we've started site work. Q1 2022, we expect to be in production. Phase 1 of our production will be scrap metals and black mass, which contains some of the critical metals that we will extract and begin to refine. As you can see, as we move through 2022, we will also begin the planning for commercial plant 2, which again is 100,000 metric ton capacity. Our cap table is what's noteworthy is we have no debt. We are slowly converting our warrant holders to common shares, and so we've cleaned up our cap table, and we continue to do that. But again, we have no debt. So maybe the 6 takeaways here again are on this page. Our technology has been affirmed through global competitions from significant companies and departments that are listed there on bullet point 4. We will begin full construction on the pilot facility soon, 20,000 metric tons annual production. And we are really happily in the midst of this growing industry niche, and also being able to contribute to kind of lessening the process or the demand on mining. This one is a fun one for us, so I thought I'd leave you with this. The chairman of and CEO of Blackstone believes that the industry we are in is already a $100 billion industry, and he sees it going to a multi-trillion-dollar industry. So just further affirmation about our technology and that we believe we're in the right place at the right time. If you need to contact us, want to talk to us, Doug Cole is our Chief Executive Officer. I'm the CFO, and we would love to talk to you about strategic partnerships, investment, real estate. All of that is on a front burner for us. So thank you.
Thanks a lot, David. We got a few questions actually from our chat, and I want to go in chronological order if I can. So I'm going to start with Bass here. When do you expect to actually see revenue from the extraction vertical?
Q1 of 2022.
All right, that was a straight answer. I like it. What percentage is from Frank? What percentage of your real estate holdings for exploration are owned versus where you just have the mineral rights?
We own about 95 acres in Nevada in various places. We also have claims that we have to renew every year if people are familiar with how mining works in Nevada. So that is that. We have significant water rights in Nevada, which are really notable. If for anybody that lives in the Western U.S., you know that water is sometimes worth more than gold. So we have access to the mining to these claims, and we have access to several hundred acre feet of water.
So fair to say that there's a mix
Yes.
of owned and not owned.
Yes.
Couple questions now about your production estimates and timelines for that.
Mm-hmm.
Do you have a timeline for when production will start?
Q1 2022.
It's same. Okay.
Yeah. Do you want me to flip back to that timeline? Would that be?
Yeah. Why don't you go back to that? It looks like a couple people were asking about that.
Okay. Yeah. All right. So this is our plan. We have a 5-year financial plan, of course, that includes building 3 factories. The 2 successive factories after the pilot plant will be at least 100,000 metric tons annual production. So you can see that we're moving through permitting, latter stages of permitting. We own the land at 12.5 acres that we will build the pilot plant on. And then, Q1 2022, we have revenue.
What is the overall total addressable market for the battery recycling business, and what is your market share of that right now?
Well, again, we're a pre-revenue company, so we have no market share in terms of production. I can go back to one of these other slides, but the market is heating up. You can see, so if you look at the chart on the right, it takes us through 2030 for the demand for these various metals. And then the chart on the left is projected manufacturing of electric vehicles. There are all kinds of representations out there. We use Bloomberg for this one in terms of market share. If we also go back to what the chairman and CEO of Blackstone was talking about, he thinks that this is now a $1 billion industry. So,
couple more here. I'm going to try to get some, if I can. Do you have any thoughts? Where is my question here? Do you have any thoughts? It's from Zachary Schwartz. Any thoughts on the nationwide collection network for the collection of recyclable materials? I mean,
we have lots of thoughts about it. It's a great question. There really isn't one. I would say it's splintered. So you have very large companies that are trying to get organized in that right now. Maybe waste management would be an example. So we're having discussions with all of the players. We have a relationship with a aggregator that says they can bring us as much feedstock as we want. But your question is right on in that it's very splintered right now, and where do you collect them, and who is collecting them is just really getting started.
Efficient Fingers in chat. Yes, you did hear Dave say that they have filed for an uplist to the NASDAQ. And last one here before we let you go, are you still forecasting 80% EBITDA from the recycling vertical down all the way from the pilot to commercial factories?
Well,
that's an informed question.
Sorry?
That was an informed question.
Yes, it was. There are, internally, we have a lot of scenarios. As the chief financial officer and sort of conservative guy, the 5-year plan that I'm very comfortable with is a 65% EBITDA from the production of the pilot plant. As we get into the larger recycling facilities, I think it's likely that we can increase that. Again, the speed with which we can process feedstock and the low cost of goods sold are really important in achieving that higher EBITDA number. I have a background in manufacturing, and I don't know of any other factories that can project those kind of numbers, just in this industry, it seems.
All right. David is the CFO of American Battery Technology. There is the URL for their site up on the screen. You guys all know the ticker because it's one of the most requested tickers I feel like that we get, at least I get on our show, ABML. David, thanks so much for the time, and good luck.
Yeah, and again, if this website's on this presentation is on our website, I'm sorry I had to run through it so quickly, but I really appreciate this venue, and thanks, and keep up the good work.
All right, thanks a lot. I do want to pivot to our next presentation now. This is also one that I get requested or asked about a lot. For a while there, it seemed like every day on our morning show, Pre-Market Prep, somebody was asking about Worksport. So we've got the CEO of Worksport on now, Stephen Rossi. Good morning or good afternoon, wherever you are. I don't know what time of day it is for you.
Good morning.
How's your Thursday?
Very good. We're Toronto here, looking outside to late April snow. So that's always great.
We also got that late April. That there's always that fake out, that Michigan fake out, where you think, oh, it's spring. Oh no, it's not. There's more.
No, it's not. Nuh-uh.
Yeah, you know all about that. All right, let me get out of here, and I don't know if you have a screen share prepared.
We do, yeah. Well, we have a full presentation. I'm happy to go through it with everyone.
Go ahead and share your screen there. There we go. I see it, and let's start this thing.
Cool. Yeah, rock and roll. Well, welcome everyone again. If you're joining us live, welcome. Always great to present to you guys. If you're watching a recording, welcome to that. And we'll start off by saying I'm Stephen Rossi. Nice to meet you. I founded Worksport in 2011. And I've been working really hard to get the company where it is today and preparing it for its path forward and where we want it to go. Worksport really, we're much more than a manufacturing business. We call ourselves an R&D think tank, producer and distributor of consumer goods in the automotive business with, kind of branches moving forward into like sustainable, renewable technology relating to like microgrids and solars. And I'm really, really excited to kind of get into that. Those pivots and those new exciting markets that we're in. But our primary market and where we started was manufacturing pickup truck tonneau covers. So pickup trucks litter the roads of North America. They outsell every nameplate. We're talking F-150s and GMC Sierras and Honda, Kia and Hyundai are coming out with pickup trucks. It's just a big market. So our initial core business when it was founded in 2011 was manufacturing the bed covers covering the empty cargo beds of these pickup trucks. So these are called tonneau covers. And tonneau covers, otherwise known as truck bed covers, are the accessories used to cover the cargo beds of pickup trucks. To put it into reference, pickup trucks are the #1 selling vehicle in North America. And the tonneau cover market, there's various segments of this market, and it's a $1 billion plus market. And that's the market in which we participate. So Worksport, we launch products and we design them as this R&D think tank from the ground up. We start from concept to prototyping, testing, and user group evaluation, and we move into tooling and pre-production, then to final launch. During this time, we heavily focus on intellectual property assets. We'll get into it, I think, a little bit later, but we're hovering into, I think, the 40 plus intellectual property assets fully owned and developed by the company between trademarks and patents. And these trademarks and patents are within China, the USA, globally in the EU and Britain, and our IP assets represent years of development and hours of and one of our competitive strengths. We also own our own designs, tooling, and processes. So everything that we sell is something that we've built. We own the tooling for. We constantly improve, and this is kind of the formula and the recipe for the success we've garnered so far, and the success that we're going to have and experience moving forward. And today's pickup trucks come with more luxury options than all other segments of vehicles. The F-150 gets the best of the best, and much more attention on the pickup truck market and designating and appointing these trucks than any other vehicle segment in the market. And the value proposition is that we offer a suite of products that match the quality and innovation that comes standard with today's pickup trucks. To give you guys a quick overview, our ticker symbol is WKSP, and our shares are currently traded on the OTCQB market. Sorry. The stock has traded recently at a price at about 31 cents, and its 52-week trading range has been between 5 cents and 85 cents. We have about 165 million shares outstanding, and our market cap is about $37.6 million. Of special note, and in my opinion, is the lack of long-term debt we currently have. That provides us with a great deal of financial flexibility as we look to finance our growth going forward, and we'll talk a little bit more about that later in the presentation. And many of you have seen our press releases issued earlier this week announcing that we have filed an application to list our shares on the NASDAQ, and concurrent with that listing, we will effect a reverse split of our common shares to facilitate the required entry price into those senior exchange listed markets. We don't know the exact ratio yet, but it'll be whatever is reasonable at that time. And we're really excited about venturing into larger markets and being able to really grow within those markets as a public company and as an operational company. So what are tonneau covers? Let's get a little bit more in depth into that. So truck bed covers come in many different types and styles, and this is our core business. And we always kind of hedge it where as much as Johnson & Johnson, as we all know, makes baby powder, which has made generational wealth. They're also making cool things like COVID vaccines. Our tonneau cover is our conventional market. It's a big market we participate in, and there's really exciting things there. And I'll get into some of our more interesting forward-reaching kind of projects. So covers come in all different types, shapes, and sizes, and Worksport's core focus is producing folding truck bed covers, providing incremental or full bed access to the pickup truck bed. Folding truck bed covers account for most of the market's demand and come in either hard or soft options. Aluminum and fiberglass are hard, leather, and we have a really cool new Matt-X finish that's a cut-resistant fabric as well. So it provides a lot of cool features that the hard covers do. And there are a few key reasons tonneau covers and pickup trucks go hand in hand. Fuel economy and reducing wind drag. Second, they protect the truck bed from the elements, rain, snow, and prying eyes. They protect the contents, as I just said, the truck bed, keeping items clean, dry, and safe, out of sight, out of mind, as we always say. And soft tonneau covers are the fastest selling type of covers, and they're really, really easy to install. They're super lightweight and affordable. They range anywhere between $300 to $600. Relatively inexpensive purchase when you look at the price of the truck at $30, $60, or more $1,000. Hard shell folding tonneau covers are made using either aluminum or, as I said, fiberglass or a composite material, and they look better and they add more robust security and are quickly growing to be the most popular selling cover option for truck owners. They retail anywhere between $699 to $2,000, but are relatively low expense, again, when you look at the general cost of the truck itself and the meaningful value it brings to that truck. So let's talk about market size. As a result of the market consolidation and congested IP realm, our industry has among the highest barrier to entry. It's damning. That makes Worksport unique, being one of the only companies able to expand in a market that's near impossible to enter. But there are two major markets, the SEM market and the OEM market. Items purchased from the vehicle manufacturer are considered to be OEM products. And when a customer purchases an item from not the original manufacturer, like a Pep Boys or O'Reilly Auto Parts, that's considered to be an SEM market. In 2019, over 3 million pickup trucks were sold in the USA alone. I like to say they're recession-proof. When economy is bad, people buy pickup trucks to get out there and work. When the economy is good, people buy pickup trucks because they're the most well-appointed, and they fit anyone's lifestyle from young to old and woman and man. So our market stretches way beyond just the USA and into Canada, Latin America, Australia, and more developing nations. Pickup trucks are key segments for the SEM, the specialty equipment industry. Pickup trucks account for 25% of the specialty equipment market. So what that means is when an OEM is making a pickup truck, that pickup truck then gets bought and the owner's upfitting it with floor mats and mud flaps and chrome accessories. And that really keeps another multi-billion-dollar market kind of moving and growing. There's a $12 billion market segment, and that's where the Terravis will begin. And we're going to get right into the Terravis. So the Terravis doesn't fit right into it, and so to explain the Terravis, we have our conventional tonneau cover market, and we've launched an innovative new product. We're going to be in pre-production this year and full launch into next year, and that is something we've seen many years ago as a segue is turning current pickup trucks into microgrids. So what we're doing is we're fusing the latest solar technology with our folding cover, conventional technology, and making the TerraVis. The TerraVis is a solar tonneau cover that'll charge our battery systems. And it doesn't fit into the pickup truck specialty equipment market alone. The TerraVis market includes the tonneau cover market, which is in the billions of dollars, and the pickup truck specialty equipment market, which is $12 billion, as well as the EV market, which is estimated to increase to about $30 billion in less than 10 years. And the battery storage market, which is $2.9 billion globally just last year alone. The global battery energy storage system market size is expected to grow at a compounded annual growth rate of about 32.8% from 2020 to 2025. That's pretty rapid, reaching $12 billion in 2025. With the three markets that Worksport can participate in, the cumulative size of our forecasted market is in excess of $24 billion by 2025. And we're really excited about that because we've been working on this for quite some time, and our products are kind of almost probably going to be close to first to market. And we've been really working on intellectual property and controlling our inventions since 2014. So we forecasted this, and we're in a very enviable position in terms of protecting our rights in terms of intellectual property. So with only 5% of the market, we could be $1.5 billion in top line revenues just on the TerraVis side alone. So today and future products, we believe the key to growth as a brand and a manufacturer of truck bed covers is offering a full line of products. A full line would consist of different types of covers, such as soft and hard folding products. And our innovative truck bed covers cover every major make and model out there. So that would consist of our conventional covers for the F-150, as well as electric covers for Rivian, Tesla. We're hoping for Tesla, the Rivian RT1, the Lordstown Endurance, and there's just a myriad of other really cool electric pickup trucks coming. And we've got partnerships formed with Atlas Motor Vehicles, a startup, and Hercules, which is set to be in conjunction with Nissan. So unlike most, we do not rely on outsourced overseas manufacturing to produce products that is simply purchased and branded. Worksport manufactures, as I said, its own products. We work very hard on maintaining innovation, solving problems. Before we began in the market, previous leaders sold the same types of covers they sold in the 80s for trucks made in the 2000s. And the truck has developed. With the product not developing, that's a big opportunity that we've capitalized on. We said it in 2015 that it was not a question of if, but when the beloved pickup truck would become electrified. And now we have literally dozens of EV pickup truck nameplates coming to market from, as I said, Rivian and Tesla. So tomorrow's roads will be traveled by EV trucks. And with them come challenges from stress on the already overdrawn electrical grid to range and plug anxiety. Worksport is pioneering this market with the launch of the TerraVis system, a system that has been in development since 2015. So let's deep dive into the TerraVis. Everyone's pumped about it, I most of all. The TerraVis vastly broadens Worksport market size, scope, future, and opportunity. The TerraVis system is the first of its kind, what we call a mobile solar power generation system. And the TerraVis consists of three major monetizable systems. The first is the cover itself, the most advanced folding truck bed cover system the world has ever seen. We believe it's leaps and bounds ahead of anything else in the market, and it's able to go anywhere. But elegantly outfitted with high-power solar panels, will generate up to 1 kilowatt of mobile power off-grid in optimal sun conditions. The second is our core battery system. The core battery system will take power from the cover and store it in modular battery packs. It stores 1.5 kilowatts of energy in up to 4 batteries that can be stored and transported in the truck's bed using the TerraVis mounting system. The batteries will power near anything with their inbuilt 2,000 watt power inverter from the job site to the campsite, and much needed power in the event of a natural disaster. Further to that, in recent developments, is we've really kind of built out the core battery system with some technology we'll be announcing later that will allow the TerraVis system to be an ideal candidate for non-violent military applications, relief missions, and medical applications as well. And basically, our battery system will be able to have the modular battery packs, but stay alive while replacing the battery packs. Delicate, medical instruments or computers and systems can stay powered without having to shut down and reboot from a battery change. So we're really making leaps and bounds in innovation of usable battery systems off-grid. And with the TerraVis core battery system, we dramatically expand our market potential. What's exciting about the TerraVis core is that it will be a standalone consumer product as well. So we always say, if you have an electric truck, our TerraVis cover can trickle charge that electric truck. If you have a conventional truck, you buy our TerraVis cover and our core battery system, and now 60 million microgrids in the US are traveling, being able to power anything in the event of natural disaster, campsite, and job site. The 7 billion individuals on Earth, 7+ billion, can buy. So globally, our market would expand on the TerraVis core, where you don't have to own a pickup truck. The core system will charge itself from a 12-volt source, wall plug outlet in every part of the world, as well as any solar cover with some of our adapters. So the unique battery system will be available to purchase even if you don't, as I said, own a pickup truck. The core battery system will allow the same freedom from grid power by being chargeable by any wall outlet or 12-volt system. And once one of the batteries is depleted, don't worry about it. You can exchange the depleted battery with a fully charged replacement battery and purchase as many spare batteries as you want. So for the campsite or the individual that's a contractor, you can have a team working off of 1 or 2 core systems with dozens of batteries and not have to fight for plug power at the job site or off the generator. What we're really excited about is the TerraVis charging the much anticipated forthcoming EV trucks. To start, the TerraVis can provide 30% or more of the power needed for the average daily commute. So about 30 miles, 35 miles is what the average US commuter drives, and we can provide 10 to 15 miles of that off-grid from the sun. And we've already forged OEM supply partnerships with 2 EV nameplates, as I'd mentioned. Both were the biggest fans of both, and one is in partnership set to be with Nissan on the Hercules side. To date, we've identified as much as $70 million in foreseeable TerraVis OEM sales, and we've only really just begun. We feel that once the product's in pre-production later this year, other opportunities will come, and we believe every major nameplate, whether they've announced it or not, will have an electric truck in the market, including Hyundai and Kia and Honda. With the onset and adoption of EVs comes tomorrow's problems. Where's the power going to come from? And the TerraVis endeavors to be that answer. To speak to that, we're starting off in the iPhone 1 of the TerraVis launch later this year, and look at where, for example, this analogy, the iPhone has come since the 1 to the 12. So imagine what we can do in the coming years in terms of improving the efficiency. And another statement I make, and the challenge I pose to all EV manufacturers, is when you drive a gasoline pickup truck, you have your emissions coming from your tailpipe. And are we merely deferring the emissions from the gasoline or diesel truck's tailpipe to that of a natural gas or coal or oil power plant that needs to pop up pretty quickly to provide the power when you plug it into charge? So the TerraVis is the only product that meaningfully charges a vehicle completely with no carbon footprint. And I think that's critical as more people transition to driving electric vehicles and electric pickup trucks. Are we just deferring the emissions? And the TerraVis will really make a meaningful impact. 30% of the charge that truck would need on a short commute average would be from the sun, which we feel will actually have a meaningful impact. So with only a $45 million market valuation, a $37 million valuation, we believe we're very much so positioned to be among the most investable companies in the market with a very bright future. Worksport sales grew over 400% in 2019 in revenues from private label and business to business and consumer direct channels. With North America's pickup truck sales outpacing all the other vehicle segments 2-to-1, our market size will only increase, along with the barrier to entry will become more damning, putting Worksport in an increasingly enviable position. Worksport will continue to grow its market share through expanding our distribution footprint in both the USA and Canada. And for the B2B market, there are over 17,000 brick and mortar stores which sell conventional truck bed covers. And our sales force will work towards growing our dealer network as a mainstay cover brand. And just to be clear, there's 17,000 stores in the US that sell truck bed covers, but we've identified 60,000 stores in the US alone that sell automotive goods. So we'll focus on getting our market share from the current selling B2B stream, but we're also going to really evaluate and look at the 40,000 stores or so that don't sell pickup truck covers, but sell automotive, and entice them that this product is a viable revenue generator for them.
Stephen, I'm going to interrupt you. We're running up on time here. And there are a few questions from the chat. So what I'm going to say to the questions from the chat is we can't get to them now, but Steve, we're not done with Stephen yet. He'll be back for a panel at 1 o'clock today on emerging innovations and the companies behind them. That's at 1 o'clock right here on the same stream, same track. So we didn't have time for questions. I apologize, but I've written them down. and we will get to those questions if we can later. But Stephen Rossi, Worksport CEO, thanks a lot.
Thank you.
All right, got to keep the show moving. I'm moving on here to our first panel of the day on this track, the business case for reducing emissions. I'm going to introduce the moderator, and then she will introduce the panelist. Holly Stower, lead analyst for resource and environment at Cleantech Group. How are we doing today?
I'm very well, thank you. How are you?
Doing great, doing great. Holly, the floor is yours.
Great. Well, yes, welcome everyone. I'm Holly Stower. I'm lead associate for resources and environment at Cleantech Group. So my role is to basically research sustainable technology and innovation and advise companies on how they can engage and adopt more sustainable practices. So the business case for reducing emissions is very much at the core of our everyday. And from our perspective, the drivers and opportunities for businesses in the space have never been stronger, from core technologies like solar and wind moving down the cost curve to more financial incentives from government and the financial services sector. Additionally, consumer demand for sustainable products and services is also at an all-time high, and so is awareness for environmental issues. And what we're really seeing now is that employees of larger companies are driving change from within, and being a sustainable company is now increasingly attractive to talent as well. So as such, I'm really pleased to be talking about the business case for reducing emissions today with our three panelists. So I'll pass over to each of you to introduce yourselves. So should we start with Will from SinglePoint?
Thanks, Holly. I appreciate it. Thanks for having us on today. And my name is Will Ralston. I am the president of SinglePoint Inc., OTC ticker symbols SING. And happy Earth Day, everybody. Happy to be here.
Yes, happy Earth Day, everyone. I missed that part. Next up, should we go to Bill?
Yes, thanks. Glad to be here. I'm Bill Crossan, President and CEO of Thermal Energy International. I'm in Toronto, Canada, and I would like to tell you it's snowing out right now on Earth Day in Canada. So Thermal Energy International is an established global supplier of proven and proprietary energy efficiency and emission reduction technologies. At the end of the day, we save our customers money and improve their bottom line by reducing their fuel use and cutting their carbon emissions. Most of our customers are very large multinational corporates, and we run our business from engineering and sales offices in Canada, United States, and the UK.
Great, thanks, Bill. And yep, from the UK, it's a very sunny day, so quite a difference. So over to you, Corey.
Yeah, thanks, Holly. Corey Jaslon, President and CEO of MustGrow Biologics Corp. We're an ag biotech company based in Canada. Our focus is on providing a natural, organic biopesticide that's created from food-grade mustard and that. So we're focused on the agriculture sector. Thanks.
Great, thanks, Corey. So to kick off the questions, I'm going to focus this one to Will. So solar has a really strong relationship with the corporate sphere, and one that's been really hard won over many years due to its non-destructive nature, fast payback periods. So the question is, what have I missed off this list, and how do you communicate the business case for solar to your customers?
Yeah, absolutely. No, that's a great question. And over the time here, what you've mentioned even in the presentations, there's lots of consumer demand, there's lots of awareness for solar and renewable solutions. So it's not so much as us presenting the business case anymore. We actually have lots of customers coming to us asking about the different solutions that are available to them, what may be the best fit for what they're looking for. And ultimately what's driven that is that awareness, is that consumer demand, which has led to increased efficiencies and overall, pricing being able to come down. So what we're really excited about here at SinglePoint, as we have been scaling and looking to scale through 2021 and increasing revenue and profitability, is really what's going to be kicking in for additional potential credits, through different infrastructure plan, job creation, different things like that. So it'll continue to drive the prices to where they need to be to continue to make economic sense for businesses, homeowners, anybody that's looking to go solar, get into the renewable landscape. And really what SinglePoint does is provide all these solutions wrapped into one single point of contact where we can help a business or a residential homeowner come through our product, our solutions, and help them wrap that all up into one economically beneficial solution for them. So again, at the end of the day, we are not necessarily having to make the business case anymore, but simply go through the right solution to find the right fit for that particular customer.
Great. And I wonder if you could sort of, I guess, speak to some of the drivers behind that demand. What has really changed, shifting it from you approaching your customers to them coming to you?
No, I think there's a lot of different things happening within the industry right now. I mean, that are making it top of mind for consumers. I think people are concerned about, how their energy is being created. Is it from, traditional energy source or is it renewable? Earth Day, spreading that word of creating renewable energies, putting less stress on, using traditional, forms of creating power. So all the different, environmental impact, different weather patterns that are happening. People are saying it could be happening because of this or because of that. It's really making people think about, energy consumption, how they're consuming, where it's being derived from. And that's really driving a lot of demand. And additionally, it's the cost of it makes so much economic sense now for people. So, 10 years ago when solar and renewables were really making their first run at coming into the market, you're almost immediately priced out. But now it's really, it makes complete economic sense to be looking at renewable energy solutions.
Great. And you spoke a bit about, I guess, more residential solar. Could you sort of expand on some projects that you've worked on recently, more on the commercial side?
Yeah, so on the commercial side, we really look at, being able to offset a commercial building's energy consumption. So for example, some of the commercial buildings are running on a single net meter, right? So when we come in, we can look at covering parking lots with solar panels, which not only helps create a covered space for those commercial buildings, but also helps reduce the power from traditional consumption into that building. So we can help offset the costs, help offset the being able to decrease the consumption from the traditional grid through providing solar panels either on ground mounts, flat roofs, or over parking lots, which is really kills two birds with one stone, so to speak, because we're creating a nice, cool, such as in Phoenix here, where it's 110 degrees, 115 degrees in the summer. We're able to create parking lots that are covered for customers or consumers or whoever might be working in that building, while also reducing the pull from the traditional grid.
Great. Yeah, I had some mad stat that in the US there's about 6 parking spaces per person. So the potential for solar in parking lots sounds enormous.
We've got a lot of parking here, especially in Phoenix, where we're really a sprawl. Everything's based around driving and everything else. So as we go out and install these parking lot systems, we're also looking at EV charging, being able to use solar solutions to go ahead and charge all the different vehicles. And I think nearly every other car that I see out here, driving past my window is either a Tesla or has some form of needing to be plugged in and charged. So it's really growing. There's lots of space. Only about 4% actually is covered from the commercial side and small and residential side in either solar or battery backup solutions. So big market for us, big market out there, and it's a very exciting time to be in this space.
Great. Yeah, and the potential to electrify the grid is a super interesting area, and one that we'll touch on shortly. But I'll move on to, I guess, my next question for Bill Crossland from Thermal Energy. So as I understand, Thermal Energy works with many Fortune 500 companies. So would you be able to explain how their needs around emissions reductions have changed over the last couple of years?
Yeah, certainly. Thank you, Holly. Yes, we do. Most of our clients are very large companies, multinational companies with plants all over the world. And we do that intentionally, really, because those are the sites that have big energy intense. Those are the companies that have big energy intensive sites. Therefore, if they're using a lot of energy, we can save them a lot of energy and do a nice big project for them and have a big impact reducing carbon emissions. But the demands have changed pretty significantly. I mean, we first saw a real change in the marketplace starting in about 2016 because the Paris Agreement was signed sort of November 2015. So we saw an increase in demand there, and it's been growing over the last few years. So our revenue has gone up about 30% compounded annually since then. But really, over the last 12 months, there's been an absolute sea change in the attitudes of virtually every consumer, every company, and every government. I can't emphasize enough the difference between now and this time last year. And the demand's coming from a lot of different areas, I think. First of all, we've probably heard about the Build Back Better approach. It seems like the COVID pandemic crisis sort of cemented everybody's attention that the next crisis could be even worse. So literally every country in the world has adopted a Build Back Better approach. And as a result of that, virtually every country in the world has sort of doubled down on their carbon emission reduction targets. So those targets they set 5 years ago, now they're doubling them. The UK, all I understand, is now 68% reduction by 2030, 78% by 2035, something like that. The EU went from a 40% target to a 55%. I understand today, President Biden is hosting the leaders of 40 major countries, and he's about to announce that they're going to double. The US is going to double their carbon emission reduction targets. Most of our customers have increased their carbon emission reduction targets. Companies like PepsiCo, which is saying they're going to reduce their carbon emissions by 75% by 2030. That's only 9 years away. It takes time to do these. So we're seeing that. And then the final area where we're seeing the demand increase is ESG investing. Shareholders are demanding that their companies, their investee companies, do more with respect to ESG metrics. And the data point I like to quote there is BlackRock, the world's largest asset manager with some $9 trillion under management. In their annual letter in January, they said they want to see their companies do more and disclose more with respect to ESG. And the very same day, there was a press release from 60 major multinational companies that indeed said they are going to do more and disclose more with respect to ESG. So we're seeing everybody sort of double down to get the carbon emission reductions and energy efficiency. What we do is the easiest way to do that. So what we're seeing now with a lot of our customers, whereas before we were competing for capital with other projects, now our customers have a budget to reduce carbon emissions. They're coming to us saying, look, we got to meet our targets. We've got X dollars to spend. How can you help us do it? So there's a real change for us over the last 12 months in particular.
Great, and that's a wonderful big picture, a really optimistic one which I completely agree with, and we're definitely seeing the same of that massive step change over the last 12 months. I was wondering, Bill, if you could maybe expand on, I guess, a particular project that you've worked on with a particular company recently, or a case study that you can really explain what you guys do in practice.
Yeah, so I'll do it general sense. Most of our projects are the same in that we are being more energy efficient. And so the source of the energy almost doesn't matter. It's not electrical energy, it's thermal energy, so it's heat energy. But that heat can be coming from anywhere. It could be coming from a renewable source. It could be coming from a fossil fuel. Whatever the source, we make it more efficient by capturing the heat, not allowing heat to escape. So usually when we go to a site, we first have to identify the heat sources, and then we have to identify the heat sinks. And then we match the two up. And so the projects are almost always limited by the heat sink. More than 2/3 of the energy we lose, more than 2/3 of the energy we use as a society is lost due to inefficiency somewhere in the system. And it's lost usually as a result of heat. So we are capturing that heat and applying it somewhere else. We do a lot of projects in the food and beverage area because food and beverage has a real need for heat. They have to cook, they have to sterilize, they have to sanitize, so they have a real need for heat. So a lot of our projects tend to be in that area. A recent project that we did was for a major brewery in Russia, where when you talk about the renewable side tying in that case, they had biogas. They were generating biogas on site, and we made that biogas generation system more efficient by capturing heat coming off the generation system. So they're all basically the same. It's capturing heat that would otherwise be lost somewhere and applying that heat somewhere in their system. So it does require a total system approach and a design approach, which is why most of what we do is a total turnkey solution for our customers.
Great, thanks, Bill. Now I'd like to pass over to Corey from MustGrow. So Corey, understand that MustGrow develop safe and effective biologicals to replace synthetic chemicals and ultimately facilitate a more sustainable food supply. Would you be able to expand on how you help your agricultural producers with their sustainable practices, and also how this impacts global emissions reductions?
Yeah, sure. Thanks, Holly. Yeah, so with MustGrow, we've got a patented technology that extracts the compounds from the mustard seed, and these compounds are what I guess nature has provided the mustard plant. They're the natural defense mechanism for the plant against pests and diseases. What we've done is harnessed those particular molecules and are bringing them back in a commercial form, so that farmers can then use, specifically high value crop farmers such as strawberries or leafy greens or whatever, fruit and veggies, so that these farmers can then utilize this technology to replace some of the synthetic chemicals that have been banned or are in, harmful to the environment and have potential to have for deregulation. If you look at chemicals such as, say, methyl bromide, and that, which have been banned with the 1987 Montreal Protocol with the United Nations, that chemical, for instance, was very harmful not only to workers, and that caused cancer in workers, but it was also harmful to the environment. It caused ozone depletion in that. Some of these chemicals are very harmful, so what our objective is to bring a natural organic technology that is not only, it's based on food grade mustard, so you consume it and that, but it's also helpful or safe for the environment, safe for the soil microbiome. It all comes down to sustainability for us. It's, there's a finite amount of arable land in the world for us to grow crops for a growing population. So now and into the future, we need to protect that land with inputs that are going to help build up the soil microbiome, and that'll be beneficial for not only people today but people in the future. And what we see with our technology is that it does it just that it builds up the soil microbiome. It has a very small half-life. It dissipates from the soil, does its work, dissipates from the soil very quickly, and then it allows the good soil microbes to then build up, and which is beneficial to the environment and for farmers.
Great, and yeah, I'm super interested in soil health, and I won't nerd out on that, but and I understand the idea of having sort of healthy soil can optimize its carbon capture potential. But I was wondering if you could, I guess, expand on the wider ESG factors of your company and your technology, and how you help agricultural producers achieve those.
Yeah, in terms of for us, it comes down to the environment and that. So again, if we can help farmers, first of all, these farmers are going to need to grow a crop. So if they're having synthetic chemicals being removed from the market, we're providing them with a natural organic option to help replace some of these banned chemicals in that. So that's the most important thing. The benefit of our product is that it's natural, it's safe, and it's beneficial to the environment. And I think that's important. As a farmer, you want to make sure that you're going to have your soil, a built-up soil, which is your number one asset, not only today but into the future, to help feed the world into the future. And that's what our product does. And for these agriculture producers to have a natural organic product that has similar efficacy to the synthetic chemicals that is being banned is really quite unheard of, and we're quite excited about getting our product into the market.
Great, thanks, Corey. So the next set of questions I'll open to anyone, so anyone feel free to answer or go off mute. So my first question is, I know we spoke in part with Will about customers coming to you, but I guess for those more laggard companies, or for anyone at the event today that thinks perhaps maybe this doesn't really apply to them, what would you say would be the best approach, or maybe most convincing argument for businesses to use your technology or to reduce emissions in general?
I'll jump in. I mean, when it comes to energy efficiency, at least, and the products we provide, it's economic. Not only does it reduce emissions, but it saves money. So, it doesn't cost money, it saves money. It reduces your emissions, saves money, makes you more profitable. So, while most of our company customers all have pretty aggressive targets to reduce their carbon emissions, at the end of the day, it's an economic decision. We deliver projects with a 2 to 4 year payback, and that's before any sort of carbon pricing models that happen to be out there. So, we only see those paybacks probably improving over the coming years. So to us, it's all about the economics, and that's how we sell it.
Yeah, and I'll jump
2
in.
to 4 year payback. Of course.
Yeah, so I think, when there's the first movers coming through in this, you had people that jumped in and went solar, looked to renewables because they felt like they were doing the right thing for the environment, right? And again, now that it makes economic sense, and you're just getting another wave of people that are like, okay, now, this economically makes sense for me, and I believe that it's the right thing to do, for the future going forward, making sure that we're pulling from renewable sources. So I think those two things go together really well now.
Yeah, no, I agree. On the ag side of things, if we're able to provide this product at synthetic chemical pricing, it makes economic sense, and it has similar efficacy to those synthetic chemicals. It makes economic sense for those farmers today, but also into the future, because it is, again, sustainable technology that helps build up the soil microbiome, and it has a very low water solubility. It's not going to get into the rivers and the streams and all that. So it's not just about the economics today, but into the future, and that's what the technology that we're bringing to the market here right now.
Great, thanks. Also, yeah, I hear smart economic sense, short payback periods, future-proofing your one's business, all great incentives. So, do you think that this? I guess we've also spoke about how there in the last 12 months, also the last 5 years, there's drivers that we really haven't seen before. Do you think this renewed interest represents a bubble, like those, I guess, the clean tech industry has seen before, or will this be sustained?
So I'll just jump in there. I mean, I think that you're going to see the sustainability here, right? I mean, if you look at a lot of industries that are first coming and first mover, you have that, it comes up, it kind of, hits its bubble, hits its peak, and then you have your second wave where really the consolidation happens. The true leaders come out of that second wave, really being able to continue on and really, plant a footprint within that space. And additionally, I think, because of the different things that have happened throughout the world and, different events, not only governmental, but everything else, you really have drivers that will sustain this movement going forward, into the next decade, which is very exciting.
I will say sustainability will be sustained. Yes. So, no, I agree. Listen, what we're seeing now is a result of some long-term planning. It's not just this year; it's next year. It's going out to 2050, right? When many economies want to be carbon neutral. Back in 2015, we set some objectives, and we're falling behind. We're well behind where we were supposed to be 5 years later, and as a result, you're now seeing companies and countries double down on their targets for 2030. So I think this is just going to continue to roll out, and it's going to continue to march toward that carbon neutrality in 2050. So we're only going to see more of the same. I think I was reading somewhere recently, there's some form of carbon pricing in 46 different countries around the world already. As soon as you start putting a price on carbon, that makes it even more economic. So if I look at sort of the average carbon tax in Canada or the average carbon prices in the US, that adds about 25 to 50% to the price of energy for our projects. So that improves, we'll continue to improve the paybacks even more. So I think it's going to continue for a long time.
Yeah, I agree. Same within the agriculture space here. Harmful synthetic chemicals have been banned and deregistered, and they're going to continue to be banned and deregistered as we go forward. We need to continue to grow a crop, though, so you're going to need natural products, biologics to help replace them, and the key is that they need to be effective. The three large ag chems in the world, they're putting about $10 billion towards sustainable technologies, and that is what they're slating to in the next little while. So that's just on the conventional side. Now let's look at the natural and the organic crops. We haven't even talked about those yet. That section of the industry continues to expand, and they have limited products that they can use. So again, natural biologics are going to be very important, and they're one of the largest growth segments that we have here in the pesticide area.
Great, and I think that's really where business has a key advantage, in that they're able to plan for the long term and have those long planning cycles in comparison to governments, for example. And I guess Bill, you mentioned carbon pricing. I was wondering if anyone could expand on how financing tools or opportunities have changed over the last couple of years or into the next couple of years.
Yeah, I mean, we see the challenge that we find. We're a small multinational company with $25 million in revenue, and we sell in 10 different countries. And every province in Canada, every state in the US, and every country in Europe has different policies and different programs. So we've seen those growing for sure, but they're all different. There's cap and trade, there's carbon pricing, there's rebates, there's incentive programs. So we're seeing that increase, and I expect we'll continue to see it increase, because as countries increase their target reduction in carbon emissions, they're going to have to figure out a way to get there, because we're not doing it yet. So it's a tough question, because every area is different that we find.
Yeah, I can jump in here. On the ag side, in terms of carbon pricing and all that, I think farmers are have some big emissions in that they need to maybe look at. But one of the things that the ag industry has is one of the largest carbon sinks in the world, that being the land and the soil. So if zero till and other types of farming methods, using natural products to protect your crops, that could be, I think, a very important way as we go forward to help keep the carbon in the ground and out of the atmosphere. So
yeah, and I think something we could see in the future is businesses actually having to post their efficiencies, right? And that's one thing where hopefully we can come in and help reduce what they are putting out there, through solar, through different energy efficiencies, so that they are more efficient and not putting as much emissions and carbon out there as they may be doing. So there could be incentives. The better, more efficient your buildings are, the more efficient your business is, the more incentives there are to get there.
Great, and I think we've got 2 minutes left, so time for one last question. And my question's around policy or market drivers. So which policy or market drivers do you foresee coming up in the next 5-10 years that would be transformative for your respective industries?
I'm looking forward to the next couple of days, actually, when we see what comes out of the 40 leaders that are meeting with Biden, because that's the direction where we see people, especially US and China, the two largest industrial markets in the world, when they decide what their targets are, then everything is going to drive from that. If that's the target, if you have long-term targets to become carbon neutral by 2050 or reduce by 50% by 2030, then there's going to be all kinds of policy issues over the next couple of years that drive towards that goal. And it's going to be very interesting to see what it is. But I'm looking forward to the next couple of days.
Yeah, absolutely. We'll continue to see policies come down that have stuff here, and especially in the U.S., we're going to see potentially 10-year extensions in ITCs, different policies and credits coming in for specifically adding battery. And so I'm on the same page. Next couple of days, there'll be could be a lot of great things happening that'll set up the market, through 2050.
Yeah, on the ag side, it's happening every day. You're seeing products being removed from the market, deregistered. We just seen one recently in Europe. It was the major chemical for potato sprouting, and so that was deregistered. Now those farmers have no options to protect their potatoes in storage in that. So it's consumer driven. Consumers are caring about the food that they eat. Not only do they want it to be healthy and safe, but they want it to be good for the environment. And policymakers are following what these consumers are demanding. So.
Great, and I think that's time. So Bill, Will, Corey, thank you so much. Thanks to Benzinga for hosting us today, and I hope you all have wonderful days and fingers crossed for the next couple of days in the US.
Thanks so much, everybody. Have a great day.
Yep. Thank you, Holly. Thanks, Benzinga.
Thanks a lot, everyone. Guys, go ahead if you haven't already. If you've gone this long without smashing the like, go ahead and just smash the like button. Oh, this is great stuff. Great conversations. So thank you so much to Holly, Bill, Corey, and Will for hopping on with us today. We really appreciate that. By the way, if you're on the Twitter, you can tweet, using the hashtag Cleantech. We're tweeting all this stuff, the agenda out as it's happening. If you want to see what's up next, just go to bzsmallcap.com. You can see what's next there and check it out. But it is time for our next presentation. So I'm going to bring Chris. There he is. Look at that. Chris Pryball, Senior Market Strategist at Schaeffer's Investment and Research. Chris, how we doing?
Very good. Thanks for having me.
Thanks for coming on today. I'm going to cede the floor and let you do your thing, man.
All right. Let me share the screen here and we'll get going.
Let's do it. Let me. As soon as I see the screen share, I'll bring it up there. There we go. There we go. Look at that.
You ready for me?
Let's do it.
Everyone, welcome to Earth Day, a day that we should probably celebrate every single day, not just once a year, but that's my opinion. I'm here. My name is Chris Pryball. I'm representing Schaeffer's Investment Research, presenting today on understanding and profiting from clean technology. I am a senior market strategist at Schaeffer's as well as a quantitative analyst. I started on the quant side, running numbers, figures, market commentary. Schaeffer's is the worldwide leader in option trading alerts. We've been around for over 40 years. Widely cited in financial media. As an introduction to Schaeffer's, our trademark is expectational analysis. What that is, if unfamiliar, is the combination of fundamental, technical, and sentiment analysis. Fundamental, everyone knows that. I grew up with the value line in my hand as a child, so I started on the fundamental side. Technical analysis, seems like everyone talks about technicals, moving averages, the like. And then sentiment is something that Bernie Schaeffer pioneered here early on, and that's looking at media sentiment, option trading volume, option trading open interest, short interest levels, et cetera, et cetera. Anything that you can find in the financial media that might influence the stock price that's not fundamental or technical, it's sentiment based. What we try to do at Schaeffer's with our real-time alerts is find holes in the Black-Scholes option pricing model. After the 1987 crash, Fisher Black, while he was at Goldman Sachs, published a paper titled 10 Unrealistic Assumptions in the Option Pricing Model. Mr. Black knows the option pricing model as a co-author. A few of those unrealistic assumptions that we look for at Schaeffer's is that volatility is known. Anyone that's been around the past 6 months, past year, knows that volatility is not fixed. It is not known. It changes every day. So we try to isolate instances where volatility is low compared to the expectations and upcoming events. Another unrealistic assumption is that price changes in an orderly manner. We know from price action, price does not change in an orderly manner. And there is an instance in the option pricing model where the inability of a takeover or other is not priced into the model. Now, I know market makers have changed this because I've seen on GameStop specifically the implied volatility of the options go above 500, 1,000, 2,000%, which is very, very rare. And they must have been adding something in there to account for the abnormal price action we saw a few months back. Going on to the next slide. Why are you listening to me? Why did Schaeffer put me up here? Over the past 6 months in this table, I list recent winners that I've had for our Schaeffer's Alert Service programs. I trade the stocks under 5 service and the event service. I got a double whammy on GameStop where I hit a 700% profit as well as a 600% profit back to back. Those trades were open at the same time, in stock shoe and the other one in event. I've also had an iRobot event trade closed out in February at 488%. A Discovery, got a hold of that, closed that out at March expiration for a 420% gain. U.S. Steel, another 400% gain, closed in December. In January, I closed out SunPower for 235%, and Nordstrom, I got that in there last December for 224%. So I've had a hot bat lately. I'm seeing the market pretty well, and I'm looking forward to going in to the Cleantech, the overview about clean technology, what to expect, and some companies of interest. Now, I have that benefits to corporation society crossed out on purpose. I will get back to that. So what is clean technology? This is the most robust definition I could find on the internet. It is courtesy of Kashan and Company out of Vancouver, Canada. To summarize, clean technology or clean tech is synonymous to most people with green tech. It's new technology and or related business models intended to provide solutions to global climate or resource challenges or desire for energy independence while offering competitive returns for customers and investors. Clean tech represents a diverse range of products, services, and processes, all intended to provide superior performance at lower costs while reducing or eliminating negative ecological impact at the same time as making more efficient and responsible use of natural resources. It's a very thorough definition. I like it a lot. Now, why did I cross out benefits to corporation society? Because I look at this definition, and I come from a military family. This definition benefits all people. It benefits the earth, benefits every country, every person. If we could provide superior performance at lower costs while reducing or eliminating negative ecological impact at the same time as making more efficient use and responsible use of natural resources. Everyone should be doing this. Everyone will benefit from this. So what are we going to expect? There's a lot of talk right now with the US and Chinese climate accord and what they're going to do, and I'm sure the rest of the world is going to follow suit. So I'm sure you're going to hear carbon tariff rhetoric or some way to reduce the carbon output of not only corporations, but civilizations, countries. Everyone needs to do better. Because this is the Benzinga Cleantech Small Cap Conference, you will see increased volatility. You're seeing it today, you've seen it all week, on these small cap stocks in the green tech space. There is a short interest contingent that manipulates and moves these stocks around each day, and they're trying to hit limit orders to shake people out of their long positions. So you're going to see volatility. Be prepared for it. Do not be surprised. If something pulls back 10% in one day, don't freak out and sell it. You actually need to think about buying that or leveraging more up on that option contract. You will also see new discoveries and opportunities prior to crowd media awareness. We're going to see things in the green tech space that we never thought possible, and it's rapidly going to change our world, at least I hope. Hopefully some of the names I present today are names that you can play along. I will warn you that due to Schaeffer's and our option trading, we don't trade small caps or penny stocks that often because of the illiquidity and the lack of volume. We move around a lot of option contracts each day with our alert services. So we need liquidity, and the only way you can really get a lot of liquidity is larger or mid-cap names. Usually 5 billion, 3 billion is pretty much as low as we can go on trading services. One example I'd like to start off with is a company named Generac. Now, hopefully you have heard of Generac from their TV commercials. It's from Waukesha, Wisconsin, 20.5 billion market cap company. Incredible gains out of Generac. What they do is design, manufacture, and sell power generation equipment, energy storage systems. You know about Generac from their residential market. If you have a severe storm that comes through, or hurricane season, or a tornado, knocks out the power in your area, if you've got a Generac backup generator, you can restore power and go about your normal way of life. It's a huge savers. One drawback is that those Generac services use gasoline or some other type of fuel to provide the backup. So, I mean, these gains really, it really happened in 2020, but I used to make a snarky little joke about this time, April, right before hurricane season. It's usually time to buy Generac right before hurricane season. And then when you get to the end of hurricane season, lighten up on it. It would have been a huge gain in 2020. I did not make any money off of it. When you look at the chart, you're ashamed that you didn't participate, but you cannot trade every individual security that comes across. Now, why did I highlight Generac first? You're probably thinking that's not really green energy. The next company that I like a lot, that I think could be the corporate or the industrial Generac, providing backup power in case of a storm, in case something went down to the infrastructure of the national power grid. Bloom Energy, ticker BE, small little company out of San Jose, California, only a $4 billion market cap, so it is a small cap. They design, manufacture, and sell solid oxide fuel systems for on-site power generation in many countries. Their Bloom Energy server is a generation platform that converts standard low-pressure natural gas, biogas, or hydrogen into electricity through an electrical chemical process without combustion. You heard that right. It said without combustion. So this is definitely a green company. I researched a few news articles on Bloom to see how they coped with the Texas cold streak. And I came across these quotes from Sherilyn Moore, who is the executive vice president of Bloom Energy. And she stated in March that they've been on the phone with county commissioners in Texas and large customers, and they have many pricing proposals out with customers to mitigate environmental impacts from climate change. Bloom is well positioned to take advantage of this. I cannot claim that they're going to be as big as Generac, but maybe Generac buys Bloom in an effort to diversify the revenue streams. Bloom also uses microgrids on a neighborhood level to mitigate costs for communities, which leads me into the next slide. A company from Dublin, Ireland, called Eaton Corporation, another power management company, another company that uses renewable energy. And a quote I found from Eaton recently, they're expecting the renewable energy grid market to soar in the next decade. Eaton told investors last week that it estimates microgrids will be a $40 billion market by 2030, up from $9 billion this year. So rapid growth in this sector that Eaton and Bloom participate in. Another reason I like Eaton is their e-mobility sector. They provide voltage inverters and converters. So if you go to charge up your electrical vehicle, usually the thing you plug into was made by Eaton. And I see rapid expansion. Biden has made it clear he wants to expand electric vehicle penetration in this country. So I like the way Eaton is positioned on multiple levels. Two benefits that I see from Eaton and Bloom. Right now, Bloom, if you look at the analyst posture, going back to the sentiment case, over half of the analysts that rate Bloom rated to hold or sell, which doesn't make sense to me. You could see a lot of upgrades in the future, the way I look at it, especially with the research that I've done. I mentioned the short contingent on Bloom. We currently at Schaeffer's have event calls open on Bloom Energy. They have earnings upcoming on May 5th after the market closed, and then they have their annual shareholders meeting on May 12th. Eaton as well has earnings on May 4th before the market open. We've also seen evidence of hedge put buying on Eaton. What that is you'll see an increase in put buying. And most people that come new to option trading, they're like, well, if someone's buying puts, they expect it to go down. That's true in theory. But what we've noticed from countless years of research is that hedge fund managers, or those that do not want to take a lot of risk, they'll buy stock of a company like Eaton. And as a hedge to that stock position, they will buy puts to make the position risk neutral, at least to the point that if something climatic were to happen to Eaton, they're not getting blown up with their position management. You can see the SWAR, which is the Schaeffer's open interest configuration. When that advances alongside price action, it's usually evidence of hedge buying. Moving on to the next slide, which again is not a small cap, but it is one that's near and dear to my heart. Waste Management out of Houston, Texas, $57 billion market cap company. I like the waste industry for many reasons. I was kind of born into it. My mother was a sales manager for Rumpke Waste, which is the largest waste hauler in the Cincinnati area. For 30 years, she was on sales. So I grew up with recycling and reclamation and understanding what the landfill does for the community and what it can provide. One of the things that Waste Management and Rumpke has done is they'll tap into the methane or the natural gas within the landfill, and they will generate at their facilities. They'll capture that energy and then transfer it either to residences, businesses, or even to their own trucks going around to pick up your trash. It's pretty innovative. I think it's going to continue into the future. As well, Waste Management is a leader in materials reclamation and recycling. One of the untapped aspects of Waste Management that I see is that they own numerous landfills across the country. If commodity prices go up, meaning copper and metal prices, I could see Waste Management tapping into and digging up those landfills and reclaiming the material within them, all at a profit because they own the landfill. They're just reclaiming it. So that is kind of like a hidden gem in Waste Management that most people don't look for when analyzing that company. As we get into some other notables that I like, one more note on Waste Management. It's another company where half of the analysts rate hold or sell. So there's not a lot of love towards it. They've got earnings coming up on April 27th, and they got a shareholders meeting on May 11th. So you've got multiple events upcoming on Waste Management that could propel it forward. A few other notables we got. Being in Cincinnati here, we've got a huge General Electric aircraft manufacturing facility in Evendale, Ohio, very close to where I live. GE is also the wind turbine technology leader in the globe. So as wind technology takes off, GE is very well positioned. They also have 3D printing technology that is not spoken about by many people at all. They use the 3D printing to produce aircraft engine parts, believe it or not. GE has a reverse split upcoming, which is scaring some people because they don't understand how that works. And if you're an option trader, it's tough to get into a trade where the option contract is going to change in the future after the split date. It creates confusion. With that being said, we do have calls outstanding here at Schaeffer's on General Electric. They've got earnings coming up on April 27th before the market open, and they also have an annual shareholders meeting on May 4th. Another company that we like is Baker Hughes. GE owns a part of Baker Hughes. They had earnings recently. Baker Hughes has been diversifying away from the oil and gas. Recently, they signed into a global licensing agreement with SRI International. And what they're going to do is use a mixed salt process to capture CO2 out of the air, which as we move more towards climate change and recovery, you're going to see carbon capture interests increase dramatically. I think Baker's well positioned for this. Last November on election day, Baker acquired Compact Carbon Capture. Interesting timing on that purchase. Another company that we really like here is NextEra Energy, ticker symbol NEE. It's a huge renewable giant. According to their last earnings report, they added 1,750 megawatts of renewables and storage to its order backlog, bringing the total for 2021 through 2024, that order book to 15,250 megawatts on the books, ready to go. So NextEra is well positioned. And once again, I apologize I don't have more small cap names for you, But due to our business model here, we focus on mid, large caps, people with options, liquidity. So thank you for your time today.
Thanks a lot.
We'd love to chat with you here at Schaeffer's about your real-time trading alerts, option commentary on our website there at schaeffersresearch.com. There you see our Twitter handles, and any questions, I'd be more than happy to answer for you guys.
Yeah, we're out of time for questions right now, but everyone, you can go to the website. You can also engage with Chris on our networking platform for those of you who signed up on bzsmallcap.com. I had a few questions. The chat had a few questions. We don't have time to get to them, so reach out to Chris on the networking platform or on Twitter or the website as he just put up there. Chris, giving us some picks. We like picks. Waste Management, GE, Bloom, Baker Hughes, Eaton, and Xterra. Chris, thanks a lot.
You're welcome. Please send those questions. I'll get back to you as soon as possible. Thank you.
All right. Let's move it right along here. Our next guest is in the green room, Dennis Calvert. He's the president and CEO of BioLargo, ticker BLGO. Dennis, welcome.
Hey, Spencer, it's great to be here. Thank you.
Is that a virtual background, or I can't even tell, honestly?
That's actually my backyard, Southern California. How's that?
Oh, see, that is not fair. We call that not being fair. It snowed yesterday in Michigan and the day before, and here you are looking like you're living the dream. So I'm doing something wrong. You're doing something right, I guess. So, all right, Dennis, if you have a presentation, go ahead and share that, and we'll get started here on your presentation. There it is, and I see it. We'll bring it up in a second. Let's do it.
Okay, awesome. Let's do it. Let me get you on a full screen here. There we go. We're going to cover a lot of territory. Yeah, go ahead.
No, you're good. You're good.
We're going to cover a lot of territory pretty quick, and thank you for having me. It's a pleasure to be here. It's our first time with the group, and it's an exciting time at this company. So we're going to cover a lot of territory. Innovative solutions for the toughest environmental problems. Our slogan is "We make life better." We've got over a decade invested in building out solutions to some of the toughest challenges that face our world. Symbol BLGO. Company to watch. Within our portfolio, there's really two main groups. There's an environmental group and actually a medical group. The medical group was an incubated company, took a license on some of our technology, and is now building products for the medical community. The environmental group, really our sustainability group, is focused on really the fundamentals: clean air, clean water, and a cleaner earth. Water, air, and earth, right? We've been at it for a decade. We've done a lot of hard work. And of course, when it comes to sustainability, good for earth, good for commerce, good for the planet, good for people, we just embody those sustainability goals, and we're proud of that. And everything we focus on, we basically decide that we have a chance to be number one from an innovative perspective, and we're going to make sure that it's a sustainable strategy. As I said, it started over a decade ago, and really one observation, this study for our founder, Kenneth Ray Code, a genius, brilliant mind, great observer, had studied this for literally over 20 years, and witnessed how the natural element of iodine is used in the natural cycle to essentially cleanse the earth, regulate life, create microbial balance, fortify food, fortify people. It's just a critical element. It's ubiquitous in the universe, of course, and when used properly, right, put to good purposeful use, it can be an incredibly potent tool to make life better, right? So as we witness all these cycles, it led to a development cycle that's now an ever-expanding portfolio. Multiple technologies, not just iodine-based, and expanding portfolio as the talent has expanded, all with this centerpiece surrounding this core platform. It's a company built through collaboration. This is over 10 years of work at the highest level. Really, if you think about it, our scientific claims are 99.999, right? Scientific and engineering excellence focused on solutions to some of the biggest problems, and in collaboration with some of the leaders of science and engineering around the world. And so a number of notable, of course, Metropolitan Water District has been a big supporter. INSERT, National Science and Engineering Research Council of Canada. We have an R&D facility on campus of the University of Alberta. New relationship with Garrett Callahan, just a wonderful company serving a national footprint in the water industry with thousands and thousands of customers now working with us to bring solutions to that market. We've done 20 international collaborations, again, at the highest level. One of our technologies has actually received 80 grants. It's a pretty remarkable feat. And the thing I always remind everyone, if you haven't looked at BioLargo in a year, you probably only know half the story, because the innovation cycle is so dynamic. You know, we're constantly advancing science and engineering for a good cause, focused on air, water, and a cleaner earth. Big markets, right? So we have an environmental services group that can provide services. They also are a critical part of integrating technologies for the marketplace with us. Our PFAS solution is a big hot one. We're going to talk about that in just a second. PFAS, PFAS, that's per and polyfluoroalkali. If you don't know about PFAS, go look at the movie Dark Waters. Dark Waters. It's a story about Robert Blott, the attorney who took on big industry in the name of like DuPont and some of the big names like 3M, who developed these chemical attributes, these chemistries, per and polyfluoroalkali, PFAS, colloquially called, right? These technologies were really focused on nonstick coatings. And as it turns out, of course, they're delivered in parts per trillion. They've been delivered for almost 30 years, and now they're basically ubiquitous in the environment. I mean, it's incredible. And watch the movie. You're not going to believe it. Anyway, this is a hot topic. Even in the Biden administration, within 3 days of taking office, they identified this as one of the key environmental concerns that they want to focus on solutions for. We actually received a grant from the EPA about 2 years ago to start our work, and then we've advanced that science, and we're just now at the commercial stage. We had an announcement this morning about technical achievement for breakthrough on the extended life of our device for the marketplace. This is a multi-billion-dollar per year problem for the next 20 and 30 years. In Orange County alone, 40 wells, Orange County, California, that's where we're headquartered, 40 water wells have been tested and proven to be contaminated at a level that creates an adverse health effect. These are called persistent, cumulative, forever chemicals. Basically, nature won't break them down. That's the issue. So what does that mean? It means you got to get out of the water. It's in the ground, it's in the water, it's in your food, it's in polar ice caps. Okay, do a little bit of homework. You're just not going to believe it, and it's all over the press. We've been on this project for about 2 years, and now we're now seeing the fruit of our R&D cycle coming into a commercial mode. It's a big business too. I want to say that the projects around PFAS generally would start something like the $250,000 range and range all the way up into the $30 million per project. This is big business. It's construction, it's design, it's equipment, and it's service to remove PFAS from contaminated streams. BioLargo is going to be a front runner. We believe our innovation will be the low cost and sustainable solution for the market. Why? Well, because the innovation, what we've proven through our innovation cycle and shown data sufficient, right, to have confidence to know that we can extract 99+% in a single pass across the device. It's an electrolytic cell. In there is a membrane. As the PFAS-laden water flows through the cell, it attracts it to the surface and binds it like flypaper. It's that simple, right? Of course, it's a high flow. It's a massive volume of water. That's the trick to prove scalability. At the end of the day, when you compare our solution versus the incumbents, which is mostly carbon, we have an extraordinarily small environmental footprint, an efficient extraction that isolates the PFAS. That means that our waste product is a very, very small footprint versus a very, very large footprint, like a carbon footprint with a truck. And it is a solution where the market is dying for an economical, efficient system to take that PFAS out of these contaminated waters and earth, both. Our engineering group is a trusted group. You know, this group started 3 years ago. We picked up a team of people that had worked with one of the largest engineering firms in the world as a technical leader, sort of a skunk works group, working on some of the most difficult challenges across the globe. So our engineering group, as a team, individually, right, the leaders have over 30 years experience around the world in some of the highest profile cases in environmental remediation. It means in our small company, we have a highly potent team of highly qualified people, science and engineering, meaning we can tackle some of the most difficult challenges intellectually. And of course, we've got science to back some of that up with our innovations. And so we have become a tech and solution provider. And of course, we're expanding with relationships around the world. We'll talk about that. Big customers. For instance, we do work for the United States Air Force. We manage air quality controls. Some of the largest food producers are our clients. Some of the largest chemical companies are our clients. What it really shows is that we've got the sort of the gravitas, right? The knowledge base to serve some of some of the highest profile customers while we're innovating to bring solutions that create leverage for our business model. And of course, some of these clients want our technologies as well. It's really awesome. Bottom line is we have expertise, right? Air, water, clean earth. And we have a diverse portfolio. You know, it's not all iodine based, but it covers a number. It covers mineral extraction. It covers contaminated water, clean water, PFAS extraction, right? Air quality, air scrubbing, contaminant removal from air. Really an extraordinary level of talent, and then some key innovative technologies that we all believe have the chance to be number one in the marketplace. Big markets, water's a huge market. We present ourselves as a solution provider, consultant, and equipment provider, right? So it's got all these tools to really get us in the game. And we think that these markets, especially some of these big ones like the water industry, we're perfectly situated to support very large companies that already have an existing footprint in the market, like our relationship that we've talked about with Garrett Callahan, which is a new relationship and expanding. The AOS technology, it's an advanced oxidation system. Simply put, extraordinary efficiency in destruction of pollutants in water. In fact, the most efficient, the highest efficiency. And so in particular, it's really great at things like micropollutants, like pharmaceutical byproducts in the water stream. And it is a technical leap forward in low energy, high output destruction of contaminants in water. There's our first unit that's actually was shipped up to a pilot up in Montreal at a wastewater treatment facility. We also have our first client. It's about $1 million project. It's in the final design stages as we speak. It is a commercially functional unit, and we're anxious to commercialize it over the coming months. And we think it's got a centerpiece and a strategy to deliver clean water. A lot of work in the agricultural field focused on agricultural production, which we think is a gritty market, dying for good solutions where we can really make some hay. And we see that market expanding through relationships with some of these very well-established distribution channels in the market. Our own environmental is focused on air quality, right? And in that, odor and VOC. VOC is volatile organic compounds. Again, huge market, a gritty market, a lot of hard work. We've been at this about 6 years. We've landed major contracts with all the waste companies, eliminating odor, no masking, fully, it's an oxidizer. It's a non-pesticide. It saves money. We embody the full service, which design, service, and maintenance, as well as chemistry. And we've been winning contracts in that business for years. And it is the most mature segment. Coming in at the fourth quarter, we generated about just under $1 million for the quarter. So we're on a good run rate. It is once in a while, it's a little seasonal. So the winter's always a little bit, we see a little dip, and then a spring back usually is a multiple where we've been. Many industries touched by this product. First market was waste. We're heading into wastewater treatment, food production, incredible, even household products, okay? Even household products. As we say, the hardest work is done. The hardest work. It's over a decade. We've invested significantly in talent and technologies. These are our commercial projects, and we're heading into some significant validations of these innovative technologies that we believe will create significant adoption cycles for commercial validation. So what are we going to see coming? Well, we're always inventing, so we'll have additional sustainable solutions. We also have technologies that are being brought to us because people recognize that we're a company that can take it from concept to execution, to patent, to validation, all the way into commercialization. It's a very unusual, rare talent to be able to do all that. We have all that skill set within the company. And so now we're actually experiencing a time when companies bring opportunities to us because they want to see our skills brought to their innovation. And of course, we get to participate. It's really awesome. And we have a great number of examples, too many to cover today, but dig a little deeper, you'll see some hints of these that are really significant, including mineral extraction, you know, some exotic minerals that are really hot topics in the market where we have an opportunity. Again, major collaboration, significant grants, multiple paths to monetization. We're at a spot where debt is decreasing, revenue is increasing. This was generated as of the last financial statement. We broke quarters, of course, quarter over quarter, year over year. We're also down to a de minimis debt position. We got about $400,000 that will convert it's fixed convertibles, about 14 cents. So it's in the money, which is great. And that's, you know, having now retired over about a year and a half to 2 years, almost $5.4 million in debt to build out this infrastructure. this is a great time because we really are concentrated on equity investments, and we're in a great position. We've got financing in place to continue our growth track, and we've got some breakthrough revenue opportunities that we think will continue to add to the valuation of the business and the excitement that we're experiencing in the market. Great trending. Okay, so as we said, we want to head to positive cash flow. We want to launch new technologies that have significant revenue, average ticket. And historically, our average tickets are, $25, $50, $100,000 projects. I think the largest is probably around $250,000 on a project. Well, guess what? They're all going up. They're going into $250, $500 million projects because we're working our way up the food chain with great innovation and great talent. And we think that's going to continue to expand. The Eric Callahan partnership, we spoke of that. That's a 100-year-old private company, national footprint. We're working a strategic development on one product, and we're looking at and expanding. We've got a couple of new client relationships because of the relationship with Garrett Callahan. In that relationship, we are a service provider to them so they can serve their client. It's perfect. We can tap into their 100-year history and their most excellent customer-centric focus. PFAS is probably the most significant real-time opportunity in our portfolio, primarily because of the timing. We got ahead of the curve, right? 2 years of development. Now we get to go to market, and it's as we said, even the White House is saying this is a critical thing. And so we'll be in commercial trials really over the next 60 and 90 days. We're building units as we speak. We got showcase commercial pilots to showcase that innovation. It is a commercially viable, scalable solution, really proven. And as we reported this morning, the technical breakthrough for this long-lasting life, which is a critical economic decision, has just been published this morning. So it's significant. A lot of international work and recognition coming as well. So we also have a joint venture in South Korea. I want to mention a group called BKT and Tomorrow Water. BKT is one of the leading wastewater treatment companies in South Korea. We did form a joint venture. They're actually building out that joint venture to take some of our odor and VOC products to market. They're a technical company, significant. They hold contracts with the federal government of Korea, and they're focused on serving the Southeast Asia market with our technologies. So we're in 4 locations here. Great innovators, great story. As I say, watch it because about every 6 months, the developments are so significant. So I hope that's helpful, and let's open it up for questions.
All right, we do have a couple questions here from the chat. One was actually from Darren, but what I was also thinking about it, which is who are your competitors? I'm not familiar with any. Maybe it's a two-parter. Who are your competitors, and like how big is the market, the addressable market for you right now?
Markets are huge. Well, who's the competitor? That's a great question. The way to think about it is in each sector that we compete, water treatment, there's a bunch of big companies, right? And these big companies usually have an integrated service. They have technology, they have service and maintenance capabilities. And so those are competitors in the water space, right? But what's unusual is we present ourselves as an engineering group with the ability to serve as consultants to help them make the wise choices, but we have a toolkit of innovation. So really, in many cases, we can be technology agnostic, but we've got technology that is a leading contender, right? So it gives us this dual ability to really break into the marketplace. Odor and VOC, in that category, mostly it's fragrances. There's a bunch of fragrance companies. They've been selling perfumes for 20 years. Perfumes are perfumes. They are what they are. They don't oxidize. They don't eliminate. There's not 100%. They're not efficient. In fact, they're contaminants themselves. So the idea that we present ourselves with an eco-friendly solution for full oxidation. Same thing in earth, right? There's a lot of mineral companies. What we present is this suite of talent, science and engineering. They can come in and extract with this entrepreneur's version to really partner with opportunities to take advantage of them. So what's unusual, if you looked at companies that are scientific and engineering innovators, I mean, who comes to mind? Guys like, 3M. I mean, this is a company that has extraordinary talent and is building out a portfolio and monetizing literally with 20 shots on goal. That's the thing that's so unusual. And we've done enough work to really validate the commercial opportunities as being viable and technically capable. And so now we're at the spot where we can really start to monetize as we've achieved critical mass, that critical mass of talent and proof of claim.
Do you have plans to uplist to an exchange? Yeah,
sure.
If so,
right. We've got a market cap of around 40 million. And yes, we'd love to uplist. As we always say, we'd love to uplist when the wind is in our sails, right?
Right.
We don't want to take the leap and be dangling in the wind. We want to make sure the wind is fully loaded for BioLargo. And so to me, that's a number of things. Investor awareness is one critical part. We've done a good job. It's expanding. People are getting the story. The second is that some of these commercial opportunities of significance, like PFAS, you got to get in the market. I mean, talking about it's one thing. Actually having clients and executing and forming these partnerships is next. And as that occurs, the revenue opportunities are so significant. I mean, again, as we said, our average ticket in the $25,000 and $50,000, $100,000 range is fine. Okay, wait till they're in the $1 million and $2 million range.
Right.
Because it takes the same amount of energy to land, and we have the innovations to do that. So we'll partner, we'll work through distribution, we'll rise up through the ranks by essentially working through the food chain and see these technologies come to commercial bear. So.
And then I've got one more, even though I'm going to ask it, even though Nicole is going to yell at me, but I don't care. This is a good one here. Anything going on with the ship ballast water purification that you're talking about?
No, it's not. What happened is it's so interesting because as an innovator, we've always looked for market opportunities, right? Always. We're always scouring the world for a spot where we can plug our technology in. And that was one we'd hoped to be a viable market for us. You know what happened? They extended the compliance by 15 years. Actually, full compliance for the industry got pushed out 20 years. We watched massive companies melt down. And so we were very fortunate to avoid that meltdown and not overinvest in delivering a solution to a market that wasn't ready to buy it. And so until compliance really is as well set, the IMO, International Maritime Organization, and the U.S. Coast Guard deferred compliance for so long. So a lot of rhetoric was pushed out into the market for a lot of years, pulled back, and guess what? A lot of people really suffered. So we're very thankful that we avoided that catastrophe.
Dennis Calvert is the president and CEO of BioLargo. You see it up on the screen, ticker BLGL. Come from the clean water, stay for the movie Rex. Dennis, appreciate it. Thanks a lot.
Hey, awesome. Thanks. Go BioLargo.
All right. Let me bring on our next speaker here, if I can. We've got our first fireside chat discussion of the day on my track. Hey! Oh, that's Dennis. Let's bring on Phil. Phil Hall. There he is. Staff writer of Benzinga. What up, man?
Hey there. How you doing?
Good. I'm going to let you introduce who you're talking to and the point of your fireside chat.
Well, the point of our fireside chat this morning is carbon offsets and the carbon markets. And Lex Keefhaber, who's on the screen with us, is our expert. And Lex, for the benefit of our viewers who are not familiar with you, who are you?
Phil, it's good to be here. Thank you very much for having me on. So my name is Lex. I host a podcast as well called Who's Saving the Planet? And every week we interview somebody that is working on technology, climate change, consumer applications, all of those wrapped into one. So I'm dangerous enough about carbon markets to give a good idea about what's going on under the radar, but no one has accused me of being an expert specifically in them so far until you just did.
Well, it has to be a first person to do that, I guess. Here we are today on Earth Day 2021. And what is the state of the carbon markets today?
So I'm going to borrow an analogy from Bill Bezos, the CEO and founder of Air Carbon Exchange. And the way he describes it is such. Imagine that you're driving around a truck of soybeans. We're going to use soybeans as an example in Chicago, and you're looking for a buyer. And so you have to go to every single different trading desk and say, here's my truck of soybeans. And they're going to say, well, who was the farmer? What was the state of the farm? How do I know that these soybeans have actually been harvested and prepared in a way that is up to my standards? And that's what we're looking at right now for the carbon that is being traded and exchanged, where each individual project needs to be certified independently. So what does that mean? It's an extremely inefficient market that has no centralized price for the carbon itself. It's dependent on the projects. If we're going to go back to the soybean market for a second, if you look at the actual amount of trading activity in soybean market between the people that grow the soybeans and the people that actually use them to make food, it's maybe 5% of the overall trading in that market. The other 95% are going to be the hedge funds, the banks, the speculators, the other financial interests that are taking some position on whether soybeans are going to be more or less valuable in the future. That is the opposite in the carbon markets right now, where 5% of the market is those types of financial interests, the speculators, the traders, what have you, and 95% are the actual exchanges between the people who are creating the offset or the carbon market opportunities and the companies that are looking to retire that carbon. We're going to talk about SPACs and what that means later on, but not to put, the horse before the carbon buggy. But what it means is that it's really hard to invest in the underlying asset. It's hard to invest in the idea of the carbon itself.
So as you could see on the screen below our video frames, what is carbon offset?
All right. So the carbon offset, let's think about this. Let's take a step back and say, how do I make carbon? Right? What is the way that carbon is being produced? This is broken down into what they call three scopes: scope 1, scope 2, scope 3. So let's use you as an analogy, Phil. Let's say I were to come over to your apartment and I were to burn all of the books that are behind you, and those books would release. They would release carbon dioxide into the air by burning the carbon that is held in the pages. That's scope 1. That's the stuff that the companies themselves are directly responsible for releasing. So if you have a fleet of trucks, those fleet of trucks are driving around, and if they are burning gas, then you're responsible for it. If you are creating concrete, you're responsible for that. Scope 2, let's say I were going to come over to your apartment and we were going to watch a movie together. That sounds delightful.
You're making yourself at home in my apartment.
Very much so, in ways good and bad. So scope 2 would be, well, how much energy did you buy in order to be able to conduct the process that you're thinking about doing? Have you paid a utility company or a steam company to provide you the energy that you need in order to do your business? So the scope 2 is sort of like, where does your power come from? And those both 1 and 2, pretty easy to measure, pretty easy to understand. Now, scope 3 is really the thing that's hard to grasp. And that is what's happening right now between you and I. We are having a conversation across a bandwidth of internet that is being provided from internet companies, ISPs, and what have you, through Benzinga, who is then streaming that out to people in general. Scope 3 is all of the other types of emissions that come from the activities that a business is engaging in. So do your employees drive to work? Are the products you're selling being used in a way that is creating carbon emissions? And that's really difficult to understand. So we see in the news here a lot of companies saying, I want to go carbon neutral, or I am going to be carbon neutral by X date. One of the first things to consider as an investor is like, well, what does that mean? How are you going to actually do that? Who is looking into the way that you are using carbon and adjudicating that so that you can actually hit that mark? And there's a growing cottage industry of consultants and of smaller companies that are doing that work specifically, that are going in and saying there's a tremendous amount of money that's going into ESG interests right now, that are looking for companies that are going to be able to fund the future through climate forward initiatives. But how do we know if they're any good? And how do we know if they're going to get where they're going? One example would be Boundless Impact, and the CEO there, Michelle Demers. And she thinks about this in 2 ways. How good is the company right now at assessing the way that it comports itself in the world as it pertains to environmental and economic and societal concerns, the ESGs, and how well positioned is it for the future? So these are 2 questions to ask about, like, before we even get to the offsetting, how much carbon are you using and what effect is that going to have on your business going forward? Okay. That was kind of a long walk there, but I hope that was useful to understand the baseline of what we're talking about.
Yeah, and if you're going to come over to my apartment, at least you could help me clean it up. I could use a little.
I'd be delighted to, Phil. That sounds great.
Well, speaking of cleaning things up, my family comes from a coal mining background, and coal mining industry, of course, is not exactly known for being eco-friendly. Are there some industries that are doing a better job at becoming eco-friendly, trying to make up for problems they had in the past?
Sure. But that's it's hard to be able to nail that down to say this is exactly one industry as an industry in general that is leading the way. I would say that there are better and worse players within different segments of the industries that are pushing things forward. So let me give you an example of where to look for that. There's an independent certification agency called Climate Neutral, run by Austin Whitman. And what they do is they go to smaller companies that are creating products based for consumers, and they say, we're going to help you. We're going to help you understand your carbon footprint. And they've developed software that takes that very complicated process, scope 1, scope 2, scope 3, and systemizes it so that you can say, all right, I can just spend a couple of days here entering the right kind of information and get a grasp of what I'm doing. So when you're looking for companies that are going to be over-indexing within their particular industries, Climate Neutral, Boundless Impact, and there's a lot of resources to say who is taking this seriously and who is actually making a substantive effort as opposed to a performative one to change the way that they're doing business. or improve the way that they're doing business.
You dropped mention of the word SPAC, which is, if you read Benzinga, we've been doing a lot of SPAC coverage lately. If I was running a SPAC, why would I be interested in a company that is active in the carbon markets?
Great question. So let's go back to the other question you said. What's carbon offset? So let's say you know what your carbon footprint is, and you want to offset it. How do you go about doing that? And that's a really important question because there's a lot of money that will be involved in that. Right now, 2016 carbon market's about 200 million. 2020, it's maybe about to be 300 or so. Hard to say. But McKinsey just came out with a report that suggested it's going to be $5 to $30 billion by 2030 and in excess of $50 billion by 2050. So this is growing. So you're saying, like, how do I get involved in this? How do I find the opportunities there? Because, like we said before, the markets themselves are really inefficient. It's hard to invest in the underlying asset. Like, you could invest in crude oil, or you could invest in refineries and extraction and infrastructure that deals with oil. There's not that dual asset or dual opportunity right now for a lot of the hedge funds and the private equity, the people that have a lot of money, because they can't invest in the carbon themselves. So what they're looking to invest in are companies that are going to be well situated for the future when that carbon is more valuable and is more transparent. And that's where a SPAC comes in, where you're saying, I'm sitting on a ton of money and I don't know where to put it in terms of the thesis that I have. Climate change is important. Carbon is going to play an essential aspect. So instead of investing in the underlying asset itself, I'm going to create a special purpose vehicle to take a bet on a company that I think in 5 or 10 years will be best positioned as that asset accrues value.
I don't want to put you on a spot or highlight one company and ignore everybody else, but can you give maybe a case study or two on companies that are something clever with carbon offsets?
With carbon offsets specifically, I would take a look at a company called Pachama, P-A-C-H-A-M-A. They are a portfolio company of Lower Carbon Capital, which is Chris Sacca's venture capital fund. My thesis of investing is either bet the index or find people a lot smarter than me. Chris Sacca counts as someone who's a lot smarter than me. And what Pachama is doing is they use satellite technology and machine learning to understand. You say you're not going to cut down a forest, and I'm going to buy that carbon offset from you, right? How do I know? How do I know that that forest is actually going to sequester the amount of carbon that it's supposed to, that it's not getting cut down, that this is a fair and transparent market, and I can make that market, right? That I can create the Lex likes Pachama. I do like Diego, actually is a great guy. That I can create the market between the interest that is selling that offset or that sequestration and the interest that wants to buy it. Here's another one for you if you're thinking about the SPAC market. First of all, a lot of these SPACs, they're still looking for a company. So when you see a SPAC, it doesn't necessarily mean they're tied to a company. You're investing in someone smart who you think is smart, who will be able to, she will go find the company that is going to be the best bet in the future. But one that recently entered into a merger agreement was Peridot and Li-Cycle. Li-Cycle is a company that does lithium-ion battery recycling. So this is the thesis. And I myself know Ajay through interviewing him on the podcast, and I'm a small investor in Li-Cycle. So for whatever that's worth, I believe that this is a good idea, but it's a good example of what we're talking about with this. Lithium-ion batteries, we all think there's going to need to be a lot more of them. Electric cars, electric vehicle proliferating. What do you do with them when they're gone? Now, there's going to be money in the sense of recouping this asset, grinding it down, and then reselling the materials that are rare in them to make more batteries. But if you consider it in terms of the overall value of carbon, if there's a price on it, if they can also say, we'll sell a warranty on a battery when it's sold so that it has an end of life process, then the manufacturer of that battery could price in that warranty, that ability to recoup the value of that and lower the overall carbon impact of the product at the point of sale. So this is a company that's really thinking holistically around what is the future going to look like in terms of the way things are bought and sold, and also how will the value of carbon play into the way that we think about transactions holistically.
Now, we're interested in this subject, and I assume the people watching us are interested in well, but for the wider investor community, are investors really interested in what companies are doing in terms of carbon offsets and their participation in the carbon markets?
So take that from Larry Fink, not from me. And so he wrote that letter a couple of years ago that says climate change is the future. We need to bake it into the way that we are considering all of the way that our investments funnel down. JP Morgan last week just announced that they too are going to be taking a look into the overall carbon footprint of the companies that are in their portfolio. So yes, absolutely. This is 100% going to happen. The people with the most money and the most insight to the future are thinking about how this carbon market will mature from a regulatory standpoint, from a voluntary contribution standpoint, from a consumer standpoint. Are people going to want to invest in, buy products of, buy services from companies that are more forward thinking when it comes to their relationship with the future and with environment?
Excellent. Well, I mentioned my coal mining family, that they're over actually in Wales, not here in the US, which would lead to my next question. Where does the US compare to the UK, the EU, Asia, China, other countries when it comes to the carbon markets?
Well, the US was founded on the idea that each state is its own incubation platform for policy. And as such, we're pretty fragmented. So there are somewhat well-developed markets in California, in the Northeast, and there are other states that have no cohesive strategy or plan for this whatsoever. So the US in general, it's tough because when President Obama joined the Kyoto Treaty in 2015, we were a very forward-thinking nation when it came to carbon markets, carbon pricing, and environmentalism in general. When President Trump took over, we went a different direction. And now President Biden this morning is announcing a whole new initiative to get us back into that. When it compares to international countries, I think that, and again, many people smarter than me should opine about this, but here are my 2 cents, Phil.
Okay.
They are wary of this zigzagging that we do. Depending on who's in office, our relationship with how much we're willing to invest in environmentalism and the idea of climate change tends to be mercurial, to use, a flighty word to say they don't exactly know where we're going. And I'm not sure we exactly know where we're going long-term either. And consistency will be our most valuable asset.
Well, Lex, I could go on speaking with you all afternoon, but of course the other people who are on today's schedule would not be amused with us. But if the audience members wanted to continue this conversation with you, how could they get in touch with you?
Yeah, sure. So check out our website is whossavingtheplanet.com. And actually, most of the companies that I listed today, I know about because we interviewed them. So we every week try to find somebody who is doing something that is very forward thinking, not in terms of what's going to be relevant today, but what's going to be relevant in the future. If you go to whossavingtheplanet.com, there is an email that we would be happy to hear from you. And also, my name is Lex Kiefaber. I am easily findable on LinkedIn or many other places. So come on board. Love to hear from you.
And my name is Phil Hall, and there are tons of Phil Halls out there. You'd be surprised how many emails I get asking, are you that guy? I said, no, that's the other one. It's not me.
It's a problem that I don't have, Phil, but there's only one you as far as I can tell.
I'm Tigger of Benzinga. I'm the only one. Well, Lex, thank you so much for being on today's program. And Spencer, what are you doing here?
No, I'm just hopping in. That was great, guys. Thank you, Phil. Thank you, Lex. I was the one doing the banners, Lex. But appreciate it. This was fantastic. Thanks so much for the time.
All right, cheers.
All right, Phil, there's Lex. All right, guys, go ahead and smash that like if you haven't already. That was a really great conversation. Check out Lex's site, whossavingtheplanet.com. Literally is that simple. We have partnered with some. We can't do these events without partners, right? That's just, to be honest, we can't put on these all-day events without partners. One such partner is actually coming up here in, I guess, about an hour from now. He'll be on a panel at 1:00 Eastern. He'll be moderating the panel. Tom Zuber, who is the managing partner of Zuber Lawler. And I want to take a quick second and just play a video from them, and then we'll go into our next presentation. So let's go ahead and, cue up that
Hello, I'm Tom Zuber. I'm the managing partner of Zuber Lawler. I'd like to thank our friends at Benzinga for the opportunity to speak today. Zuber Lawler is one of the most selective law firms in the United States. Our attorneys represent clients around the world, from offices in Austin, Chicago, Denver, Los Angeles, New York, Phoenix, and Silicon Valley. We focus on high-stakes deals, intellectual property matters, FDA, import, export, and other regulatory work, and litigation. We work in languages covering 90% of the world's population. Zuber Lawler is unique in the sense that the firm represents a long list of iconic Fortune companies and global funds, and has also been representing leading cannabis companies for over 14 years. This provides our attorneys with an ideal perspective from which to manage high-stakes, complex matters in the cannabis space. Indeed, Zuber Lawler practices at the cutting edge of cannabis law. As examples, Zuber Lawler is a pioneer of the two-stage M&A deal, allowing continuity of cannabis operations in the context of U.S. restrictions on the transfer of ownership of cannabis licenses. Zuber Lawler obtained the second ever issued U.S. plant patent for a cannabis strain, as well as utility patents on cannabis processes, machines, and formulations. Zuber Lawler obtained federal trademark allowances for cannabis brands in relation to relevant products. One of our attorneys obtained the first ever issued generally recognized as safe designation from the FDA for hemp seeds and foods. And Zuber Lawler advises hemp companies on international import-export issues relating to North America, South America, Europe, and the Middle East. Zuber Lawler is currently managing major patent, trademark, trade secret, and commercial litigation in the cannabis space. I'm excited to participate in Benzinga's conference. I hope to meet you virtually and in person sometime soon. Thank you.
All right, moving right along here. And actually, before I bring on Keith Driver, I've done a very poor job today of keeping up with the trivia / poll that I mentioned at the top of the broadcast here. So I'm just going to bring this up on the screen. I mentioned Slido.com. There's the link. It's on the screen, slido.com. Enter the code BZ Cleantech 2 or T2, excuse me, T2 for track 2, because there's one for each track here. And engage, answer the questions, and you could win a free lifetime subscription of Benzinga Pro. Here you see is what is a 50 DMA, 50-day moving average. Check it out there on Slido. And now I'm going to bring on our next speaker, Keith Driver, the CEO and director of EarthRenew. Keith, welcome.
Thanks for having me. Welcome to my basement.
Hey, basements are they don't have basements in every state in this country, so basements are a privilege as far as I'm concerned.
Yes.
All right, let's bring up your presentation, and I'll give it the floor. Let us know about EarthRenew.
Thanks very much, everybody. I'd like to introduce you to EarthRenew and our wholly owned subsidiary, soon to be closing here in the next day or so on Replenish Nutrients. We are a regenerative fertilizer company. We produce and market regenerative fertilizers across this point in Canada and into the Northwest United States. Just advance the slides. So as a business profile, our EarthRenew core company, we upcycle waste materials, so manures from feedlots and other organic residuals, heat from our power operations, and we use those to produce high-grade organic and regenerative fertilizer ingredients. We blend and granulate those with other off-spec materials from other processes or byproducts from other fertilizer processes, and we market those to regenerative and organic farmers in North America. We're building the leading platform to manufacture, blend, and market these regenerative organic inputs because the marketplace has been dominated by conventional fertilizers. And these conventional fertilizers are designed to feed plants and not to regenerate and build the soil. And as has become very topical lately, the world relies on the top few inches of topsoil to grow the food that we eat. And without that, we're going to struggle to produce the food that we need going forward. So our business is quite simple. We take a range of waste products, we convert them into fertilizer ingredients, and we translate those into soil solutions. Farmers don't buy ingredients, they buy solutions, much like any of us. We don't buy the parts for our iPhone, we buy the iPhone as a solution to our mobility opportunity. So for us, we upcycle these, which allows us to create excellent margins, and we produce products that are good for the soil, increase soil carbon, which is a way of mitigating greenhouse gas emissions and climate change, and we provide the nutrients to the soil to feed the plant. So when we look at When we look at regenerative and organic fertilizer market, the way to understand it is conventional farming feeds the plant directly. So sprays, prays, lotions, potions. Regenerative and organic fertilizers, we build the soil, we improve the soil microbiology, we improve the nutrients available in the soil, so that the plant is thus more stable and can grow stronger and more productive. Companies like General Mills and Cargill, and I saw PepsiCo yesterday making big announcements about supporting regenerative agriculture. And regenerative agriculture is a philosophy, whereas organic is a program and a certification. But they're both at the leading edge, the environmental edge, sustainability edge of agriculture, which is a growing sector as we become more entrenched in understanding where our food comes from, why our food is healthy and nutritious for us. Compared to our competitors, the big guys, Mosaic and Nutrien, they're coming at it from conventional, and everything they're talking about right now is how they're going to move towards regenerative. Whereas for EarthRenew and Replenish, we were born out of organic. All of our products are organic listed and for use in organic certified agriculture. And we're bringing those products, pricing them so that they're competitive in the conventional space. So we're coming with all the bona fides into the conventional space where the Mosaics and the Nutriens are coming the other way and trying to find ways to fit their products in. We believe we have a solution for every acre in organic, regenerative, and conventional farming. That's the market we're going off. So a massive total addressable market for us. When we look at regenerative agriculture, as it is a philosophy, not a program, it's hard to find where these farmers are. So we use organic farms as a leading indicator of where that is. And you can see clearly from the table, or the figure on the right, that the California is obviously the holy grail of organic, and these other states are moving along in terms of organic production. You can see on the map there's these concentrations in the Northeast and in the Midwest, and we're seeing regenerative agriculture fill in the gaps around that. And so the year-over-year growth in this market is fantastic, because while not everything can be organic and not every farm can convert to organic very quickly and very easily, there's lots of rules, it's very simple for farmers to take steps towards regenerative agriculture. Simply incorporating our products in, building back the organic carbon in the soil, all very powerful tools, all very accessible to farmers and available to provide similar and if not higher value back to the farm gate in terms of revenue every year. The products we produce, there's a range of products. They typically fall under this NPKS. So when it says 00007E, that's nitrogen, phosphorus, potassium, and sulfur. We provide a range of products which are essentially mixes of the same ingredients, providing organic carbon as well as the base nutrients. And then we provide bioactive complexes in there to help make those nutrients available to the farmers. We price our products per acre so that they are competitive with conventional agriculture on the nutrients that are available, bioavailable in the soil for the plant. So that we're not asking farmers to try a different product. We're asking them to try the products they know in a form that's good for their soil, as opposed to one that takes away or adds salinity to the soil as they go. And that's going to be our key differentiator, and that's what allows farmers who are traditionally very slow to change because there's so much risk in their business. It's not because they're not looking at the newest science, but the margins in farming are so small they just can't afford the risks. Whereas with us, we're coming in with traditional products that are actually made in ways that are inherently sustainable for the farmer. So there's a low cost and a low risk to switching. Our underlying technology platform, we take waste heat coming off of power generation, and we use that in our drying and upcycling processes. Without that, we would not necessarily be able to drive the same margins, because if you have to pay to heat and dry these products, you're just wasting natural gas, you're wasting heat to do that. We take what is essentially free heat and use that. That's the core part of our IP, and that's where our patents lie. We can upgrade our products. We are partnered with a company called CCM Technologies out of the UK, which allows us to take the CO2 that comes with that thermal heat and use that to upgrade the nitrogen in our products so that we can provide a nitrogen solution. Then the last piece of our technology platform is what I call the 1940s technology, which is how do you take those ingredients, mix them together, and make a consistent granule. The science and the requirements for that have advanced. The technology really hasn't. So you have to make a granule that will survive shipping and moving through the traditional farm equipment. And that's more of an art than a science. And we've been able to do that very successfully and know the specifications to meet farmers' demands so that the product, when it arrives on farm, is exactly how they're looking to receive it. Currently, we serve the markets from locations in Western Canada. We have 2 facilities now. Both sides will bring production of about 40,000 tons per year of product to market. The important part to note there is the gross margin on that is about $100 a ton. So keep that in mind as we go forward, that gets us to about $4 million of gross margin here by the end of next year, which is important because we don't carry a lot of other costs, and therefore a lot of that will move down into our EBITDA. But of course, growth is on the menu for us. We've proven and we're sold out currently to get to that 40,000 ton mark. There's another project that I haven't even added here that'll see us get to about 500,000 tons per year by the end of 2024. Ideally, we'll get to, internally we talk about 40 to 400,000, and that's going to move us from, say, $4 million of gross margin to 40 million of gross margin. And the technology, as I've explained, isn't all that complicated. It's simply a rinse and repeat. We've announced the project in Colorado. We're on the cusp of being able to announce the project in Saskatchewan here as it comes together. We're working on one in Washington, Idaho. We've got another one that's not on this list, but it's coming here in Alberta. Eventually, the holy grail is to get to California. Obviously, there's some regulatory challenges that we may be better off serving the California market in the short term from Colorado, Washington, Idaho, as opposed to building a plant in California, which will just take a little bit longer. We see a large opportunity for growth here, definitely 10x here in the next few years, and that's just our strategy for Western Canada. Giving you a sense of the financials and where we sit today, we're just about to tip over the 8-figure revenue mark here. Should happen this calendar year. We should be able to get to in the neighborhood of $10.1 million in sales. There'll be some slow growth there. This current model doesn't reflect any of the new projects coming online. This is just existing business. And you'll see that we're now reaching EBITDA positive. So going from a position of growth where we were cannibalizing all of our revenues to be able to grow the business, and now we're going to get to a point where we're EBITDA positive. That's fantastic for us. And then as we vertically integrate, which is adding the EarthRenew facilities in behind the replenished product marketing, adding that drying capacity, we can further increase our margin and our net operating income over time. So we're really focused on bringing in that top line revenue, getting to the 8-figure mark so that we're established and that we can position ourselves to go after that 10 times growth over the next 4 years. We plan to make a number of announcements in the next little while that will lay that roadmap out. The next one in our future is just getting this replenish transaction done so that I can be allowed to put up one model that shows the combined economics of the rolled up entity. Management, we'll be beginning together 2 seasoned management teams. I've happened to know Neil and Gerard for about a decade, and in a similar, both of our paths have crossed, and now we're coming together back in this organization. And Kevin Erickson actually used to be with EarthRenew in a previous iteration of the business about 10 years ago when it was first being thought of and founded. So we're basically bringing the team back together here. Carrie is the relative newcomer. She's currently wears a COO title, but she's responsible for a lot of the coordination of the team, as well as all of our marketing efforts would be her primary focus. But also knitting the organization together is a particular focus for her at the moment. For the board, we'll be bringing on the replenished gentleman onto the board, and then our independent board members. Catherine's got a long experience in sort of public company markets, governance, CFO type role, and Chris Best on the energy and marketing. We're currently recruiting, looking for a U.S. board member to help us really with our U.S. strategy for fertilizer coming into the markets in the U.S. We currently service mostly North Dakota, Montana as we come across the border that way, and we're looking to expand and looking for that expertise in the U.S. So we hope to have something on that very shortly. attached our contact information for those who'd like to get in touch afterwards. I believe we've got time for some questions, and I'd be happy to go back through the presentation and answer any questions that might come.
We do have some questions here, Keith. Andy's got a couple, and he's talking about China, which is interesting. So would this not be a better product to sell in China, or let's just make it more broad anywhere overseas?
It's really interesting question. The answer to that is yes. We're focused on production for North America right now because a lot of the margin shrink that happens is in transportation. So a lot of the potash that's produced it comes from Saskatchewan and gets shipped through the port of Vancouver and out to China. And we're sitting in right there to be able to produce that product, and actually, as opposed to sending those ingredients raw to China, do the value add here and get that product out there. And that the two plays there, one is they're already paying for the commodity to be shipped out there, so that's already included in the price. But two, there's a general mistrust of ingredients there. So coming with a Canadian or North American label that says this product was formulated and produced here, the authenticity of that is quite strong. We've actually had South America, Europe, and Asia knocking at our door here. The choice is, do we license the technology into those markets, or do we provide the products? And that's the solution we'll have to come up with here in the next few weeks.
And then a question that I find is appropriate for everyone, and it's just like, who are your competitors? Who are you competing against here?
So the regenerative market, it's highly fragmented. There's one guy in California who's carved out a bit of a business, and there's one in the Midwest, and there's one on the East Coast, and there's lots of little folks that are doing this. And so we see the opportunity for us to build that leading platform here. And we've got that in Western Canada, and we're, through acquisitions and organic growth, planning to take over those other regions as well. In the conventional fertilizer space, you've got the Nutrients, the Mosaics, the Coke Industries folks that don't have the infrastructure to do our products. And so we're building that platform in part with a view that maybe one day they'll come along and take us out. But more importantly, that's what agriculture requires. It requires ubiquity across the markets. It requires scale, and we're going to get there, and then either we'll take it or someone's going to come along and partner with us to do that one way or another.
All right, Keith Driver is the CEO and director of, it's up on the screen. You don't even need me to say it because it's up on the screen. EarthRenew, ticker VVIVF. Keith, thank you so much for the time. Thanks for coming on.
Absolutely. Thank you very much, Spencer.
All right. We got a couple minutes before our next guest here, and it's going to be a good one, guys. Anne-Marie Band. Whether you are interested in trading small caps, specifically green energy stocks or companies that we've had today or whatever, Anne-Marie Band is a trader. She's a technician, and she's honestly one of the best traders that I know. She runs the tradingbook.com, and she'll be on here in a couple minutes to just talk about how she approaches the market, and give us her thoughts on companies that we discussed today and companies we haven't discussed today. So I'm really looking forward to that. Once again, I want to bring up this poll we've been doing today. The winner, the most engaged person in the Slido poll does get a free lifetime subscription of Benzinga Pro. So I just asked the last time I had this up, what is a 50-day moving average? Going to move right along here. Go ahead, name this chart pattern. And don't say W, because it's not a W. I mean, it is a W, but it's also not a W. You know what I mean? Slido.com, BZ Cleantech T2 is the code. Win a free lifetime sub of Benzinga Pro. Win a free lifetime subscription to our options newsletter or our breakouts newsletter by answering these questions on the poll. If you haven't already, guys, go ahead and smash that like, engage with us on Twitter, hashtag Earth Day, hashtag Cleantech. As much as I'm loath to encourage y'all to leave me, Neil's got some great stuff going on his track. So check that out as well. It's right there on YouTube, same place, right as this. If you are in our virtual networking platform, awesome. You can get there by signing up via bcsmallcap.com. That'll be open not just today, but today, tomorrow, and I believe even Monday as well. So we appreciate all the questions in there in our chat. I'm watching the chat right now, and all the interaction. It's a lot. We do this for you, and so we appreciate all the engagement, all the interaction. Also, want to mention that this is being recorded. It will be available after the fact. All our virtual events are always available after the fact. So if you are watching and you have a thing, you got a meeting, whatever, you got to hop for like an hour and you don't want to miss it, relax. It'll be up. It'll be on YouTube. It's where all of our events are archived there, or just go to bzevents.com. And on that BZ Events note, if you have any feedback about this event, how we're running it, content, what you want to see, what you don't want to see, just shoot us an email. events@benzinga.com. That goes to like half this company. You want to get feedback on me? That works too. Events@benzinga.com. Shoot us an email. Tell us what you think. All right, it is 12:20, and I want to bring on my dear friend. I swear, I swear that before I even knew that Anne Marie was going to be here, I was thinking, it's been a while since I've spoken to Anne Marie. So here we are. We're speaking now.
I'm excited to be here.
Anne Marie Band, thanks for coming on today. I just I talked you up for like the last few minutes. Anne Marie is a great trader. Has a very, very good way of looking at markets and not letting it overwhelm her. Markets don't overwhelm her; she overwhelms markets, right? The other way. She really good at like the mental, psychological side of investing and trading. And so, Anne Marie, I'm so excited. Every time we have you on one of our shows, I'm always super engaged and have my ear like to the screen to hear you. So let's get right to it.
Well, I'm excited to be here. Cleantech. I've been listening to the Cleantech conference all day. And so it's been very, very interesting. And one of the things that I want to do is show you how using Benzinga Pro, we're going to look at Benzinga Pro, and we're going to go through a few of the things that we've heard from, and one company in particular that I like because I think it's got a little bit of room, but then talk about, why would somebody like me really even be in a Cleantech conference? And the main question is, what do we invest for? Do we invest because we believe in something, or do we invest because we want to make money? And so, we invest really because we want to make money. So it's the combination of, can I find clean tech that I believe in, and does that clean tech show as something that I can lift into and invest in? Right? So a lot of clean tech is really on the ground floor space because, as a lot of these guys talked about, it's difficult to recycle, to refinish, to redo, all those sorts of things that are really important to their system. It really costs a lot of money. And so from a clean tech perspective, it's still the ground floor space. But one of the things that I wanted to do is show you my screen here. And we're going to look at, this is a charging company right here, but this is not the one I want to go to. I want to go to the American Manganese because we just had a gent cover that. And I want to show you how you can blend what it is you might be looking for. It's got 5 letters. What you can be looking for to find how well a chart might be doing. All right. And so, wow, not sure why it's that tiny right now. So let's go to day, and then let's try to pop this up again. Right. Hey, Spence, do you know why
I'm actually
this might have
I'm going to bring it up on mine.
done this for me?
I'm going to bring it up on mine.
Woohoo!
Here, check it out.
Let's see what's going on here.
Here, Anne Marie.
All right, not responding.
Wait, Anne Marie, check
Don't
it
you
out.
love technology?
Anne Marie, check it out. Check it out. We got mine.
All right. So here is. Oh yeah, great, fantastic. Right. So as we look at this, the question is, one, are we looking at my philosophy about dealing with clean tech is work on the inputs. So I'm going to look at things like manganese. I'm going to look at things like cobalt, lithium. I'm going to look at all the things, nickel, all the things that go into the production event. And my thought is this is where the actual strength is going to be shown. If they can pull it out of the ground and get it to market, and it can be used in market and move up the chain, then great. But I love the inputs. And so as I was rifling through all the different companies that we were seeing this morning, I really liked American Manganese because it had a big run to the top, and now it's sitting at about a 50% retracement. And so when we are looking at something that we want to invest in, we think to ourselves, okay, how do I acquire positions? And so what we're going to do is take a look at that American Manganese, and I think that my screen is doing its thing right now. So let me.
Yep, it looks good to me.
Yep, great. So as we are looking at this, what we're going to see is this 50% retrace. It's gone all the way up to 2. Let's say you say to yourself, I want to go long here. And I want to go long on an investment perspective. What I will do from an investment space is I will immediately assume every time I get in that I'm getting in too early. And so what that means is I'll go quarter size or a third size. And then I will look for the nearest edges of support. So for American Manganese that is bouncing on a day where, most of the market is very green and trying to hold, except, if you're in the Russell when it's half and half, what we're looking at is a pullback that says, all right, if it comes into 70, then I'll buy it and I'll buy another quarter. And so that will allow me to leverage in.
Hey, and Marie, real fast, can you just close the signals tool so the chart's easier to see?
Signals tool.
Like on the left there, you got that like to the left of the chart, you've got your signals tool going.
Left of the chart. Oh, yes, of course.
Close that out. There we go.
Thank you very much. Okay, so as we look at this, we can see buyers came in at 69 or 70, and then we had a really significant breakout at 48. So your thought, if you're investing, should be, okay, if I buy here and it falls to 40 cents, am I going to feel okay? Because that is a possibility. This chart has not retested its major breakout formation at the beginning of this year. It hasn't done it. And indeed, it was staying very low for a very long time. And so it's now breaking away because everyone is saying, listen, commodities are the way to go. And if everybody's in EV and clean tech, they're going to need the inputs to make this sort of thing happen. If the amount of the inputs dry up, it's only going to make these charts more expensive as they pull out and move higher. So this is the space that you have to think about. The only thing you have control over as a trader or an investor is how much risk you want to open yourself to. It could be that it holds 98 and goes all the way back up to 2 and then starts really running to 20, at which point you can continue to add as the price action goes up. But here's what happens every single time a chart really changes direction. The first thing that happens is that it fails to head lower. The second thing that happens is that it tests a major resistance zone ahead. The third thing that happens if it's moving upward is that it makes a higher low and it doesn't break that edge. And right now we see that here. Let's go over here and measure the same thing. Does it fail to head lower here? Yes. Where's the resistance zone? It's here, right? So it doesn't really break the resistance until here. So what we have to do is wait for it to come back and make a good bounce event so it moves past the first front line of the new support zone. And it doesn't do that at all. And so the second thing that we really need to understand about trading or investing in the clean tech cycle that is going to naturally move forward is you've got to have patience. So if you look at this and you go, all right, here I am breaking higher into and through resistance. I pull back and now I'm heading in the space. This is the line it should not cross, but it could in a very messy space. And if everyone decides, oh my goodness, I got to get out of the market, it could fade. So your job is always to err on the side of caution. Make sure you have dry powder to participate when there's blood in the street, and then work towards saying, okay, if it comes into here, I know they're going to bounce right away. And if they bounce and hold, I'm in great shape to move forward. The biggest exposure that you could have to all the metals that are inside of clean tech batteries and the EV space is valet. A lot of people call it Vale. It's valet. So valet has a conference call in 5 days, and take a look at the run that this chart has had. It's monstrous. It is a very big run, and this area at 12 was the last test zone before they started making a new support area at around 16. So sitting at 19, it's almost 25% higher off its new highest support. So again, if you want to look at, hey, I want to trade my earnings, I want to see what the estimates look for, right? Everybody is, for this area, no, that's not what I want to look at. Here. All right. So in this early part of the year, we had some downgrades, upgrades all the way from here, and then some downgrades way back in 2019. The fact of the matter is, any downgrades that come through and the price action fades, which is what they might be doing prior to the earnings space, if you see a savage fade, it is going to be a buy zone event for this particular chart. It absolutely is. I like Valet because it exposes us to so many different metals. It exposes us to nickel, manganese, copper, cobalt, and lithium, all of them. And so I like this one in terms of inputs. Again, the way a chart changes direction is by the following. One, it fails to head higher. Are we seeing that? Kind of. We are. It's not heading higher. It breaks support. Has it done that? Not really. It pierces support, but it doesn't break it. And so this ledge tells us it's in a wait state. So if you trade here, you are engaging in the current battleground that is being warred through with this particular chart. No doubt about it. And so as you look at that, you can say old resistance, new support. You can buy it here, but that would be just a trade into the 1950 area. Once that holds and it breaks out, it could ride a little, but it's usually going to come back and test the support zone. Remember, the simplest energetic thing you can learn about the market is that if a chart breaks resistance and heads higher, it is likely to pull back and test that resistance as new support. You might say to yourself, well, Anne-Marie, if you look here, that doesn't happen at all. True, except the difference here is if you put up a moving average like, say, a 5 or something tight, you're going to see it walks it right up the chain, right? It had all these downgrades early in the year, everybody thinking to themselves, oh my goodness, it's going to roll over because it's run so high. But at the end of the day, look at what the traders did. They started stabilizing in this range. They filled the gap that was sitting right here, and then they hold support and move to the north. So the patience event entirely necessary here. That I also like. Let's say you want to play clean energy, but you want to play it from a different space. And I'll bring you CleanSpark, CLSK. I always forget how to spell that. Here's CleanSpark. These guys make microgrids. Now, we asked one of the folks that I work with all the time, asked the CEO at the last earnings call, listen, did you buy a crypto mining company in order to see if you could use microgrids to get enough energy to run the crypto mining space? Because it costs a lot of energy to mine crypto. He sort of punted on the answer, but my suspicion is yes. Okay, so these guys are in the microgrid space. They're having a tough time right now, and they're in this fade. It is very negative. High, low, lower high, lower low, lower high, lower low. So that tells us we've got trapped buyers up here. If we have trapped buyers up here, that's going to give us a selling pressure event that could begin to hold up here. So let's say we're thinking about the fact that this chart might be moving to the upside for a longer swing to the north. What's the first thing that has to happen? Well, we've got to break resistance, and we're battling it today. If we break resistance, it could move to the north, immediately it'll find buyers that will be hit by sellers, and they'll come down and they'll hold this old resistance as new support. So this area that they're battling is going to be a tell-all in terms of when they come back here, can they hold? If they hold, you're going to be in good shape as it gets up over this edge, and clearly you could see it could double again. But right now, every bounce is being sold off at the prior resistance zone. And once it makes that prior resistance zone, it heads to a new low. So this is the region that we're watching. Could you take it on a trade? Yes. Could you wait if you're looking for the chart to really hold the zone? Yes, absolutely. You can look right here. All of this motion from a 5-day perspective, they came down, held it, they're trying to bounce, but again, they've run into resistance. And so even if it heads higher, the slope is always going to win, and it's going to tell you to bring lower. So as you go through the rest of this day, looking for good clean tech ideas, remember, don't invest because you love whatever they're saying. Invest because it makes sense and it's going to make you money. If you're interested in being a part of a clean tech movement, go to your local community and find something there that really makes a difference with your boots on the ground. When you come to investing and clean tech comes at you, look at their charts. Look at where they're moving to. Look at their old resistance. Think of it as new support. Ask the same question. If I engage here because I think it's going to really blast off to the top, am I going to be okay with my size if all of a sudden it comes back to 13 or maybe even 12? Am I going to be comfortable with that from an investment perspective? So that's the real thing I wanted to share today. Of course, I'm not any kind of clean tech guru, but I certainly love the metal space. One, because it's a commodity, and I believe the commodities have been in a very deep trough, and they're likely to see their edge as people go, oh, you know what, this one's super oversold. I think I'm going to use it, and get involved here. And that's going to give us a little bit of a tailwind at our backs to help us move into the upward space. Any questions?
Not yet, Anne-Marie, but I'm keeping my eye out for some. And
All right.
I'll have a few in a little bit.
All right, super. The next one I want to show you is a very small lithium company called Frontier Lithium. Love them. Been in this one since way back here because I thought to myself, hey, listen, I think metals are the way to go. I like them. They've had a bit of a fade. And this line that they're sitting at, you can see that it is clear support. If they lose this edge, it's going to go back down here. Maybe it'll stop here. But my thought is this run up is going to have very thin volume. There's thin volume on the fade for sure, but the run up is going to have a thin volume profile. And so very legitimate that it might come back into this zone. But again, if you say to yourself, can I see what this chart is doing? First question, am I failing to head lower? The answer is yes. Am I failing to break resistance? The answer is no. So until that answer is yes, and then the chart either pulls back and holds a higher support and moves forward, or pulls back and double bottoms, you're going to have yourself a problem in the chart. Many of us are just not patient enough. And the great thing is, what I'm sharing with you will work on a weekly chart, a daily chart, a 4-hour chart, a 30-minute chart, a 5-minute chart, a 1-minute chart. The problem, as you get tighter in the formations, you're likely to be whipped around if you don't see the bigger picture. So always start with these big pictures. What is the daily chart telling me? Where am I at risk to lose capital? I've been trading for 20 years almost. Wow. My goodness. So what I've come to learn is anytime I get overexcited and chase, I lose money. I do. But if I'm patient and wait, and then watch what happens when I act for the confirmation of the events, things turn around very dramatically. And so that's really the big motion to give you an understanding of what's happening. Another one that really, I think, falls into clean tech because it uses less materials is the 3D space. And for a while, man, it was big. You know, Nike came out and said, listen, you can design your own shoes. They still use this technology. 3D grew too fast for its own good and then collapsed and fell all the way to the floor. It was doing much, much better in times past. What it's trying to do now is get another foothold. They've got their manufacturing for their machines a little bit more streamlined. They're using just in time, and this chart might be doing something, but once again, look at this. It works the same way every single time. Is the chart failing to head lower? Yes. Yes, it is. On a day where we had such a nasty downward formation, this held the baseline. And if you look to the left, you're going to see that support zone action here. Yesterday, everybody moved up. Here they are. Does it fail to head lower? Yes. Has it breached resistance? It's tested resistance, but not breached it. Just like this over here, that resistance zone was here, but the answer was no. And if question number 2 is no, it is not time to buy. And of course, you see it. It fades downward, bounces here. It's got to hold above this zone. And if the shallow pullbacks come in and hold 2179, then you know that your 1950 area is going to be a pretty nice space. But again, if you're looking at this from an investor perspective, how much you put in here, is it going to bother you if it pulls back to $12.30? You've got to think those things over. Take a look at this again. Same thing. It stops heading lower. Does it breach resistance here? No. It goes downward and it breaches resistance here. So the question is, can it hold this higher low? It can't. Also not along. These simple steps, 1, will keep you out of a bad space, and 2, will help you understand when you can add to a position, whether short or long, by doing the same thing. If you are thinking this is a short, take a look. Do I fail to head higher? Yes. Do I break my support? I test it, right? My support action is tested down in this area. This should be holding. This over here should be holding that edge, new support. I test it and it recovers. On the bounce, I get an inside candle, and that gives me high, low, lower, high, lower, low, lower, high. So if I bounce and I can't breach the high at 3180, I get to go short. So this area is my short, 30. 32 is my stop, and I'm going to run it down into my next regions of frontline support, which is old resistance right here, and then new support right here. It comes, immediately starts bouncing. I know I have to take profit. Straightforward formations. We're not looking at anything but how the candles run, because price is king. Last one we can talk about really before my time is up is battery tech. And battery tech is looking very interesting because it's in a price compression mode, right? And so it's giving us lower highs and higher lows. So it's going to break in some direction or another. I do not believe this ETF has options, but you can see that right here, everybody has sold. And so if we close above this area, the pullback should hold 1572 to 1545. If it does, and you bounce again, you're in good shape and you know where your stop is. Price action can move to the north. If not, it's going to head back into those support zones.
We got a few questions for you, Anne-Marie.
Sure.
And we're almost at time, but
yes.
I want to give people some time here. So okay, we could do this all day. We're not going to, but we could. Let's ask you about this is a good one here from MH. Anne-Marie, how do you handle the psychological pressure of holding a big position in something that you're in for the long term, but it's breaking through support? I think I know what you're going to say, but go ahead.
If I see something breaking support, I will immediately trim my position. Here is my thought. The way that I make money is by buying low and selling high and not holding if something is not performing. So, for instance, let's say I have a great big position in BATT. And the first thing I notice is something, this, friends, is called an abandoned baby, but with two candlesticks instead of one.
That is the official term, by the way.
True story.
Yeah.
When you have something that gaps like this, and then you can't even get back to old resistance, I'm trimming. My thought is, if I have a big position that starts losing, I'm trimming that size of position to give me dry powder to buy back, because I am not afraid of the market leaving me. My philosophy is this: the market is a buffet. It's open all the time, and you get to pick the best of everything you love, just so long as you don't go up there blindfolded and grab a green bean and grape jelly sandwich on white bread, right? It might be sitting in there, but it's not going to be good to eat. And so think about things like that. Don't think about, wow, what am I going to do if my price action drops really badly? How am I going to hold psychologically? I can't do that. Psychologically, my brain goes, hey, that's bad. I'm trimming. I'm going to see what my candlesticks, I'm immediately going to count my candlesticks. Wait, fails to hold higher. Yes. Breaks resistance. No. Still in a negative trend. Fails to hold lower. Does not break my resistance zone right up here. Immediately collapses. I know I'm not buying again. So I continually trim, and I will trim just like I buy in my big support zones. I'm going to trim when my big positions start fading, if I'm holding them for the long term.
Great advice. Double AO1 is asking, do you get back in lower, and what about wash sales? I don't know how much you're thinking about taxes when you're doing this.
Well, if I'm investing,
I guess that's a different ballgame than trading.
There's no wash sale. But if I'm thinking about a wash sale, yeah, I don't really think about wash sales.
I figured you didn't. Yeah.
Yeah.
Hey, it's a tax thing. If taxes are top of mind for you, then
yeah,
you're aware of it. But for most people, I don't know how often taxes are always top of mind. Maybe like end of the year. But
yeah,
not all the time. All right. You have any thoughts on any of these Chinese EV names, whether it's NIO or LI or XPeng? Do you have any thoughts on? And pull up the chart there and
sure.
Give us the old technical analysis.
Okay, so here's okay. I'm going to try and be as straightforward as I can be here. These charts look like they're going to give us the next run to the upside, right? They're basing, and if they can break resistance, they're going to start attacking their old resistance lines. But right here, right now, it's showing failure to hold over resistance. So it's got a 4161 area. If you're looking for that, every time we've come into resistance, it's sold, but we're not heading lower. And if you're not heading lower, it means that people are buying the bottom. And if they're buying the bottom, they're going to try and break it out. We just have to see who's on the edge here. So as it looks, it's already got this buy zone into this area. If it holds, they can move up. My thought is, if we have any kind of administration saber rattling on either side, we're going to have a problem with Chinese stocks in general. So keep that in the back of your mind, but only in the back of your mind, because as a trader, you should be looking for higher lows. Ooh, that means people are buying from underneath, right? That's where buying pressure comes from. It comes from underneath. It doesn't come from above. Selling pressure comes from above. Buying pressure comes from underneath. And if you see it moving up, then your pullbacks will give you buy zones into the resistance edges. But if we can't break those edges, we're going to come back down. Everybody's been buying at this 35 level, 34 level. And so that's going to be the zone we watch to pick things up. And if they don't go, your stop is tight, because, who knows where these things could go. It really, really depends on what happens ahead. If China decides it's want to get involved and take Taiwan back because of whatever, there are a lot of geopolitical things that really could put a hamper on Chinese stocks.
Exactly. And so, okay, so let's do a couple more here. Quantum QS. We haven't talked about we haven't talked about the SPACs or the D-SPACs, the companies that were SPACs and have now converted. I don't know if you have thoughts on. I mean, a lot of them kind of trade together. And QS is
one of those.
One of those. It's been targeted by short sellers. Had a great day yesterday. Let's get your thoughts on QS here.
Okay, same sort of thing we're looking at. There's a support zone down at 24.45, and this chart is trying to recover, but they're going to run into sellers again, and they're going to run into sellers between 37 and the gap at 40.61. So on top of that, there wasn't really a lot of buying pressure off of the lows here. So people are timid into this edge because they know, wow, I better close over 35 today or I'm headed lower again. Again, that's really what I'm seeing right there. Close over 35, the pullback, as long as I hold 32 or test 32 and then bounce, I'm in good shape for trying to take the reversal trend. But to be sure, this is a reversal trend, and there was a big collection of sellers at the drop off of 40. And so if two things can happen here, if it breaches 40, it could turn into a squeeze, at which point it would go to 46 and then more sellers would come in, or the sellers that are here are going to turn right around and become buyers and push it back into the 50 space. But it's very interesting. So many of the charts we're looking at are at a decision zone. And what we have a tendency to do is say, oh, it's off the bottom, I'm going long. When indeed, it is a decision zone from the big hands holding. And so watching the edges into resistance, if you're trading this and you buy it, you better clean some profit off at that 37.50 area, leave a little to expand into 40, and then know that if it pulls back, it better hold your 32.50 or there's more trouble on the downside.
We're getting a lot of love for Anne-Marie.
Thank you.
Saying Anne-Marie needs to be a therapist. Anne-Marie. Anne-Marie should be a therapist. Here we go. Anne-Marie, you should consider narrating lullabies as a career if you haven't already. If trading doesn't work out for you after 20 years, Pat thinks
I'm on it. Lullabies. That's my next venture.
Lullaby narrator. And yes, you can learn more from Anne-Marie on her site, thetradingbook.com. She is a frequent guest on Benzinga programming right here on YouTube. Anne-Marie Band, it is always a pleasure to talk to you.
Thank you, Spencer. I'm so happy to see you.
Happy to see you. It's been too long.
I know. It's been a while.
I cannot wait till we can meet again in person.
I know.
Maybe this year. Maybe next year. We'll see what happens. Thanks a lot, Anne-Marie.
Thank you so much. Take care.
Guys, go ahead and smash that like button for Anne-Marie. That was just that. See CVC in the chat. Exactly right. Amazing, amazing stuff. The way I told you when she started, the way she just looks at the market, right? It makes you not feel overwhelmed. So we could have gone Q&A with her all day, but alas, we have other things to get to. Our next panel starting right now, actually, and I'm going to bring on our moderator for the panel, Tom Zuber, who is the managing partner at Zuber Lawler. Tom, how are we doing? Good afternoon.
Good to see you, Spencer. Thank you. Great to be here at Benzinga again. Great affection for everyone over there.
Great to have you on. I'm going to let you introduce your panelists for this panel on emerging innovations and the companies behind them. Take it away.
Great. So I'm Tom Zuber. I'm the managing partner of Zuber Lawler. And under God, we have 7 offices across the country, including in Los Angeles at our headquarters where I sit. We represent a long list of Fortune clients, including energy Fortune clients. And we've been doing that work for over a decade. In the areas of high-end deals, M&A, finance, so forth, IP, regulatory work, and lots of litigation. And we do a lot of international work under our Zuber Lawler global banner. We're also a technology-focused law firm, so a bunch of bioscience nerds, I guess, on the attorney roster is the best way to summarize that. Next, I'll go ahead and just go around my Zoom screen here, my video screen here, and allow my panelists to introduce themselves. So I'm very excited about this panel. We have 2 outstanding executives, very exciting companies, and even more exciting technology, if I might say that. So we'll start with Stephen Rossi, CEO over at Worksport. Stephen, you want to tell us a bit about yourself and your company, please?
Sure, yeah. Very nice to be here. Welcome, everyone. Thanks for joining us. I'm the president and founder of Worksport on the OTC WKSP. We produce truck gear for the pickup truck market. More interestingly, we produce solar micro generation systems, turning these pickup trucks into microgrids and battery systems for portable power for campers, contractors in the event of natural disasters.
Thank you, Stephen. And Dennis Calvert from BioLargo. Can you tell us a bit about yourself, Dennis, and also your great company?
Yeah, of course, Tom. Thanks for being here. This is great. Yeah, so BioLargo, right? Our slogan is we make life better. We're focused on clean air, clean water, a cleaner earth. We've been developing technology platforms. We've got multiple for about a decade. We also have a full service engineering group. So supercharged with science and engineering experts that solve some of the biggest problems that we face around the world. And one of our emerging technologies just now going commercial is focused on PFAS. We'll talk about it, PFAS. That's these forever chemicals stuck all over the world. Anyway, we're really an innovator, become solution provider, and then leveraging through this technical innovation. So it's really a symbol BLGO. So there you go.
Great. So let's just dive into it. Dennis, why don't we stay with you then?
Sure.
On the notion of PFAS, can you tell us a bit more? I'm familiar with it, and of course the forever chemical NOMER. Can you go ahead and tell our audience what is PFAS and how does the PFAS contamination issue feed into such an urgent conversation for everyone?
It is an urgent conversation. Excellent, Tom. Thank you. So PFAS, per and polyfluoroalkyl substances. It really references the class of chemicals that were used to make nonstick coatings. Been around for about 30 years. When you read about it, if you do an internet search, you'll see some of the big names like DuPont and 3M have come under extreme pressure, regulatory pressure, legal pressure. These chemicals were used to make nonstick coatings, right? They went in food, they went in food packaging, they were put in coatings, metal coatings, I mean, on and on and on. And the movie Dark Waters really sort of brought PFAS to the public awareness about 2 years ago. And then there's been this continual attention, extreme focus, because PFAS, if you think about it for just a second, a little bitty compound measured in parts per trillion that you put out a little bit every day for 28 years and nature won't break it down, right? That's what we're talking about. Chemical compound that nature will not degrade. It's actually designed not to degrade. It's the point of the invention, right? Non-stick coating. So what happens is a little bit for 20-something years and you got a big problem. So it's been linked to adverse health effects. If you again, internet search, you're going to see tons of material. But what's happened is because of the increased ability to measure these compounds and the link to adverse health effects like cancer, of course, and birth defects and some really significant health threats, especially in concentration, there's an outcry around the world, especially in industrialized nations. So the Biden administration, a couple of days into office, made a pronouncement that PFAS was one of the key environmental concerns for the decade. In fact, people call it the compound of the decade. And so we got a little bit of a head start, which is really important because, as you can imagine, as these emerging contaminants come to bear, you got to be ready. And so this is a very special compound. We have to do something special to tackle it. And so we've had about a 2-year jump to be prepared, and we're just now going into commercial trials with some of the leading customers and partners in the world. And we got about 2 years of development work under our belt. So we're really locked and loaded, as they say. So there you go.
That's great, Dennis. And Dennis, why don't you tell us while you're at it about BioLargo's PFAS extraction technology? How does it work? Why is it so effective? Yeah.
Yeah, so the state of the art, really, the incumbents, if you will, the old technologies that have been around for a long time is carbon. So just remember what carbon is. Carbon, activated carbon, charged carbon, right? That's what we're talking about. That's the incumbent. The way that works is through a principle called adsorption. So as water flows through a carbon media, the pluses and the minuses attract, they bind to the surface. And as you can imagine, a carbon system will extract everything. That's the key, right? So when we looked at this problem, we said, the problem with that is if you're doing groundwater, for example, like well water to make drinking water, that's what we're talking about. Yeah. That water's got a lot of stuff in it. And if you're going to use carbon, it's going to get everything. And so all of a sudden, in order to get this little compound measured in like 60 and 70 parts per trillion, you're having to treat the entire body of water and take all the stuff out of it to get that little compound, which is minuscule. And so what we did is our engineers, frankly, not me, our engineers said, we got some ideas. I got a call one day from our lead engineer, Randy Moore, and he said, I think we got an idea that might just work. I said, yeah. He said, I'm going to need a little budget. He said, I want to go do a little proof of claim, which is really like a little science experiment. And the theory of that was that these PFAS compounds have a charge, and they tend to act like an ion, a salt, okay? And with a charge, you can affect its mobility, right? Real simple concept. If it's charged, you create an electromagnetic field. You can pull it, you can direct it, you can move it. So basically, they built an electrolytic cell, and there was a bunch of theories about how it was going to work, and how it actually worked when we were done was that we put a membrane through a chamber, and as the water flows through the chamber, across the membrane, not through the membrane, very important, across the membrane, it tends to act like flypaper. It's the best analogy I can give you. And so as the water flows across, the PFAS is directed. As it hits the membrane, it sticks. And it sticks like glue. It doesn't come off. And so then you can recycle, you can scale up, and basically you're talking about electrolytic cells that flow the water across, migrate the PFAS, and then selectively extract. That's the key, selectively extract. So what happens is when you're done, we end up with a 55-gallon container of waste versus truckloads of carbon. So you talk about sustainable footprint. I mean, this is the cutting edge, And so what we've proven is it does work, it's viable. And then this morning we did a press release announcing that we've had a technical breakthrough confirmation of extended functional life of the membrane. That's a big deal because you can imagine you got electrodes, you got to flow water, you got some parts that are going to fill up with this contaminant that become a recurring revenue opportunity to collect and dispose of and replace for your clients. And then the thing I'd point out from a business perspective is this is estimated to be about a $3 billion a year problem in the United States alone. It is global. Any industrialized nation is dealing with PFAS. Europe is catching on really quick. There's been all kinds of mandates to remove it. And these projects will range in the low end of probably $250,000 all the way up to $30 million each. And, in our local market, the Orange County Water District has tested about 40 of their wells have tested positive for PFAS. And when that happens, they turn off the well. They can't serve PFAS contaminated water to the public. It doesn't work. It's not feasible. And so what happens is those wells, especially in a drought-ridden state like California, they have to treat the well. Well, they're estimating the cost to treat those 40 wells at $1.5 billion. I mean, I always say, in my backyard, 30 minutes from my office, there's about $1 billion worth of business. So, I mean, and again, we won't get all that, right? We're the small guy with this great innovation. So what we're doing is we're advancing the state-of-the-art science and technology for engineering. And then we partner, right? We end up working with engineering firms all over the world to see this product go to the market.
Dennis, absolutely fascinating. I think if you can make a living while you're saving the planet, all the better. So You've mentioned one big advantage of your technology, which is obviously the manageability of the waste, the byproduct, right? So that's obviously huge. No further explanation needed on that. How about in terms of efficiency, in terms of time per volume, right? So
So we get a single pass, right? So that's the beauty of the system. You get a single pass, you're getting over 99% extraction, right? And then by virtue of the way the system works, you can actually take that extra 1%, which now again is measured in the parts per trillion, 60 parts per trillion. Okay, so parts per trillion, that's like a grain of sand in a swimming pool. I mean, you got to really get perspective here, okay? You're after a contaminant that is so minuscule. So that's the trick. You can get it out, you can concentrate it, isolate it, and then dispose of it properly. Well, so the key for us, I mean, if you look at the regs, what you're going to find is the government's going to control what happens to the waste product. Are you going to incinerate it? You're going to contain it? You're going to degrade it? You're going to use enzymes and eat it? What are you going to do, right? There's all sorts of solutions about the destruction capability. And we're working on some of that too, by the way. But our strategy at first was isolate and collect, and you've got this extraordinary efficiency, right? So we think we'll compete head on with CapEx, but we're going to be 1/20th the cost of an OpEx. I mean, it's a pretty dramatic cost comparison, especially when you think about the cost to manage the disposal product itself. And listen, there's already regulations saying in around the country by the EPA that says we're not going to burn carbon-laden PFAS in our community. Well, now what are you going to do with that carbon? Oh, you're going to landfill it? Oh, guess what? That stuff's coming back. It's not going to go away. So this is a significant issue because the compound was designed to not break down. So there you go.
Great stuff, Dennis. Really, I applaud your efforts and the effect it has on the environment.
It's like a 20-year overnight success. It's awesome.
Those are the best.
Okay, great.
Overnight successes that you build over 20 years. We have another panelist, a guest, Ryan Melser. Welcome, Ryan. And why don't you go ahead and take a few minutes here to tell us about yourself and also about American Battery Technology and the exciting things you're doing there.
Great. Thank you, Tom. Good to be here. So at American Battery Technology Company, we have two parallel businesses. We have developed a first-of-kind integrated system for the recycling of lithium-ion batteries, where we're able to take in full packs and modules from electric vehicles or stationary storage systems or consumer electronics, and in a very high speed and automated fashion to separate those packs to modules to cell subcomponents and then to sort those components in a matter of minutes. So we're able to do that in an automated fashion with very minimal direct labor, and we're able to do it while the material is still electrically charged, so not needing that very slow discharging period to begin with. Once we have them separated, we're able to sell many of the lower value scrap metals, and then for each of the high value battery metals, we've developed our own chemical extraction train, where we can extract one of those metals at a time, purify them even past industrial grade up to battery grade quality. And then we've been working with some of the very large cathode companies in the world to sell these battery metals directly back to them, which they then make into new cathode material to go back into new cells to go back into the market. So we're enabling a closed loop economy by closing the chain on these battery metals. And separate from our recycling business, we also work in primary metal extraction. So working with ore and brine resources throughout the US, and have developed new methods of, again, extracting individual battery metals. So we've been starting off with different lithium resources we're using to extract from, and also doing some development on cobalt and nickel bearing resources. And again, these primary metals we're able to extract to purify to battery cathode grade and then to sell into the market. So while the occupied mass of electric vehicles keeps growing on the road, recycling is very important, but even 100% recycling can't make up demand because we keep adding more material to this closed loop. So it's important that we have both our recycling system and our primary extraction systems to really satisfy the needs of this rapidly growing market.
Thank you, Ryan. Very exciting technology, and I think it's quite interesting having both you and Stephen here, and we'll dive into why I think that's the case in a moment. So Ryan, we'll come back to you. I want to return now to Stephen Rossi. Stephen, your technology is very exciting from a different standpoint. And I personally, as an electric vehicle owner, I own a Tesla. I think what you're doing really makes a whole lot of sense here. Of course, electric energy is cleaner, no doubt about that. But oftentimes, one, the source of the energy, and I think Ryan speaks to this, is dirty, right? The source of the electric energy, that clean electric energy, can be dirty. So there's that aspect to today's, I guess you could say, mechanisms for delivering renewable energies to the populace. And then on the second end of things, of course, on the other end, can we sort of reduce the need for sources of electric energy that bear a carbon footprint with those with sources that don't bear a carbon footprint? And so you get into that, and I find it to be very fascinating. So I don't want to steal your technology. Can you tell us a bit more, Stephen, about your renewable energy technology and how it works and what it means for the electric vehicle marketplace?
Sure, absolutely. Well, that is TerraVis by Worksport. The TerraVis has been something we've been working on since 2014. So we kind of started it when we were a little crazy, I guess, to think that far in advance. But our mandate is you don't have to always be the best, which we are, but you should be the first, which we are as well. Yeah. And part of that mandate was to anticipate the forthcoming electric vehicles with the TerraVis. So to define the TerraVis, and I think we might be able to show the TerraVis in action, is a fully functioning truck accessory that is made using, at this time, monocrystalline, but we're exploring amorphous and different perovskite type solar generation stations. So it uses solar panels as part of its composition, and it provides 30 to 40, well, let's say 30% of the average American's daily commute. So the average commute is about 30 to 35 miles. It'll charge about 10 of those miles out of the gate as the first rendition, and we will look to develop that technology further. So part of our internal mandate was to really question, is EV green? And there's been at length discussions on how much greener are they to produce. So what carbon footprint, as Ryan may understand, is there in producing the power, the lithium ion or lithium iron phosphate battery technologies that power these vehicles? And then where is the power coming from? And one of the analysis we've done is that the depletion or the reliance of homes on natural gas is depleted far faster because of perhaps global warming than would have otherwise been anticipated. So now there's this great supply in this natural gas system looking to find an avenue to generate revenues. And we're discovering that a lot of the need for more energy in the grid is being answered by popping up more natural gas power plants. So the ultimate problem is, are we merely deferring the exhaust from the tailpipe of a gasoline or internal combustion engine vehicle to that of a greater smokestack of a natural gas, coal, or oil producing power plant? We all know that hydro and nuclear energy sites are fairly hard to commission and then decommission or service. So the TerraVis looks to answer that. As pickup trucks are becoming more mainstay, with a third or better of the population already in the US driving pickup trucks, 65 million of them, if we can start by providing 30% of the power that they need in our first rendition of this product, what will that look like in a year when we really innovate, or in 2 or 3 or beyond as we move into different types of solar? So the TerraVis will recharge electric trucks. It will also turn current internal combustion engine trucks into 60 million microgrids traveling the US. So they're power for campsites, power for job sites, and power in the event of a natural disaster like we saw in this winter past in the US. Moving beyond that, we're focusing on the core battery system as a freestanding product. So if you don't have a pickup truck and you don't have an electric pickup truck, you could buy our core battery system. And the core battery system's got a hell of a lot of innovation behind it to be used as a mobile battery pack for, again, the campsite, job site, or in the event of a natural disaster. So we've identified, non-violent military applications, disaster relief, and medical applications that are innovations. And I could speak more to the innovation within the technology of the battery pack later. But we're really building out the mobile power microgrid systems, as well as a meaningful charge for the forthcoming Lordstowns, Rivians, Teslas, Hyundais, Fords, GM and Hummers, Atlases, the Hercules, and the nameplates just keep going. So we believe that the Terravis will be a very meaningful source of energy for the trucks, and will become much more meaningful as we really start to innovate. And that, in essence, is the definition of Terravis and its mandate and the problem it's anticipatorily solving.
Great. Stephen, you got into some of this just now, but I want to flesh into it a bit. And of course, I understand the answers here, but for the sake of the audience, does one size fit each flatbed? And I think I just heard the answer, but for the sake of the audience, could you elaborate on, does one size fit all flatbeds? And then what other types of cars can use this technology today? So you've obviously developed that for flatbeds already. Have you already developed it for other types of cars besides flatbeds? And if not, what's the time frame on that? So again, starting first with, does one size fit all flatbeds?
Yeah, so our battery system, and so the battery system is a one battery system for all. It's a modular battery system. But in terms of the cover itself, the solar panel array, it's a bespoke design. So we would have a different SKU for different trucks. For example, the Rivian RT1 would have a 5-foot bed, and that design would be unique. So it'd be a uniquely designed product to connect within those trucks as either an OE or an aftermarket accessory. And we have anticipated many years ago implementing universal microgrid systems by means of universal mounting and folding solar arrays pairing with our modular battery system. And those can be deployed for marine applications, for intermodal like freight and transport, for well, I said intermodal already, so even like containers and trains, to microgrid systems for campsites, bunkies, cabanas, and for any needs you want. So we will end up delving more into universal microgrid systems beyond that of just for pickup truck markets. And another anticipation that we're going to be launching next year that's very exciting for us is micro charging stations. So for fairs and events and concerts, when things become back more normal, as opposed to establishing the Burning Man event with thousands of liters of fuel and generators, the Terravis system could be microgrid systems to power those large outdoor events using clean green energy. And our capacity would be to sell the systems as well as lease and deploy the systems in events or natural disasters. So we would maintain inventory across the globe of our charging stations and our microgrid stations to deploy when really needed on a residual income platform.
That's great, Stephen. One more quick question here before I go on to Ryan. And as I explained to my panelists backstage, everyone, given the nature of this discussion, emerging innovations, we wanted to spend a bit more time with each panelist rather than jumping around between panelists as I usually like to do. So Stephen, sticking with you for one more quick minute here. I think the notion of knocking off a third of your energy spend, so to speak, per day is already a material, meaningful, a pretty extraordinary impact. Can you tell me, though, do you think that we'll ever be able to eliminate the need to plug in your vehicle at all? Will we ever have enough energy captured by something sitting on top of your car that you could avoid that altogether? And if so, how long does it take you to get there?
That's an interesting, it's forward reaching. We'd like to believe that it would be more possible as communities maybe become more compact and people need to travel less. I think that longer travel, I think that would be further reaching to think that we could charge using solar. But Worksport's anticipating charge stations and their parasitic nature in having to be tied to a huge amount of power on grid. So I guess my answer would be a few, multi-part. Number one is I believe that solar, if you do a case study back on when the White House first put solar on it, those panels were just over, I think, 10 or 12% efficient. In a few decades of solar innovation, and the innovation is speeding up. So 1 year of innovation today is like 5 years, 10, 20 years ago. Looking at solar efficiencies over the years, and with so many different hybrid solar technologies like a Morpheus, perovskite, an HGT, I think that we will only become more meaningful in the amount of power we can generate. So we will go from 30 to 40 to 50% indeed. But Worksport's already anticipating the parasitic charging stations in, again, these Tesla superchargers needing massive amounts of powers in cases, for Worksport to launch in the future TerraVis Energy, which would be non-parasitic charging stations that get their power through other forms of renewable energy and not through grid power. So that even when you do charge, you're not getting your power on the other side of the cable from a coal, oil, or natural gas plant, but from a clean green technology. And we're heading that up, and we'll be making some really exciting headway in that market and those fields in the.
I think we lost Stephen for a moment there, but I think we all got the gist. Great. Thank you, Stephen. We lost you for a moment there, but we got
sorry, guys.
That for a couple seconds. It's really fascinating stuff. So thank you very much for that, Stephen, and congratulations on that technology. I want to now, Ryan, return to you, and if we could take a bit of a deeper dive into your technology and what you've accomplished over there at American Battery. First, you've told us a bit about American Battery's technology already. Can you tell us a bit more about, as I understand it, there are two aspects, to oversimplify things dramatically, two aspects to your technology in a big picture sense. One is the renewable, the recycling aspect of your technology, which is on obviously the far side of the process where you're finished with the battery and what happens to the battery after that. But you've also got something at the beginning of the process, which is the extraction process itself for extracting lithium from the environment around us. I'd like to know a bit more about each of those technologies and how they relate. So starting first with the recycling technology, can you tell us what makes American Battery's technology different from the processes that are out there already that relate to recycling?
Yes, of course. And like you mentioned, there's the beginning of a process, usually there's the end of a process, but because we're creating a closed loop economy, we end up on both sides of it. So we are receiving the end of life material and we are producing the new battery metals that go back into new battery cells themselves. So it doesn't end up being a beginning and an end. This really just closes the loop to make these battery metals be used indefinitely. On the recycling front, what we really do differently is many processes today really just use what were designed to be, scrap metal and stainless steel recycling systems. They start off with, very high temperature melting furnaces where they simply melt all the material together. And when you have aluminum or scrap metal, that works rather well. But when you mix batteries in, there are many elemental materials within the battery cell that become very toxic when they're taken at high temperature like that, such as fluorine and phosphorus and sulfur elements really get turned into this toxic air emission. You get particulates of heavy metals that are released in the air as well. And many of those materials end up going in large amounts of water emissions. So you either have to allow those materials to go out as contaminants, or you need to spend on costly systems to then have them removed again from the air and water emissions. And when you do that, there are high value materials in batteries like cobalt and nickel and lithium, but there are many low value materials like iron and aluminum and mixed plastics. And when you simply melt everything together, it then makes it very difficult to separate out the high value from the low value materials. So it really hurts your recovery efficiency. It results in a much larger environmental impact, and it's more costly. So again, my background and much of the team I brought on here the past year, we were some of the initial designers of, the largest battery factory in the world, the Tesla Gigafactory outside of Reno. So we started back in early 2015 and really started when that factory was a patch of dirt out in the desert. And we're part of every part of the design of that facility, the startup of the systems, the commissioning, and the troubleshooting of many of those production lines. And really from learning how batteries are made from a fundamental manufacturing side, how they go from powders to slurries to coated electrodes to dry and press systems to rolls to cells to modules to packs. So instead of actually just melting everything together, we've used that skill set to design what we call a demanufacturing process, where we essentially back out each of those operations in a very automated and high-speed fashion that allows us to get back to separated metals and powders within a matter of minutes without a large amount of labor, and while really preserving the separation of those high and low value materials. And then once we have that high value powder separated out from the rest of the low value materials, that's where we use a custom chemical extraction train that we've developed. And these types of chemical extraction processes can also have large environmental impacts if not done correctly. They can consume large amounts of acids and bases, use very large amounts of solvents and oxidizers. And by removing so many of those low value materials upfront mechanically, we're able to use a much more targeted and simpler chemical extraction train for these high value materials. We've also developed a system where we can actually generate our own acid and base and reagents on site ourselves instead of buying from the open market, where again, those second and third tier emissions are very large for how acids and bases are manufactured today. So by having this automated high-speed system at the front end, where we have absolutely no high temperature operations, even our process heat and our space heat is generated by waste heat recovery and electric heat pumps. We have no combustion anywhere on site. We have near zero air emissions. We've developed a closed loop water system, so no hazardous liquid water discharge. And by upgrading these materials all the way to these rigorous battery cathode quality, every time we sell a recycled battery metal to the market, it displaces the mining of a primary material. And some of the most polluted places in the world are nickel and copper mines. And every time, again, we go through this recycling process, much of our environmental benefit is displacing the need for those very polluting technologies.
Very good, Ryan. Thank you for that. Fascinating and I think vital technology. I'd like to return to Dennis if I can. Dennis, what's BioLargo's path to material revenues, and how far away is BioLargo from material revenues?
Yeah, so we're breaking revenue records already, which is good. We've got multiple assets in the portfolio. We have an odor and VOC product, which has been deployed about 6 years. We clicked off about $2.5 million in revenue last year, which we think is still scratching the surface, right? It's not anywhere what we think it's going to be. But in the portfolio, we have multiple assets coming to bear that are all actually significant. The average ticket is what's happening. We've gone from $50,000 and $100,000 projects that now can move into the $250,000 to $1 million to $3 million projects, right? So that just the ability to have critical mass and raise up that way is significant. The other, of course, is this PFAS solution really represents 3 revenue components. There's a design component, which is engineering. Then there's a construction component, which actually installs these systems on site where you're going to treat infected soil or infected water, like Air Force bases. We're already under contract with the United States Air Force as air quality suppliers. And then there's water treatment, right, where these systems are going to be installed. Anyway, those projects will range at the low end of about $250,000 to the high end is up as high as $30 million. I mean, this is pretty big business. Yeah. And so think about a $30 million project. That means there's a building that was built alongside a well that feeds drinking water to a city. That's what we're talking about. This is a significant installation. So for our company, right, we present this technical excellence for air, water, and earth. And we present an engineered design, which is now patent protected by patent applications in process, brand new innovations, proof of claim, a lot of art. And now we come to the market and we say, look, we can design, we can construct, we can install, we can service and maintenance. But the reality is, to really get big, we're going to need to partner with people that serve those clients already and want to fix this problem. So that's probably big engineering, right? Because if you go to any of these major waterworks, you're going to see a big engineering firm on contract. Those are going to end up being our partners, because that's really how you get to scale. And again, with a global market and what we believe can be the sort of franchise player as the leading innovation in this space for this problem, there's no reason we couldn't see dramatic revenue growth in really near term. Now, we'll be in the field probably in the next 60 to 90 days with 2 of the most significant flagship clients in the world, federal government being one and a major water district being number 2. We're already approved vendors in the system. We're now just really refining the detail of what the trial actually is going to look like. And I always say internally, if we put out the word that says, okay, we're in business, ready to roll, we could get 100 trials. There's more business for this problem than we can possibly meet the need for. So we got to prove it up, show the economic validation. Really, it's an economic validation. How long will it last? What does it take to service it? We already know it works. We already know it's scalable, but we need to show it in the field to scale, and then start partnering with these big engineering firms and get it out to market. So that's our strategy.
Wonderful, Dennis. Congratulations on the progress, and it sounds like there's a lot of progress in front of you. Spencer, do I have time for one more question here?
Yeah, go ahead. We got a couple questions from our chat. We're running over, but that's all right. Go ahead, Tom.
So one question I have for Stephen. Stephen, how close are you to having a commercial product that you can ship in quantity?
Terravis, the core system's coming out first. We're in pre-production prototyping now. We have to go to IPCJ standard testing. So we're expecting by Q3, Terravis solar cover pre-launch and pre-launch website coming soon. We expect these covers to be on trucks this year. Full commercial scale launch. Will pair nicely with forthcoming EVs and the launch of like the Rivians and the Lordstown in early 2022.
That's great.
Yeah,
go ahead, Spencer.
I was going to throw in one from the chat. This is for Ryan. In the extraction sector, how many acres do you actually own and or control? Oh, Ryan's on mute. Oh, there we go.
There we go. Right, so for the recycling side, it's a relatively small facility that's not acreage based. On the primary extraction side, we had about 1,300 claims last year. We've dropped that down to just under 700. And again, that is different types of brine claims as well as surface material. And throughout central Nevada, there are different types of resources we're evaluating right now as well.
All right, I think we're at time, everyone. So Tom, great job moderating. Liked your approach of spending a lot of time with each company. You can engage with Ryan and Tom and Dennis and Steven on our virtual networking platform if you're on that. Guys, thank you all so much.
Awesome.
Thank you, everyone. Great time. Appreciate it.
Great to be here.
Bye.
Thanks a lot. All right, we're running a few minutes over, but that's quite all right because, we roll with the flow here. So our next speaker, I'm going to bring him on right now, Brad Weber, Managing Director of Trading Grounds. Brad.
Spencer?
What's going on? This is the part, Brad, where we mention that you also have a show with Benzinga that is going to be in about,
3.5 hours.
3.5 hours, 5 o'clock Eastern time.
I'll just start talking now, and we'll just talk all the way until 5 p.m.
That's Nicole will get very angry, but
I know.
Do it anyway. All right, Brad. We heard from Anne Marie Band, who was a trader earlier, going through her charts, going through how she approaches things. There's no one right way to do it. So what we're gonna have you do is kind of go through the same thing. Go through your charts. If you're in the chat, you have a question on a stock for Brad, drop it in there. We'll take a look. But Brad's going to go through how he approaches trading these stocks right now. So go ahead and share your screen if you can.
You got it.
And let's walk through your plans here, your strategy.
You got it, man. Thanks for your help. I appreciate it.
Here we go.
All right. Thank you, everybody. Real quick, my name is Brad. I am the host of a new show called Technically Options. We are live every Thursday night at 5 p.m. We talk about options, obviously. I am a full-time trader, primarily an options trader. And what we try to do with the show on Thursdays is we focus on how options trading and technical analysis work hand in hand. I won't spend too much time talking about that. I want to focus on what we have today, but I would invite you out tonight, 5 p.m. Eastern time. More information about that is on the Benzinga Twitter, YouTube page. Stop by and say hello. So what I have been tasked with for this afternoon, we are going to look through, I have a watch list of most of the tickers that were discussed today. I want to focus on, obviously you can see my screen. I want to focus on the ones that have the little green check next to it. One thing I do want to mention as we kind of go through these stocks to lay sort of a foundation on this stuff. If you are new to these type of stocks, what you'll notice is that first off, the volume on a lot of these stocks is going to be lower. Even some of these that are on my list, it's real low volume, in the thousands of shares traded. Anything below 200,000, these ones down here, you can see the volume is pretty low. You have to really be careful with that type of a volume. But more importantly, what I want to talk about first is OTC stocks in general. Now, an OTC stock is what's called an over-the-counter or a pink sheet stock, and it works a little bit differently than what you would with like a Tesla or an Apple, Microsoft, something along the lines of a bigger named stock. An OTC stock, first of all, your broker is probably going to require that you have to sign off on something that basically acknowledges that OTC stocks carry a little bit more of a risk. You might buy into an OTC stock and it not move for days upon days at a time. As you can see with WKSP, you can see that on the daily chart, see these big peaks. That's really common with OTC stocks. What happens is you get a very big spike, and then almost sort of unfortunately, but almost immediately after, you can see that the stock reverses almost right away. Now, I don't have time to go through every single one and pinpoint it, but what I want to say about these is they respond to news really, really well. The big thing with OTC stocks, the big thing with pink sheet stocks that have lower volume, they respond extremely well to news. So that's the primary thing that you want to do when you're trading OTC stocks is you want to have some sort of a system designed that gets you information quickly. Okay. And the reason I say that, a lot of times with these OTC stocks, the spread is real. You're going to have like the opportunity to buy, like, for example, WKSP is trading at 32 cents right now. BLGO is at 0.21 cents. Some of these other ones are even lower than that, 26 cents. The cost of the shares is pretty low. It gives you the opportunity to buy a lot of shares. It gives you the opportunity to, you can get involved with these companies that, I don't like to talk, a lot about how like you can get in for pennies and then, it runs up to hundreds of dollars, because we don't know that necessarily is going to happen. But you really have an opportunity to invest in these companies at a very early time. And that's important to remember. Okay. I'm a trader. I am not an investor. I don't claim to be a long-term investor. We have long-term portfolios for our house and for our family and stuff like that. However, I am, if you are familiar with any of the content that I produce, we are talking very quickly. We're trading multiple times, 10, 15, 20 times a day. That's not what you do with a stock like these OTC stocks. These stocks are designed to be put into your portfolio and then just sort of put to the side and let it do its thing. I've traded OTC stocks before. I've traded stocks like iGen, and I've traded stocks like IPSI and UAPC, and a lot of the guys in our Discord channel, they love trading OTC stocks. However, with OTC stocks, again, you have to remember, you might not see action on the stock for a very long time. So after you kind of get in touch with your broker, because again, you're going to have to get a, it's not like a waiver that you sign, but it's almost like, for example, for Fidelity makes you sign off on a waiver type of agreement that says you understand the risk with OTC stocks. You know that you're taking on, there's a little bit different of a way that the OTC stocks work. Then they turn on the ability to buy these stocks. Not every broker just automatically gives you the ability to buy an OTC stock. So if, let's say, for example, if you're watching this right now and you go on and you're trying to type one of these tickers in and it's not coming up, and you're thinking, well, what in the world? Like, is this the wrong ticker? Do I have something wrong? Two things. First, check and see that your broker actually allows OTC stocks. Somebody in the chat just said that they can't trade OTC, and that is true. There are certain platforms that don't allow it at all. It's not that you have to sign off on something. They just don't support OTC stocks at all. So check and see if they allow it. So that's number one. Number two, if they do allow it, you have to enable it, and you have to remember that you're going to get charged a fee. I don't know personally all of the fees and the costs involved with trading OTC stocks. I know that, like, for example, I want to say Schwab, there is no cost to do OTCs, but like TOS, it's really expensive to do OTC stocks. That's another thing, like with options trading, you want to find out what the cost involved is, because some of them are kind of expensive. And some of them are, I mean, if you're, they cap it out at a certain dollar amount, stuff like that. But when you're playing stocks that are 31 cents, 26 cents, and if you're getting charged, a percentage, or if you're getting charged like a per share fee, you're going to be able to buy a lot more because these stocks are trading lower than $1. So you're going to be able to use your capital a little bit more effectively, but you're also going to have to remember that you are paying fees and you have to add that into the overall cost. So remember those two things. Again, number one, check and make sure that your broker allows OTC trading. And then number two, don't forget that you're going to have to enable it, and you're going to have to also pay like a fee for trading OTC stocks. So that's the first two things to remember when it comes to OTC stocks. After that, then another thing that you have to remember that's really important is that these are long-term holds. These are not going to be, you are looking more down the road with these stocks. Okay. So for example, let me pull up FUV. This was a good chart. They just had, I want to say they had something on FinViz that I saw as like a small little news event. But as you can kind of see with this chart, let me give you an overview of what my chart looks like too, just real quick. I'm actually going to turn off some of this, make it a little bit easier for us. Let's see here. So I'm showing you the daily chart for FUV. The white line here is my 8-day EMA. The green line is the 21-day EMA, and then the purplish, maroonish color is going to be the 200 MA. Now, what I want to say with OTC stocks, I don't want to say that you throw technicals out the window, because I don't think you really ever do that with a stock. Like, I think you need to have technical analysis for anything, really. Obviously, like with some of the hype plays that we've seen, the technical analysis sort of goes out the window. But with OTC stocks, you're not so much relying heavily on technical indicators as you are fundamental indicators. Now, the difference between technical and fundamental, just to kind of give a quick overview, I'm sure we're familiar with it, but just somebody said, Tiger Woods, you must win every stock session. Yeah, I try to harness Tiger's good energy. Yeah, I'm a big golf fan. What you want to do with OTC stocks is not rely so much on technical indicators. Technical indicators are moving averages, volume, weighted average price, other Fibonacci retracements, things like that. Any sort of charting skill that you would do is what technical analysis is. What you do focus on a lot is fundamentals, and fundamentals are earnings per share. What's the balance sheet of the company? Are they making money? Do they have a product that's reliable? Do they have a product at all? Are they in the developmental stage? Do they have like something that's going to be able to, can you see and can you understand what the company is trying to do through their product? That's what you focus on a lot more with OTC stocks. Now, with that being said, FUV, for example, is a non-OTC stock. This one would be, one that you could trade on any platform. It is a regular NASDAQ stock. And one other thing that I wanted to show you that I just kind of remembered that I jumped over. Let me get back onto an OTC. Okay, so BLGO, BioLargo, which was one of the companies that was just on. What I want to show you here is they do not have extended hours on OTC. Okay, so that's something to keep in mind as well. OTC, just like options trading, options are from 9:30 till 4, and that's the same thing with OTCs. There's no after hours. There's no pre-market. They trade just from 9:30 till 4. So keep that in mind with your trading. There's no after hours trading on those. There's no pre-market trading. Somebody in the chat said, Tyler says, "Can you be any more amazing?" Tyler, I really appreciate that. No, I'm just here to provide what little information I can. I'm grateful for that kind words, and I'm grateful to be here working with you guys and serving at Benzinga. Somebody said ABML breakout. Can you break down the recent ABML breakout? Are we talking about this right here? Yeah, somebody else said. We'd love to hear breakdown the ABML breakout. It was also coincided with trillions of OTC shares bought in January, February. Okay. So I'm assuming then that we're talking about this breakout right here. So if we look at the consolidation on this stock, oh, that's unbelievable. If we go back here, let's go to the 1 hour. Okay. So you could see everything. The consolidation here is unreal. And then I'm assuming that we're talking about this section right here as the breakout. But again, as we were just saying, we get a volume spike. Where did it go? Where did it go? We get a volume spike right here. Okay. Now, another thing I use too is I use an advanced volume indicator. See these little green bars right here. Oh, and another thing too, my green candlesticks are blue. I know people think it's like strange that I do that. But I just don't like staring at green and red all the time. So I change colors of my candlesticks a lot. So all you have to remember is the blue is going up, the red's still going down. Same difference. Doesn't matter the color, whatever you want to use. I also use an advanced volume indicator through TradingView. And as you can see, there's a couple of days where the volume, the green bars represent abnormal volume. Obviously, on this day here, there is a huge amount of volume increase here as well. This right here, I think is 52.26 million volume. ABML right now is at 5.25 million volume. That's a pretty substantial jump. You could right here is this, like, I want to talk about this area real quick. Let me draw a box around this so you guys know where I'm talking about. Right here. See this little area of consolidation? That's important to notice because you get almost right at the top here. You could see that there's an attempt where it's trying to run and it automatically gets smacked right back down. But then after that, you can see that there is this little area real quickly of consolidation. Okay. Typically, when you see a consolidation period like this, something is on its way. Okay. And so what you would want to do is you would want to recognize real quick this channel. Whoops. You would want to recognize this channel right here. You would want to pay attention to that. Whatever it looks like for you. I am a big support and resistance guy. So I would be right here. And these are going to be your levels right here. This little channel, let's just call it that right there. That's your channel. Because you would take it from this candle right here, this one afterwards, because this obviously is an immediate reversal. What we actually kind of even see here is this little right here. This is a representation of like see how this right here and then this candle right here are very similar. That's almost like a false breakout right there. We get a little flat line, bounces off the same bottom support twice, trades sideways for, what is that, like 7-8 days. And then right here, it breaks out of that top. Once it gets past this level right here, it's gone. Okay. That's a very important area to recognize when you are trading any type of stock. You are looking for breakouts. Okay. You are looking for, okay, so it tried here to get up, it tried to go above $1.60. It failed immediately. It settled around this little range right here. And then this candle gets us our breakouts. Okay. You have a new high. You have basically you are in a range where there's nothing to stop as far as like a resistance area. This thing right now is running on pure momentum. It's running on pure buying power. And you can see you get 2 days of volume with unusual activity where there's a large amount of buying. You get 1, 2, 3, 4 days of solid buying. It goes to a peak of 488 at that one day. And then you can see you get your first candle and it's 3 days in a row of down, 3 days up, sideways, and then ultimately it settles back down. Okay. So that's what we want to look at when you're looking at a breakout stock is, first off, where are your support and resistance levels? You know, that's with any type of stock that you need to know support and resistance. I use also this little volume indicator over here as well. This is another good tool. If you're having trouble trying to draw support and resistance, if you're having trouble finding support and resistance, a good thing to look for is a volume, like a fixed volume range on TradingView. If you go into the volume profile, I have the visible range turned on. And what this does here is it actually gives you the longer the bar here is, the stronger support or resistance should be. Now you can see again, and it coincides with where we were consolidating, this range right here in this this volume bar. You have really strong support at this level. Okay, so in order for it to break out in either direction, it's going to have what? It's going to have volume. It's going to have a push either way. Now with this one, for example, this is a breakout to the upside. This is a lot of buying that you're seeing. So in order for this to get broken through, you need to have some volume. And as you can see, as the price increases, now these volume bars increase, or they are coinciding with price. Okay, so with a regular volume down here, you can see that it goes day by day. With this fixed range volume profile, it's going by price. So the reason why I turn this on is because it gives you a little bit of an understanding how much support, how much resistance do I have in that specific area. It kind of helps, you know, if you don't like say for example, if you have a tough time with trying to find support and resistance, or let's just say for example, you don't really like to get into charting too much, and you just want to learn a little bit more about you know, how I can trade. Somebody said TOS charges $6.95 for OTC and pink sheets. That's good information to have. Excuse me, and that is true. I used TOS back in the day. They are very expensive for OTC stocks, so keep that in mind. If you're trading OTC on TDA, on Thinkorswim, TD Ameritrade, the cost involved with that is pretty. It's expensive, flat out expensive. Now, I will say this, and this is, how do I want to word this? This is not always the case, okay? If you start to trade OTCs and you become like a big player in the OTC world and you're buying a lot of OTC stocks, you then have the opportunity to go to TDA and say, hey, listen, I'm spending a lot of money on OTC fees. Can we work something out to where you give me a flat fee? And again, that's not like a guarantee. I'm not saying that, and I'm talking, you've got to be into the millions and millions of shares traded on OTC stocks. You want to, you don't want to like make your first trade for an OTC and call up your broker and say, hey, listen, I traded 1,000 shares. You know, I want to get a deal on OTC fees. That's not going to happen. You've got to have some volume when it comes to getting these fees. Don't think necessarily that you're going to get them waived either, because that's not always going to happen. And honestly, some brokers, it doesn't matter how much you trade. They're going to charge you whatever their fee is. But just keep that in mind that you might be able to. Once you start accumulating a little bit of volume with these OTC stocks, just keep that in the back of your head. Call your broker and say, listen, I've spent $1,000 in fees with you guys now. Is there a way that I can get some of these fees reduced? Not saying it's a guarantee that it's going to happen, but listen, it's at least worth a shot. All right, somebody in the chat said, can we check out the last 2 days? Yeah, let's take a look at that. All right, so on what's interesting too is that the bounce off of the bottom support level too, because as we go back here, remember we drew our bottom support off of this candle right here, this red candle. Look at what happens here. We get almost a bounce directly off. Actually, those two, the wicks touched both. This candle right here is a reversal candle. If you're looking to improve your knowledge of charts and you don't really know where to start, learn candlesticks. Get familiar with when you see a pattern like this of 4 days in a row of red, and then you have a reversal candle like this. That shows you that something big is coming. That's a clear sign of a reversal. This would be what's called like a spinning top candle. You can see that the price was tried to be pushed down. Ultimately, the buyers won. Then what happens on the next day? Huge candle, 8.94 million volume. I think that's plus 54% above average. And then you get, what are we doing today? Yeah, not too bad today either. So here's the 1 hour chart. Again, here's your bottom support. Support means you have, there's a decent amount of volume in that area right there. So you've got a good bottom here. You can see that it's stair stepping down, 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 big red candle, little consolidation, some more consolidation right there, and then boom, we're hit with a big red, or we're hit with a big candle, showing you a pretty significant reversal that volume is coming in. People are buying the stock. Now, somebody, if anybody knows, I personally don't know. Did they have any news? Did they have an event? I'm seeing some of these stocks as I was looking through the charts. I'm seeing a lot of these stocks. They reacted to the Benzinga news that they were going to be on the conference. I saw a couple of spikes on that. Let's see, anything else here? The news was today. No news. Somebody said people are suspecting short sellers closed, heavily shorted. Looks like they were covering the shorts. Okay, so there you go. That's another example of what it looks like to see. Let me turn this off again. This big red candle, shorts covering. Hey, that drives the price up. So evidently something's happening. Looks like they were covering the shorts. So if you're, again, you're in at this stock, what would be? This looks like it's opening down in the 12-cent range. Oh no, there was some more back there. Okay, so you could see, like look at, we go from, this is a long area of consolidation from, what is this? Basically January of 2017 all the way until last December. We traded in a very, very small range. And then you get here. I mean, you could see it doesn't take long to recognize this chart, what's going on here. We started trading in February of 16, and the bulk of the volume is now here. But also the stock is trading at $1.51 now, with an all-time high of, what is that, $4.92. Can't really look at anything before 2020. Okay, good to know. I was looking purely at the charts with these guys. So that's good to know. Let's go back here one more time. I want to show you. So see how, where'd my 200 go? I turned my 200 off. Oh, sorry. Let me turn the 200 back on real quick. 200, 9200. That's not going to work. So here's your another area to look at too. See how, now again, you have to remember that the MAs are like, the stock doesn't know that the MA is there. Like it's just an indicator for traders. But do you see how the 200 bounced off that, or I'm sorry, the stock bounced off the 200, like almost like perfectly. Okay. So again, you can't rely completely on technicals. You can't rely on, this is, I'm primarily a technical trader. I am not, when I trade, just to give you kind of like an overview real quickly of what my style is, I am a quick 10, 15, 20 trades a day. I am capturing small profits. I do a 8/21 EMA crossover. I'm buying in and out of stocks a lot, multiple times a day. That's how I'm trading. Okay. And so I rely heavily on technicals. I don't really focus a lot on fundamentals. I think right now also you can see a lot of stocks are not responding to fundamentals very well either. However, I think OTCs are disconnected from that. Let me just be clear about that. I think OTCs respond. They don't respond perfectly. Nothing is perfect. There's not going to be one strategy. If anybody ever tells you that they've got the strategy in order to trade and make money and never lose, they're lying to you, because there is no such thing. That does not exist. However, we use technicals, we use fundamentals in order to increase our success rate, in order to increase our odds of being a good trader. You have to look at fundamentals with these OTC stocks, but don't turn off all your indicators. If you are a technical person and you're saying, okay, I've never traded an OTC stock before, I'm going to try now. Don't automatically just turn off all your technicals. This is a perfect example of it right here. See what happened? That's beautiful. That bounce off the 200 right there. I mean, that's it. Even going back all over here, you can see what the trend is happening. But what you're actually witnessing right now here is this is a really good consolidation period. The 8's trending up. The 21 is on its way up. And overall, the 200 is sort of, it's trying to find what it wants to do next. But what do I mean by the 200? I'm sorry. So the 200 is the 200-day moving average. I use moving average indicators. If you are not familiar with what those are, basically what they do is they give you an overview of what the stock has been doing based upon the time period that you choose. Again, so this is the 200-day. This is the trend. A 200-day moving average is going to be one of the more general indicators that most traders have on their chart. This gives you a picture of what the stock has been doing over the course of 200 days. It gives you a picture of what the bigger trend is. And in this situation here, you can see it's actually showing you a level of support. It's showing you perfectly that the stock bounced 2 times off the 200-day MA, giving you an idea that when you are doing support and resistance down the road, the stock responds to the 200-day. Now, again, remember, the stock doesn't know that the 200-day is there. The 200 MA is only for traders. But traders use those things to your advantage. We use indicators as a means of being a better trader. Again, this is not, it's like the equator. Like there's not like this is just there for you as a trader to work. But again, you can see how the stock responds to it. This gives you an understanding that, yeah, I can use this as an indicator, as specifically a level of support with a stock. I'm not talking about this stock exclusively. The 200 MA works on any chart. I typically use the 200 on the daily and the 1 hour. Lower, again, if you're trying to get a bigger picture of what's going on with a stock, you want to use at least like a 50-day moving average. If you're trying to get a shorter term, if you're trying to make quick moves, you don't want to bother with anything over like the 30-day. I use the 8-day and the 21-day. I use the EMAs. EMAs are exponential moving averages. Exponential means it does a little bit quicker. A general moving average is going to be a little bit. Now, moving averages are lagging indicators. That's another thing I want to say. Moving averages do not tell you the future. Moving averages do not like these numbers that you're seeing here. These levels are past. Okay, they are not predicting the future. They are just trying to help you with, and I know that, like, if you are trying to develop a technical analysis, again, I am huge on technical analysis. Every trader that I work with, every person that I'm mentoring, I am trying to get them to understand technical analysis, because I think that is one of the top 3 things that you can do as a new trader is learn technical analysis. Number 1, I think, is protect your capital. Make sure you have money to trade with. Depending on how much money you start with, protect that capital. But technical analysis is very important, and it's included on OTC stocks. It's included on these lower volume stocks, but it's not going to be as heavily, like, you're not going to be able to use technical analysis strategies on an OTC stock like you would on, like, I play Tesla options. I scalp Tesla options. Those are my big plays. I play a moving average crossover. When the 8 crosses up on the 21, that's an entry for me. I'm exiting on the first red candle, or I'm selling into, like a depending on what stock I'm playing. Like on SPY, I trade SPY options all day. I'm collecting 10 to 30% multiple times a day. I'm trading a moving average crossover strategy. I don't care about fundamentals. Let me rephrase that. I care about fundamentals. However, that's not a part of, I'm more focused on technicals. But when I am trading OTCs, when I have traded OTCs in the past, fundamental analysis, making sure you know the company. Somebody just said, I'm a fundamental guy. So after buying the technical breakout, at what point should you plan the exit? 2 things on there. Number 1, let me show you real quick on this one right here. Okay. So if we were playing this stock and you got in, let's just say you were in the consolidation period and you rode this to the top, I'd be out on the first red candle. That's typically when I'm playing, like on a, let me show you here too, if we can get one. Yeah, so right here, actually the 8-day crosses up the 21. I'm in this until I see any crossover. I'm entering right here, and then I'm exiting right here. Okay, so that is, I'm going from here to that cross. That's my range. So yeah, I'm missing the peak. However, well, to be honest, in this situation, I'm probably leaving at that candle right there. That's a decent That's some large. Yeah, you can see down here. See this? Oh, you know what? It's on the volume is showing me that there are people. This right here. Yeah, there we go. This candle right here is showing me that the volume is leaving. So I'm leaving at that point. I'm leaving when I see a candle that it's very clear. And then you can even if you like, let's say, for example, you didn't leave on this guy right here. This is a large volume of selling. Okay. See these two little guys right here? These two candles right here, they look so sad and small that nobody won here. These are just, the sellers and the buyers came in, they beat each other up for a while. And then at the end of the day, they were just done. This shows you, this would be your last chance to sort of, again, before you get into a real sideways trading. So to kind of circle back around real quick, and I'll pass it over to Spencer, developing your system as far as trading is important, because once you enter in, you need to know already when you're exiting the stock.
Couldn't have said it better. You don't go in without knowing how the hell you're going to get out. Guys,
Exactly.
Brad just spent like 35 minutes talking about the same stock. If you liked this, you just tune into Brad's show, right? 5 o'clock Eastern time every Thursday, right here, youtube.com/BenzingaTV. Go to his website. The link's been up for like the entire time. Tradinggrounds.live. He's at Trading Grounds on Twitter. Brad, fantastic stuff. I cannot believe you just spent 35 minutes on one stock, but you did.
I can't either, man. I had like 20 stocks on my list I was going to go through.
We'll save that for 5 o'clock tonight. How about that? We'll save that for later. All right. Brad Weber, Trading Grounds. Thanks a lot, man.
See you, Spencer.
All right. We're on time. We're back on time, baby. That's how we do things here on my track. I don't know what's going on that other track over there, but on my track, train runs on time. So if you haven't already, guys, go ahead, smash that like button, show Brad some love. Let's move on to our next presentation. I'm gonna bring on our speaker right now. Platinum Group Metals is the company. Our Michael Jones is the CEO. How are we doing today?
Just great. Thanks for having me on.
Go ahead and share your screen if you have a presentation, which I believe you do.
Sure.
And I will give you the floor, and you can walk through this, and I'll be watching the chat. Chat, if you have questions, I know we had some more stuff for Brad. Save it for his show later tonight, but drop your questions in for Platinum Group right now if you have them, and we'll get to them if we have time. So the floor is yours.
Well, we're going to talk about some exciting metals that we're innovating with, and we have a huge reserve of these very technical metals. So talking about technical trading earlier, this is a very fundamental situation, but I think a lot of you will be interested in the charts on some of these metals. They've been performing extremely well, and it's a very exciting time to be in Platinum Group Metals, the name of our company. I'm Mike Jones. I'm the CEO and co-founder of the company. I'm a mining engineer by background. Standard disclosure slides. We will make reference to some scientific information, caution to U.S. investors, and forward-looking statements. So our title of our presentation is Innovation with PGMs, and we've got a full spectrum of these Platinum Group metals: platinum, palladium, rhodium, gold, and we've got a very large mine of 19 million ounces of these rare metals that is ready to go into construction. The other half of our business is a lot of what we're going to talk about today is Lion Battery Technologies, and this is a company we founded with one of the largest mining groups in the world, Anglo American. And the two parts of our business are interesting because they are very related. Again, we have this large reserve of metals that are very rare, and they do very special things. And we created a company to find a new thing that they can do, which is to put them into a lithium battery. So the interesting thing is we're working on new technology to put PGMs in lithium sulfur and lithium air batteries, and most people would acknowledge that that's the next generation of cutting batteries, where you really get a stair step up in power to weight. And we're doing research at Florida International University and have a number of patents in this regard. But just talking about PGMs in general, a lot of people might not know that they actually own some in the tailpipe of your car. So an internal combustion engine's got platinum, palladium, and rhodium in the tailpipe to clean up the emissions. It's part of their special chemical characteristic that they have. Even something like a plug-in hybrid will also use these metals because the emissions still have to meet standard. The same thing for an electric hybrid, for example. And a lot of the electronics in these cars also use PGMs because of their special properties. Moving forward, there's a lot of excitement now around hydrogen fuel cells, and they use platinum and palladium as well in reforming to make hydrogen. So these metals, no matter where you turn in green transportation today, they have a role. And it's because they're a special catalyst. They actually make reactions more efficient and make them happen, which is why they're part of transportation today. As I mentioned, the catalytic converter, you might see some news recently that people are stealing these off the bottom of your car. Please don't take this as an instruction manual of where to go get one. It's underneath your car, and it's been around since the 1970s, and it neutralizes the harmful gases. This has been in a lot of news since Dieselgate, where VW was caught scamming the emission standards. And PGM loadings have become higher and higher in every car, which is part of the reason people are out there cutting these off cars. The demand for palladium and rhodium particularly have really been driving. And we've seen palladium just the other day, this slide says $2,800. It's well above that today, and hit an all-time high, in fact. And rhodium's trading at an amazing $28,000 an ounce, truly a precious metal. So the next generation of transportation, though, as I mentioned, either battery electric or hydrogen fuel cells, again, PGMs play a role here. In the proton exchange membrane, they're important for separating hydrogen and oxygen to make that go. And our work with Anglo American is actually looking at putting these into a battery to make it more efficient. This is a very complicated slide, and you're welcome to go to our website, platinumgroupmetals.net, to have a look at this in a little more detail. But it's a forecast by Matt Watson in California, Precious Metals Management, looking at what's the forecast for powertrains going out to, say, 2050. And he sees about 33% battery electric vehicles and about 4.75 terawatts of new batteries that are needed. So PGMs are critical for this market because we still have a large hybrid component. We still have diesel and gasoline engines all at the same time as battery electric vehicles, and all of these, as well as fuel cells, can use PGMs. I'm currently in Johannesburg, South Africa today. I'm a mining engineer, and we're working on the final construction plans for a very large new mine in northern South Africa. It's palladium dominant, which is great because it's the more valuable metal compared to platinum. And the deposit's very shallow and can be mined by bulk, large-scale mechanized underground mining. And as I mentioned, it's been great to be dominated by palladium. This metal has really moved steadily upwards, and our basket price of the metals that we're going to produce has moved up sharply from $1,425 when we did our feasibility study all the way up to $2,600 US an ounce now. Interestingly, rhodium only 2% of our basket of metals, and yet it produces over 10% of the revenue. We have some great partners with us on this mining venture, including the government of Japan, JOGMEC, and Impala, which is one of the largest producers of PGMs in the world. And the feasibility study was completed by independent engineers. So these are not our numbers, they're our independent engineering numbers. And they put, at current prices in the sensitivity, they put the value of the project at about $2 billion. We own 50% of the project, so our value would be about $1 billion on a net present value cash flow basis, and that's at an 8% discount rate after tax for the financial folks. It does require $582 million to build it, and we're in the process of putting that financing together now. A very impressive project internal rate of return at 32%. And one of the reasons we're interested in Cleantech is because of the life of our mine. Our initial proven and probable reserves is 45 years. So we won't get to the end of this ore body in the current mine plan until 2066. And we are looking at kicking off our construction this year with first production in 2025. I just want to talk briefly about Lion Battery Technologies. As I mentioned, it's at Florida International University. And we all know the challenges of battery technology. They don't run long enough. They're not fast enough charging. They cost a lot. battery life is relatively short, and that's why we only see about 2% electric car adoption. This is a chart some of you might know from a company called QuantumScape that recently went public. They have a $15 billion or so market cap. It's a very good slide that we borrowed to be able to show where all the different lithium-ion chemistries sit. But the real stair step up in battery power is moving into a different chemistry, lithium sulfur or lithium air. And lithium air batteries are actually the only way to get a battery with as much power per unit of weight as gasoline. We're changing the fundamental structure of the battery, and I don't have time to go into all of this, but a typical lithium-ion battery has lithium going back and forth between the anode and the cathode. What we've done in lithium sulfur is change that cathode to be carbon nanotubes and PGMs. And a lot of people think PGMs are too expensive to go into a battery, but in fact, you replace a lot of nickel, manganese, or cobalt in the conventional battery. Our technical side of things is well published. There's some great technical papers out there for the scientific folks of the patented technology that we're using here, putting PGMs into the battery. Lithium air batteries, we're actually putting tiny grains of platinum and palladium inside the carbon nanotubes, and you can actually see this in this photograph. And the thing about lithium air batteries is the power to weight ratio can go up to 1,700 watt hours a kilogram. That compares to today's Tesla at 247 watt hours per kilogram. So you're more than 7 times the power to weight ratio. And this is why we're so excited about this technology. Our patented innovations, we've recently announced 2 patents and another one we're expecting very shortly. And we're seeing 6-fold increases in capacity and more than double the cyclability of these batteries using PGMs. So we're very clear that these metals are having a material impact on how these batteries are performing. Lithium sulfur is actually a little bit easier. It's got an energy density potential of around 700 watt hours a kilogram, so about 3 times the Tesla battery. And typically this battery, again, wouldn't cycle very easily. But the PGMs play a special role in how the cathode works, and we now have batteries cycling very well. So again, we're very convinced, and this is the subject of our next round of patents, that the PGMs are playing a very important role. In terms of costs, this is quite a complicated slide. Again, it's in our main presentation, but it just shows the power density in the green line here and the potential we've been talking about for lithium air and lithium sulfur. The cathode in a typical Tesla Model 3 battery, the NCA, is somewhere around cost of metal in there, somewhere around $4,000 to $5,000. That's the factor that everybody forgot when they said PGMs are too expensive. If you thrift out the other metals, PGMs can play a role cost competitively. And in a typical lithium sulfur battery at a typical car scale, we're looking at around 10 grams of PGMs in our target chemistry. We are a public company. We're listed on the New York Stock Exchange.A under symbol PLG. Share price is roughly around $4 US, 480 US. We have a limited number of shares outstanding, 74 million shares, and we're supported by some really great shareholders. So Hoskin Consolidated is a very large fund in South Africa, diversified investments across coal mining, buses, hotels, and so on. And Franklin Templeton, many of you might know, one of the longest standing asset managers in the US and a great supporter of ours of over a decade. And Liberty, which is related to the insurance company in Boston. We're a member of the S&P TSX Small Cap Index, but most of our volume actually trades on the NYSE. We do have some debt, which we've been paying down. In fact, this slide can be updated slightly. We've paid that debt down further. And we do have a convertible, but it's not due until next year, and it's well out of the money. So we think that there's very good value in our mining project, and we think we have a very interesting technology play as a fundamental player with the metals that are required for clean technology going forward. So maybe I'll leave it there and see if there's any questions.
Yeah, question for you, Michael. And I'm going to throw you some bait. You either take it or not. But are we entering, or I guess are we in or are we entering a commodity super cycle? And if so, how does that impact your business?
That's a great question. And, it depends on your view of the world, right? I mean, if the world's going to stay in some kind of COVID-based malaise of pandemics and everyone's going to stay in their basement, then we're probably not going to have a commodity super cycle because our demand will be modest. If you think that we're going to emerge here as a confident world that's going to go do things, I personally think that there's going to be a pent-up energy of travel, purchases, expenditure that we've probably never seen before. And personally, that's what I think is going to happen. And, will that kick the world into a 7-8 year typical commodity cycle? I think so. And I do think that, essential metals have been, undercapitalized probably for about a decade. And, we see things like, people talk about Dr. Copper, where copper is showing us that the world economy wants to go. It's usually a leading indicator, and it's doing that now. And my view is after 30 years of being in the business, that, as I say, we're very undercapitalized, and there's going to be a supply problem in a lot of these essential materials.
I give you a lot of credit for taking that question, because I wasn't sure if you were going to take it or not. Sort of a loaded question. I guess we'll know one way or the other in like a year. It'll be obvious in hindsight whether we were in one or not. But you can't really go too far into the metals space without stumbling upon that question at some point, I imagine. Do you get asked about that? Do you get asked about that a lot?
Not so in such a macro point of view. I think the other relevant point is energy transition, right? And that may have come up with some of your other speakers around clean tech. I mean, the whole idea of pivoting our way of using energy and going into things like battery electric vehicles, that creates a whole new demand suite on metals, which, quite frankly, the underlying metals aren't prepared for. I mean, that's why we're seeing palladium at $2,800 an ounce. That's why we're seeing copper at over $4. That's why, nickel's probably the next one to go, is because if we're going to make this energy transition, we need a lot more of this stuff that's involved in those technologies. And I think, a lot of people are right now as investors focused on the technology end of it, but it's a great opportunity to go one step down and think about the fundamental materials that are going to feed into all that technology.
You made a great point. I mean, these commodities, frankly, whether it's platinum, palladium, or others, have just run so hard. And there was also some like other things going on in like the silver market, for example. Like, just like, what do you make of just the massive rally we've seen in metals, but really a lot of commodities in the last year? A lot of that maybe having to do with the pandemic.
Well, it's coming out of the pandemic. It's anticipating that, and it's saying that we just haven't put money into this in a long time. So the number of projects that you can turn on, and let's face it, mining has not been the sexiest thing in investment for quite a long time. I mean, if I ask somebody half my age to say, name a mining stock you bought, they'll look at me like I come from outer space. And yet they're perfectly happy to pick up this thing and say, I want this to work. Well, inside of this, there's a whole bunch of stuff that we got to go get, right? So I think that opportunity of just thinking that one step further that says, what do we actually need for all the things we want to do?
Yeah. Here's a question from Brad Moore. Where does the supply of rhodium come from? I'm assuming.
Good question. So the almost entirely from South Africa, where I am right now, and it comes from a particular layer. It's about 10% of the metal balance in a particular layer called the UG2. It's about 4 feet thick, and it runs around the edge of the complex that's sitting about 100 kilometers, 60 miles from me right now, and that's it. And it's a byproduct metal. So unfortunately for Mother Earth, there's only one place it comes from, and it's not even a core metal. It's a byproduct of mining other platinum and palladium.
All right, Michael Jones, you see it on the screen. He's the CEO and the co-founder of Platinum Metals Group, ticker PLG. Thanks so much, Michael, for the time.
My pleasure. Enjoyed it. Thanks very much.
All right. It's 2:28. We got 2 minutes left here before our speaker, our next presentation. I wanted to mention a couple things. First, as I'm giving away a lifetime subscription to Benzinga Pro and a couple of our newsletters, all you have to do is go to the link, go to the screen that I'm going to bring up on my screen right now. There it is. And answer these surveys / questions. Slido.com, SLIDO.com. Enter the code BZ Cleantech T2. We got a few questions. Some more trivia, others more survey. Right? This one's more of a survey. Full disclosure, I did answer energy storage as far as the sector that I'm most bullish on this year. That is my take. But we got a few others up on there as well, right? Some trivia. What is a 50-day moving average? We went over this with Brad. If you're watching with Brad, you should know the answer to that, right? Name that chart pattern. Don't say W, because that is wrong. All right. Couple other things. I'd be remiss if I didn't mention that this is but one of many Benzinga events that we are putting on. Like everyone, we've pivoted to virtual, and we've just said we're doing a lot more because everyone has been at home over the last year, and there is a desire for virtual events. So go to benzingaevents.com. Our full schedule is up there. We have a cannabis conference, a big cannabis conference up in June. Our next small cap event is in May, a few weeks, I think like 3 weeks from now is our next small cap event. So check it out, benzingaevents.com. You get the full breakdown, the full schedule of all of our virtual events for the rest of the year. Okay, it is 2:30. Let me bring on our next, or I guess I'll bring on our moderator for our next fireside chat. I'm going to introduce him, Thomas Ortiz, who is counsel. Wait, there we go. He's up on the screen there. Thomas Ortiz, welcome.
Hi, Spencer. How are you?
Good. So yeah, counsel for Zuber Lawler, and you're doing a fireside chat. I will let you introduce your speaker, somebody who I've also had the pleasure of speaking to.
Well, thanks a lot. Let me get right to it. We got a great topic for our fireside chat, and not a lot of time to cover it. So let me get things started off by introducing Norman Anderson. I'm a big fan of Norman's. Norman is chairman and CEO of CGLA Infrastructure, Inc. He focuses on specific individual projects across the US and globally. And that gives him a unique sense of both demand and where the puck is going. He writes a regular column for Forbes. He just finished a book, Vision, Our Strategic Infrastructure Roadmap Forward, and it actually highlights a number of themes in this event, especially the digitization and electrification of infrastructure. Norman Anderson, welcome.
Hey, nice to see you, Tomas. Good to be here with you.
Norman, let's jump right into it. Traditionally, infrastructure has been viewed as a fairly stable sector, but that is changing due to technology and renewable, sustainable energy. What are the changes we're seeing in the infrastructure sector?
Well, I think the changes are giant. I mean, you mentioned stability. For me, infrastructure was always the foundation of the economy, something that you build with concrete and steel. Infrastructure going forward is going to be the brains of the economy. It's going to be silicon. It's going to be digitization, as you mentioned, and a tremendous amount of electrification. If you just listen to the Biden commitments from this morning in the environmental conference, we're going to need 10 times as much renewable energy in 9 years as we have right now, 10 times.
That's amazing. Well, let's circle back a bit and talk about small caps and businesses and companies, I should say. When you're looking at companies and how they may impact this sector, what are you looking for?
I think the first thing I'm looking for is a real good sense. Do they really understand the sector that they're trying to get involved in? Because it's changing, as you know, we've been talking about, it's changing dramatically. Right? The previous speaker was talking about rhodium, advanced metals. What we're seeing is that a lot of people understand where the puck is going, as you mentioned when you introduced me. Others not so much. And one of the things that, for instance, if I look at some of the stocks that people are recommending, they recommend solar stocks, hydrogen stocks, et cetera. I want to know how the electrons are going to get to the people. And that's transmission lines. And we haven't, just to give you a sense of the problem here, a friend of mine went bankrupt 2 years ago after working for 10 years trying to bring electrons, wind electrons from Oklahoma and Texas to the East Coast because he couldn't get rights of way for the transmission lines. In the last 40 years, we've built 3 ultra high voltage DC lines, and the Chinese built 12 last year. So there are some real interesting choke points rather than simply supplying the market. Look at the market analytically and figure out where the opportunities are.
And what companies have you been looking at that are disrupting, so to speak, the infrastructure sector?
Well, you have a number of really interesting companies that are participating in the event today, like SinglePoint, American Battery, Worksport, companies like that who have figured out where there are really interesting niches. But the other companies I look at in terms of transmission, as I mentioned earlier, are companies like Quanta, companies like MasTec. But I bet you, as we move into this really disruptive period, you're going to see whole new kinds of companies emerging. You know, one of the things we've been talking to people, a lot to people about, is 5G and putting 5G posts on the entire U.S. interstate highway system, creating an end-to-end autonomous vehicle speedway built on electric trucks with hydrogen batteries. You know, you think about something like that, and all of a sudden you think about advanced manufacturing, advanced agriculture in this country, all sorts of opportunities for clean manufacturing. So everything's going to change. We're going to live in a different world in 10 years than we live in right now.
You look at companies like SinglePoint, for example, you mentioned it earlier. How do you see a company like SinglePoint impacting the infrastructure sector?
I think companies like SinglePoint are really interesting because they're going after how you think, how you live in this sort of new renewable energy environment. One of the things we think about is how does an individual investor invest in a wind project? How does an individual investor invest in a big solar project, industrial solar project? How do we get our pension funds investing in those projects to really bulk up? And if you're talking about 10 times the amount of renewable energy that we in 10 years that we have right now, that's a real step change in terms of where we're going. So a company like SinglePoint is well positioned to do that. And I want to know, for instance, what percentage of my energy that I'm buying is renewable energy and what's not. And no one tells me that right now. It'd be really interesting for me to influence the experiment in terms of driving increased renewable energy production.
Company like American Battery, technology company, it seems to me, and this sort of sits with Mr. Jones said earlier today, just before us. What do you see how do you see a company like American Battery impacting the infrastructure?
So for me, a company like American Battery is super interesting. The idea that you're going to, recycle battery metals is phenomenal. It actually brings advanced manufacturing back to the U.S. as well. And one of the biggest issues I think we're going to face, and where the Biden administration is going to try to make a contribution, is how do you bring rare earths? How do you produce rare earths in this country if it's possible, or bring rare earths from Canada and Brazil, sort of our normal allies? We see a huge market in that area. That's the advanced manufacturing supply chain. As you know, as our friend earlier held up a cell phone, everything comes from overseas, doesn't have to come from overseas. Really interesting opportunities, especially if we're talking about leading the world in clean tech rather than being pulled along gradually.
Is that where you see us moving in the next 10, 15 years?
Absolutely. I mean, I see the country changing, as I mentioned, dramatically. Goals are pretty incredible between now and 2030, the ones that were announced today. And that means a complete change in our manufacturing. But one of the things that's really interesting as you think about it is it's no longer kind of like a break on our productivity. It's actually where innovation comes from. It's where productivity actually comes from. The digitization and electrification of our economy is not just clean, but it's actually more innovative and more productive. And it's going to allow us to design a future for ourselves that's going to be way more interesting than the future that we've had for the last 100 years. That's essentially been driven by the combustible internal combustion engine.
Have you looked at any other companies with that in mind, keeping in mind the infrastructure sector?
Well, I think there's a huge number of companies that are fascinating because they change how we deal with our environment. They provide Synaptics is a company that I really like simply because it allows us to more intelligently and easily interface with our environment. Everything that we do increasingly has to do with consumers being aware of what they're using and being able to measure how they're benefiting, and companies, actually infrastructure companies, telling you what the benefits are of their product for you, not just in terms of ease of use, but also in terms of your carbon footprint, et cetera. The amount of information that's going to be available to us is going to be extraordinary. So companies like Synaptics and Skyworks are phenomenal in that area.
Let's talk a little bit about, when I think of infrastructure, it's one of the things that you mentioned, some of the proposals that Biden's making, but from the layman's point of view, we think about infrastructure, we think about roadways and bridges and that sort of thing. How has that all changed in terms of how we view the infrastructure?
I think that's just starting to change. I think people are starting to realize what we're talking about. I'll give you two quick examples. When the Biden administration talks about electric vehicle charging, they talk about public investment, but those are private investment opportunities. Solar, wind, all private investment opportunities. Transmission, all private investment opportunities. So we see a large number of companies emerging to manage those development projects, and also innovation to drive those projects. And then if you look at our traditional assets, look at a highway. We're looking at developing a highway in Ohio. It's $1 billion highway that actually produces about $200 million in revenue a year from 7 different revenue sources, from high voltage electricity going down the middle of the highway to 5G posts providing rural broadband and autonomy for vehicles. Army Corps of Engineers has 600 reservoirs, the biggest leisure company in the U.S. Who knew that? Bringing private companies into that part of the process is fascinating. It already generates revenue by selling water from the reservoirs, but those are places where you go to boat and fish and relax. And digitization is going to make it possible for us to invest in our infrastructure in a way that's really, really interesting.
Well, yeah, it's something that we've traditionally really haven't considered, and it really is amazing. Going back to the small caps, have you looked at any other companies that you think might be impacting the sector?
Well, one of the things I've done is I've looked at some of the companies that have been presented today, and you get a sense of BioLargo, EarthRenew, companies like that. You just get a sense that this is a time of enormous innovation. And answering your question about what do I look at, I always look at leadership. I always look at who's in charge of the company and look at the culture of the company as well, because we're really changing where decisions are made and how decisions are made. And one of the things that's interesting about infrastructure is it's driven dramatically, increasingly as we're talking about, by digitization and innovation. But everything about infrastructure is a public good. So everything that happens is either driven by a policy tailwind or blocked by policy. And increasingly what's interesting is the people who are making policy are young people who are actually very concerned about the environment, very concerned about the theme here, which is clean tech, and also really interested in releasing innovation rather than blocking innovation, which has been, I think, a problem in infrastructure for a very long time. Well, if it takes 8.5 years to get a roadway approved in the U.S., what if that highway is all of a sudden going to facilitate electric vehicles and electric trucks take gas vehicles off the highway. Shouldn't we approve that quicker? Shouldn't we approve high voltage electricity lines quicker or renewable energy quicker? We see that kind of thing happening, a real transition in terms of who makes decisions and how they make decisions in the public sector already happening. And also who's asking to make those decisions? Young companies with pretty innovative leadership.
Yeah, absolutely. And what do you see in this sector, and in particular with regards to small caps as we move forward in the next 10, 15, 20 years?
Yeah, no, I hate to repeat myself, but I just see the kind of explosion almost in electrification and the digitization of infrastructure that we saw at the advent of the microcomputer age in Silicon Valley in the early to mid 1980s. There's an unbelievable amount of new activity that's going to happen, and everything is going to drive. Everything's going to be driven by better efficiency. You know, one of the more interesting areas is looking at buildings, especially after COVID, but even before COVID, where AI goes in and decides how to do predictive maintenance on buildings, and companies like Hannon Armstrong finance that funding, 2 to 3 year performance contract, and all of a sudden you have a more energy efficient building, a greener building, and a more healthy building. We're seeing lots of things like that. AI applied to water systems, where you figure out how to change out lead pipes, which President Biden also highlighted in his speech. New companies emerging to figure out how to do all sorts of AI applications to drive efficiency and get rid of things in the environment that are causing problems.
Norman, I think we're running out of time here. I knew we didn't have enough time to cover everything. It's great to see you again. Again, Norman Anderson, and your book that's available at There's Vision, our strategic infrastructure roadmap forward. Thanks, Norman.
Thanks, Tomas. Appreciate it. Good to see you.
Thanks a lot, guys. I appreciate that. I do have a serious ask. If I can get serious for just a second here, some real talk. All right. So there are 2 tracks on this event, right? There is my track, the renewable resources, and then there's the other track that's hot EV and communication stocks. So as of this moment, the other track has 1 more like than mine. All I'm asking from you good people is to get me over that hump. We need to have more likes than the other track. They have 1 more. I just can't let that. I just can't let that happen. So if you haven't already, hit the like button on my track so I can get more likes than Neil, because then I will be able to sleep at night and I will have bragging rights forever and ever and ever. Okay, let's go to our next speaker here. Bernard Tourbillon. He is a chairman, president, CEO, and director of HPQ Silicon. First, Bernard, please tell me I pronounced your name right.
Close enough. I'm accustomed to it, so don't worry about it.
Damn. No. Tell me what it really is. I took French in high school, so I thought I maybe had a shot at that.
Tourbillon.
All right. I was like a CF.
That's okay. Don't feel bad. I have many people criticizing the way I say silicone, so it's okay.
Well, hey, that's relevant. It's part of your company's name, so let's go ahead and bring up your presentation here and let you go into it.
Well, hi. Well, welcome. It's my first time here at the Benghazi presentation. And I was told this is an area where a lot of companies come around to go ask for money. So from the beginning, people are looking to write checks, don't need to. We're very financed. So I'm presenting you what we're doing in innovative silicone solution. I went through the disclaimer. I think in today's conference, we don't need to talk a lot about the energy storage demand is about to explode. But I want to talk to you about a specific place or market that I think people are not yet realizing is going to be very important. It's silicone. So I think everybody knows this. We're only at the start of the EV megatrends. Demands for these vehicles are going to go through the roof. Oh, I think I jumped one. Oh, there we go. Yeah, but there's a problem with batteries. Battery is a bottleneck, okay? Battery performance has evolved much slower than electronics. Battery technology has not really evolved. Why is that? Well, electronics, it's simple. You basically shrink the circuit and you get better electronics. Batteries are fundamentally two things at the same time: a chemistry event, and you need specific material. Many of the chemistry process that are needed to use in modern battery have already been, have reached their limit. So we now need improvement in material science. We need a breakthrough in material science, okay? Lithium batteries capacities are limited by graphite. As this graph shows, silicon owns much more energy, okay, than graphite. The end effect of this is if you need a fast charging battery, you need to replace graphite by silicon. That's just what you need to do. So basically, silicon is going to become a very important materials in the battery space because we need silicon to break the lithium ion limitation. It's not me saying this. There's a lot of companies saying this. So what has HPQ been doing? Okay, we've been working at this since 2015 in different evolution, but we've been focused on one material and one material only, which is silicon. We've implemented a lot of innovative strategy. We're advancing development of numerous silicon products, and our goal is really to create, to resolve the material science issue as it regards to silicon. We have breakthroughs that are coming along regard to nanosilicones for battery anodes. We have a cost-effective system. Just today, we issued a press release how we're advancing in that regard. And the other fun part is HPQ is one of the rare advanced silicon play that's a public company. So it's one of the few ones you can invest that it's really dedicated to silicon as a material. It looks like we're doing a lot of things, but today I only want to focus on one thing: our silicon nanos, micro powders, and nano wires. Because why? Because the battery market, the battery material market, is estimated to be 200,000 metric tons by 2030. Okay, and we anticipate that we will be able to meet that demand and start meeting that demand because we're looking, our preliminary targets are first sales in 2022 with an aim of being fully operational by 2027. So we're talking about a demand of about 200,000 metric tons. Growth in the EV market results in one thing: demand for battery material. It is there. Right now, when you talk about battery material, you hear about lithium, cobalt, graphite, nickel. You hear about all those material, but nobody talks about silicon. So that's why I'm happy here to be presenting the situation and why it's so important. Presently, graphite is fundamental to rechargeable batteries anode. 95% of battery anodes is graphite. Only 5% is silicon. So graphite dominates the market right now. So think about this. Whatever you're seeing expansion in battery space is having an effect on graphite. But by 2030, okay, the experts are saying that battery anodes may contain up to 30% silicon. That's a massive demand. So the question now, who can make that material, that 200,000 metric tons? And I'm going to explain in this presentation why you can't really take standard metallurgy grade silicon metal and turn it battery grade material. It sounds nice on paper. It's much more complicated to do in real life. And the fun part is HPQ has been working at this in 2015, but the reality is just lately, a lot of car manufacturers or auto manufacturers are starting to pivot toward that. We know about Tesla's battery day. They made a big show about silicon. But much more interesting is not long ago, March 15, at Volkswagen First Power Day, so I guess they're copying Tesla a bit, Porsche came out and said silicon has big potential. They need that for their fast charging. They need that for their batteries. GM in April, okay, the president of GM said, is experimenting with silicon-rich material for their batteries. So silicon demand is real. It's going to be real, and it's going to be how you're going to be able to meet it. Because, yes, silicon seems to be as an awesome material, but it's not really inexpensive. If you can buy metallurgy grade silicon for $2-3 a kilogram, you think it's cheap, but you can't take that material and convert it into battery grade. So silicone, like all the other materials, okay, is abundant on the Earth's crust, but has to be converted. What's interesting in this case of silicone, it's not the raw material that's really the key. It's the process you have to go through to transform the raw material needed. Presently, you need 6 tons of raw material to make 1 ton of silicone. Just that's metallurgy grade silicone metal. Okay, that's not battery grade silicone metal. And you need very specific, highly pure materials. So raw silicone, you can't use it. You must engineer it to make it the material you're looking for. I just want to know where I am my time. Okay, anyway, the challenge is what? The challenge is that silicone, if you don't treat it correctly, will expand and contract, and that will basically give you a shorter lifetime of your batteries. That's not what you're looking for. The solution is nano silicone. The solution exists. They're known. Okay, you can either cover your silicone in SiO2. You can, structure it in graphite. You do nano silicone wires, silicone powder. That's very, very nice. So the battery manufacturers, the anode manufacturers, know how to transform silicone and use them in their batteries. The blocking factor is the cost. Silicone nanopowders and nanowires could replace graphite right now, but you need a new process. Battery manufacturers are not willing to pay more than they're paying right now for graphite. So you need to find a new manufacturing process, and that's what HPQ is working at. What are we developing? We're fundamentally developing technologies that are revolutionizing the primary transformation of quartz into silicone metal, and then how to take that silicone metal into battery nano-sized material. We're working with Pyrogenesis, another Montreal-listed company, who invented 3D printing, which have a great track record of developing technologies from the beginning all the way to commercialization. So the PureVap is a low-cost plasma-based system that can transform the battery-grade silicone we will be producing with the PureVap into the silicone materials that battery and electric vehicle manufacturers are looking for. Our real goal is to achieve cost parity with graphite, making silicone materials from different ranges. And why do I say this? It's because as I try to explain or try to say, batteries are basically chemistries. So every battery manufacturer has their different recipes. So battery manufacturer A or car manufacturer A might want one specific size and another. By just focusing on being the silicone producer for everybody, that's what we're aiming to be. We aim to be the nano silicone producer for all battery manufacturers. Just to give you an idea of the cost advantage and a structural advantage that we have, okay? There's been talk about one company that's going to start to make, anodes with silicone, Group 14 Technologies. But this is how their process works. They have the traditional process of converting quartz to silicone. Then you have to convert that material into saline gas. And then you have to move that saline gas down to the next generation, now to the plant to make it into anode material, or like what we're doing here. And then you make it to battery material. This, okay, is a very negative for the environment process. There's a limited capacity right now. We're talking there's a need in the world for 200,000 metric tons of nanoparticles of silicone for batteries. This, at its best right now, can only deliver maybe 18,000 metric tons. After that, they're going to have to restart building more plants to increase capacities. And every 18,000 metric ton will require over $1 billion of investment. Plus, just to carry the gas from here to there, according to REC Silicon in their presentation, the cost is $30 million per 1,000 metric tons. $30 million to do a transportation system from one to the other. So, as I said before, the technology exists, the cost is in there until our system comes along, which is a completely new way of doing it. So as you can see, we go from quartz to start silicone, battery grade silicone, to nanopowders, to nanomaterial. So we're really looking at cost parity with graphite, and we believe we can accomplish this. And if that happens, then we will basically be in the leadership position in the battery space. And we've been working at this since 2015. So where are we in this project? Right now, we're developing our new nano reactor. We're working on phase 1. We're here, what's there, process validation and optimization. Today, we issued a press release on this. That's our system is actually giving us better throughput than we anticipated in design. We're then going to be starting very, very soon on scaling that up, that process, and the end result of it's going to go better. And the goal is by the end of the year to move over this system to a pilot plant decision. So we have a vision, we have a direction. We're aiming toward becoming one of the first, probably the unique supplier of low-cost silicone material. And we're looking at being in the market just as market participant looking at for. So we already have a scalability process going forward. So right now, our first system can do 50 kilogram per month, which is going to be more than enough material for us to send qualified samples to battery manufacturer for them to test it, improve it, discuss, see what they're looking for. Now, as we move to the second system, which is going to be operational by the end of the year, we'll be up to having 500 kilogram. Points of importance right now. There's only 10 metric tons of worldwide capacity to produce nanoparticles of silicone. Okay. Our little system here is going to bring 6 tons. We're almost going to be doubling what's available. But that is a drop in the ocean versus what's going to be the demand. So what you have to work on is a system that can do A, the nanoparticles, and B, deliver it at the cost that the end buyers want to pay. So this is what we're delivering. Just to understand what's a unique advantage over everybody else is that we control the first part transformation. Our first technology, PureVap QRR, I equal it to the difference between a company that's using mainframe computers and somebody that's using desktop computer. Okay. The first process are very expensive, very cumbersome, very, very big. Ours is smaller, much more efficient, easy to scale. For the second advantage, the other advantage that we have is our cost advantage. All the other ones, manufacturers are basically going to have a higher cost than we do. So we know we're going to be the lowest cost producer. Great part is that first technology, okay, that we're talking about, as a very already huge addressable market, 3.8 million ton needing $10 billion a year, where there is a strategic problem in the sense that a traditional producer can't really make the material that people are looking for, which is 2 and above. It's more technical than it needs to be. So this plan, by the end of this year, we will have our pilot plant operational. We'll be ready to start producing material for our own feedstock as we start to do battery grade material. So why invest in HPQ? Well, basically, HPQ Silicon is an investment opportunity to participate in the surge that's incoming for battery material, battery metal, more specifically in silicone, because we have a different advantage. We're ready to become the lowest cost producer of nanomaterials needed for the renewable energy. Our materials in demand, even before we ever produce one, we have EV manufacturers, battery manufacturers knocking on our door asking us to submit samples. So we're very comfortable where we're going. We're supported by, high technology partner. Last point, I was sort of joking around that we don't really need. Our projects are fully funded. We have total cash position of around $18 million Canadian. So we have the need to develop a project and move forward. So,
all right, thanks a lot. Thanks a lot, Bernard. Let's do one question. We've got one question. Time for one question from the chat. If your process is patented, how many more years do you have the patent for?
Well, it's a starting point. I believe it's 17, 18 years. But remember, patent is only half of the process. The other part of the technology is the know-how that we've developed. And there's a lot of things we're developing as we move forward in our process. There's things that gives us unique advantage. So we have 2 patents. We have multiple patents, actually. And as you move forward, you discover other things and you patent more stuff.
All right, Bernard, thanks a lot, man, for the time. HPQSilicon.com. The website's up on the screen. The ticker's up on the screen. Bernard, thanks a lot.
Thank you.
All right, got time for a couple quick things before our next speaker. So let me play for you. If you don't have Benzinga Pro, guys, what are you doing? pro.benzinga.com for a free 2-week trial. If a 2-week trial is not enough, you want more, enter the promo code YouTube20. YouTube20, all lowercase, YOUTUBE 20 The number is 20. We'll get you 20% off any Benzinga Pro subscription. If you don't know what you're missing, check this out.
When you want to maximize your performance in the market, you need access to the highest quality tools and news available. Benzinga Pro stands out from all of the options you'll be presented with, and their instant access to market-moving news positions you to be prepared to take on the market in the best ways possible. Here's how it works. Benzinga Pro's news desk creates original news content that's available on your main news feed and gives you actionable information about companies you may want to invest in. This news desk information gives you the chance to beat the market, receive impactful news as it breaks, and jump on trending stocks before and as they rise. And beyond that, Benzinga Pro is packed with helpful features and unique insights that give you the best information possible. There's tools like the Live Audio Squawk, which streams every day with important news and timely updates, and the real-time news alerts that allow you to stay on top of every developing story you're keeping tabs on. Alerts and news will be sent straight to your inbox or delivered as live sound alerts. For those investors that want real-time, actionable, and breaking news about companies they may be looking to invest in, Benzinga Pro is the tool to use.
Again, pro.benzinga.com, code YouTube20 will get you 20% off, or win a free lifetime subscription by doing the trivia/survey we've got going today over on Slido.com. I'll put the link up in the chat again. All right, our next speaker is here. Corey Jasson. He's the president, CEO, and director of MustGrow Biologics, MGRO. Corey, how are we doing today?
Good. Yourself?
Doing fantastic. I see your presentation is shared. Let's get right into it here. Whoops.
Perfect. Yeah, my name's Corey Jasson. I'm president and CEO of MustGrow. We're an ag biotech company based in Saskatchewan, Canada. And we'll get right into the presentation here. I'd like to draw your attention to our disclaimer. There's your typical forward-looking statement disclaimer, and it can be read in detail on our website at mustgrow.ca. About MustGrow Biologics. We're an ag biotech company with a natural organic technology platform that is highly efficacious at controlling microbial disease, insect pests, and weeds. What we've done is we've taken the compounds found within the mustard seed, and these compounds are the natural defense mechanism for the mustard plant to protect it from diseases and pests, found in the soil, so that the plant can flourish and continue to grow. We have a very experienced management team of business people, experienced board, and also some very experienced scientific advisors that have a lot of experience in terms of extraction of AITC plus how the AITC and the thiocyanate extracts found within the mustard seed, how they do what they do, and how come they're so effective at controlling these diseases and pests that affect crops. It is a sustainable, disruptive ag innovation and has great potential to potentially replace banned synthetic chemicals, so that farmers continue to have options to control these diseases and pests, so that they can grow healthy food for a growing population. The technology also has positive soil microbial benefits and environmental impact, and I'll get into that in some detail here. It's a patented technology. We own 100% of the patents, and we've completed over 110 independent studies that shows that the active ingredient, specifically AITC, is very effective at controlling diseases and pests. And it truly is a technology platform with multiple applications, more than just applying it to the soil as a biofumigant. It also has applications, for instance, as a post-harvest food preservation as well. This is all with a very tight capital structure. We're listed on the CSE under the ticker symbol MGRO, on the OTCQX under the ticker symbol MGROF. 48 million shares outstanding. About 19% of that is management and advisor owned. And we're fortunate to be sitting on $3.8 million Canadian in cash, which is enough capital on hand for us to get our formulation, our new liquid formulation, Terra MG, registered in the fruit and vegetable industry with the EPA. A little bit more about our team. My background, I've been involved in numerous startups over the last several years. I was a VP of business development with Anglo Potash. That company was purchased by BHP in 2008. In 2009, I co-founded a heavy oil company and ran a heavy oil company called Rally Mount Energy, which sold to Husky Energy. So my interest is really in the startups, My background is in agriculture. I grew up on a farm. I have an agriculture economics degree and an MBA in agribusiness, both from the University of Saskatchewan. My chief operating officer, Colin Bletsky, a colleague of mine, 30 years of experience in agriculture. His previous 10 years, he was with VP of Bioag at Novozymes, where he looked at numerous biologicals around the world. He spent 20 years in the ag chem industry, and what he mentions is that he has not seen a chemical or a natural product that has the efficacy of chemicals, just like what we have here. So we're excited to have him on board as well. So what's really driving our technology? Well, regulatory agencies, they are significantly restricting and banning synthetic ag chemicals, leaving limited alternatives for a growing population. Consumers are driving this change. They're demanding a safe, healthy, natural food supply. And producers, they want to use biologics, but only if they work. And many of the biologics that come to the market in the last 10 years have not met performance expectations. Ag chem companies are starting to actively invest in more sustainable natural technologies to replace these synthetic chemicals. It all comes down to sustainable farming practices, not only for today, but for the future. We need to feed a growing population with a finite of arable land, and we need to protect that land with sustainable products that are being used to help grow these crops. MustGrow, we're providing this natural technology platform. It has the efficacy of synthetic chemicals, and it truly is a technology platform that can be used in multiple markets, whether it be as a pre-plant soil treatment, say for strawberries, or for post-harvest, shipping containers to help treat the diseases that other synthetic chemicals are currently being applied in. As I mentioned, our technology has a positive soil health and environmental impact. Basically, the active ingredient AITC, it does its work very quick. It has about a 24-hour half-life, means it dissipates from the soil quickly. That allows the positive microbiome, the positive beneficials in the soil to microorganisms to continue to do what they do, and allows them to build up quicker so that it has a positive soil impact. In addition, it's AITC is not very water soluble, so you won't see it end up in runoff, which is good for the environment as well. So positive soil effect and also positive environmental effect relative to synthetic chemicals. The difference between our technology, the MustGrow technology versus the biologics, is that we're both natural and organic. Both products are safe, but what we find is biologics, they're not as effective. Compared to synthetic chemistries, they are more effective, but they are also, some of them are harmful, and they're being removed from the market. What MustGrow's product is kind of right in the middle. It's natural, it's safe, it's derived from food grade mustard, but it also has the efficacy of synthetic chemistry. So synthetic chemistries, which is actually quite unheard of, giving a natural organic product. So our technology is effective. It's also flexible. It can be applied given the existing application systems that are in the market. It's safe. It's non-hazardous. It's safe to transport. It's safe for storage. The active happens in the field, not in storage or in bottles, which is being shipped in. It's organic, as I mentioned. It's also efficient. What we've done is basically taken what the farmer does when he grows a cover crop. He uses mustard for a cover crop. We've basically harnessed those compounds. So instead of about 1% being converted to the active ingredient for a cover crop, we have 100% conversion of the active ingredient with our mustard extract. And it has the potential to be economic relative to synthetic chemical pricing. As I mentioned, our technology is truly a platform. There's 3 different areas that we're targeting. The first area in gray there would be the pre-plant soil biofumigant with numerous different crops that we're targeting there. In green, it's for weed control as a bioherbicide. And then in the blue at the bottom, that's for post-harvest food preservation. So our first target area for the biofumigant area would be the fruit and vegetables. And we're currently working on getting our product Terra MG registered with the EPA. It's currently with the EPA here right now. That market is about $1.3 billion industry is what it's expected to grow to. And that's where we've done the majority of our work. We have over 110 independent studies that shows that the active ingredient in Terra MG, AITC, is very effective at controlling those diseases. The next three crops that you see there, bananas, canola, and pulse crops, they have three diseases that there is currently no control for. Fusarium wilt TR4 affecting bananas. That's wreaking havoc around the world for banana plantations. We're currently doing work in Colombia. We've had 2 positive results in lab studies. We're going to be testing our product in the field here in the very near future to see if we can control that particular strain of Fusarium in the field and at what rate. The rates that we were controlling in the lab were very low, so we're excited to get into the field. Again, that's a very hard to kill strain of Fusarium. There's currently no synthetic chemicals that have been able to control it. And the country of Colombia, for instance, has declared a state of emergency regarding this particular strain of Fusarium and the effect that it has on the Cavendish banana. For canola and pulse crops, specifically here in Canada, 2 hard-to-kill diseases, clubroot and Aphanomyces. We've had successful results in the lab and in greenhouse on both, and we will be doing field studies on these 2 particular strains of diseases. Again, they affect 2 major crash crops here in Canada. There's 22 million acres grown of canola, and if you get clubroot in your canola field, you can't grow canola in that particular plot for something like 17 years. Again, your #1 cash crop, very valuable farmland is being lost to clubroot, and it spreads very easily. So we're looking forward to testing our product there in field here this coming spring. On the bioherbicide side, we've extracted the compound thiocyanate from the mustard seed. It has a systemic mode of action at controlling weeds and plants. We're currently doing testing on that in greenhouse right now. And it's very early stage for us in terms of this extract, but it's exciting that we have another extract coming from the mustard plant for a different use. On the post-harvest food preservation side, this is early stage for us, but there is lots of literature out there that shows that AITC can be very effective at controlling sprouts in potatoes. We've actually licensed a patent from the University of Idaho for the use of AITC as a sprout inhibitor. This is quite interesting because the chemical currently being used, it's been used for the last 60 years, CIPC, was recently banned in Europe and in October of last year. And potato farmers there have no solution to controlling this, potato sprouting except for increased refrigeration. And that's estimated to add about $150 million of cost to them just for more refrigeration to inhibit sprouting. And potatoes will continue to sprout when cold. So it's not really a solution. It's more of a Band-Aid stop here right now. So we look forward to testing our version of AITC in that particular market going forward. 3 other areas that are early stage: mycotoxins for bulk grain. We're going to be testing our technology there. If you get mycotoxins in stored grain, that grain is basically useless and has to be destroyed. And also for shipping containers and foodborne pathogens. A little bit more about the Terra MG and the EPA registration in the US. We're leveraging an existing EPA registration. Our original granular technology we had registered with the EPA and is currently registered with the EPA as a biopesticide. There was about $700,000 of sales. We suspended sales and production of that product because it was very costly to transport, and we weren't making money given the bulkiness of the product. It was being applied at about 1,000 to 2,000 pounds per acre. Now with this new liquid format, we're seeing efficacy in about 5 to 10 gallons per acre. So it's way more efficient, less product that needs to be put down. And we're currently now working on our EPA registration for there and assessing through toll manufacturing production methods so that we won't have to raise capital to set up a plant to get initial sales and production. The market, it's about a $469 million market here in the US right now, the fumigation industry for soil. It's estimated to grow to about 585 million by 2050. And if you look at the open opportunity there at the bottom, buffer zones, those are areas where the farmers cannot apply product. They're like around schools and around towns and roads, for instance. These buffer zones, there's currently no solution for those zones right now, no natural products. And same with organic acres, about 241,000 acres of organic. Again, those organic farmers have no solution really for applying product to control disease or insect pests. So we think there's a huge opportunity there, and we look forward to getting our natural organic product into this market to attack the buffer zones, organic acres, but also to start taking some of the conventional fumigation sales away from the synthetic products into a natural organic product that has similar efficacy to existing synthetic chemicals. And again, as I mentioned, this is all with a very tight capital structure, 42 million shares outstanding, 50 million fully diluted. Inside ownership is about 19%. We're fortunate to have $3.8 million on hand. That's enough capital on hand for us to get our Terra MG registration complete, continue to move our technology pipeline forward for lab testing, greenhouse testing, and field testing. And in addition, it's enough capital on hand for us to get 1 million to 2 million liters of sales into the market with the use of toll manufacturing. So exciting times ahead here for MustGrow, and thank you for the opportunity to present.
Thanks a lot, Corey. We got a couple questions from our chat. First one from Barbara Bauer. Who are you selling to?
We're a pre-revenue company. We currently don't have any sales.
So then who will you be selling to?
Well, there's a variety of different ways for us to get into this market. There's potential for us to deal with large ag chems, either from the distribution side or for the partnership side. These distributors will be dealing with the retail companies or the applicators of the fumigant products. For instance, for the pre-plant soil treatment. So you'll be dealing with more on the ag chem side, where they have the distribution chains already in place that deal with the farmers at the field level.
What about like on the retail front? Ziggy wants to know how to buy it for their plants.
Well, I guess first of all, we'd have to get a registered product first of all.
Yeah.
If you want to say apply it for your garden down the road, well, there's potential that we get into the retail chain or these distribution companies market it through a retail chain and all that. The interesting thing about this product is that it's not as harmful or hazardous compared to synthetic or existing synthetic fumigants. It's safe, it's benign. So there is potential that you do not have to pay an applicator to use this product, and there's potential that even on the bioherbicide front that I think it has a good fit for home and garden use.
Len Nolan wants to know, when do you expect to start production or commercial production?
Well, it's hard to say. It all has to come down to when we get registered, or this new liquid formulation registered. The EPA, it has really slowed down with COVID, and once we do have registration in place, we have identified potential toll manufacturers that will be ready to produce when that registration is in place.
And then Solar Up is a very keen listener on the chat. He's signaling on one particular quote you just gave. We talked about the cost competitive nature. He's asking what it would take and how long to become competitive with as far as costs.
Well, based on existing synthetic chemical fumigation pricing into the market right now, we feel that we can be competitive based on the same pricing that those producers are currently generating for their products and that. So if they're selling product at say $600 an acre, we can be very competitive at that price, and that's unheard of for a natural product.
Is there anyone else in this space? And if not, who are you competing with?
Well, a lot of I guess there is existing synthetic chemicals out there, say metam sodium, which was recently banned in Europe. The large one back in the day was methyl bromide. Those have been banned. There's existing synthetic chemicals in the space. Is there existing natural products in the space that do what our technology is doing? I'd say no. They're more band-aid solutions. And what we're seeing with our technology is that it's got the efficacy of synthetic chemicals. So we're kind of, in our own little area. We're natural, we're organic. It's derived from food-grade mustard. But it's just as efficacious as, say, methyl bromide at controlling diseases and pests. And that's based on the studies that we've done, independent studies that we've done.
Jordan Brennan wants to know any update on the banana field trials in Colombia or any other near-term catalysts.
We're currently working on getting those field trials started in Colombia. And any nothing I can speak of in near-term catalysts. It's spring here in Canada. it's time for us to get in the field and get some work done. So
I'm just curious, like how much of your business was affected, by COVID in the last year, if at all.
Some of our independent researchers have slowed down. We use the National Research Council up here in Canada. They were I think they were at about 30% capacity is what they were working at. We have seen a difference with the EPA. So there's been a little bit of change. Everything's kind of slowed down a bit, but on other areas things have sped up. So given COVID, it hasn't been a bad year at all. It's been really good for MustGrow. That's
what I was going to ask. Like all things considered, like I guess how would you rate the company coming, like the effect of COVID on the company, like all things relative to, I don't know, everybody else out there?
Well, I mean, we're a pre-revenue company, and that so we're really focusing in R&D and getting our registration complete. Yeah. Things have slowed down in some respects on the R&D side, but for instance, I'm still able to do my work and attend these kind of conferences and present to without having to jump on a plane and fly all over the world. So I have to say we've gotten busier, but I wouldn't expect that when COVID started, but it's been a great year.
Corey Jasson, MustGrow.ca. Link is up on the screen. MGROF if you're in the US. He's the CEO of MustGrow. Corey, thank you so much.
Thank you.
All right. We've got our next panel is coming up right now, actually. We're talking SPACs, guys. I know you love SPACs. We're talking to the SPAC and the company that is merging with the SPAC. I'm going to bring on in a moment here Scott Leonard, who is the CEO and director of the Sustainable Opportunities Acquisition Corporation, ticker SOAC. The company they're combining with is DeepGreen. Going to bring on their CEO as well, Gerard Barron. So let's do that. Scott and Gerard, let's get them both on here. There's Gerard. There's Scott. Welcome. How are we doing today?
Spencer, great to be here.
Great to be here. Great. So many questions, not a lot of time to get to it all. And so I'll just start with giving you guys the floor, and then I'll have my own questions, and I'll be watching the chat for more questions. But guys, the floor is yours to go ahead and tell us about the company, why go the SPAC route, and all that.
Cool. Well, I'll kick it off, and then I'll hand it over to Scott. But my name is Gerard Barron, and I'm the chairman and CEO of the metals company. We used to be known as DeepGreen Metals, and I'm pleased to be joined by Scott Leonard, who is my partner in this mission and the CEO of Sustainable Opportunities Acquisition Corporation, which is listed on the New York Stock Exchange under the ticker SOAC. So in early March, we announced that we're merging our business to form the metals company with the goal of delivering tremendous value to our shareholders while also helping to solve a major risk in the global fight against climate change. EVs and battery storage are a critical part, as we all know, of the climate change solution. And the problem is we do not currently have enough of these raw materials to meet the world's ambitious electrification goals. And the metals company promises to deliver large-scale, low-impact metals to enable the green energy revolution. So before we begin, I'd like to remind everyone that the remarks contain some forward-looking statements, and this presentation is for information purposes only. This is not a solicitation of votes. And I'd now like to play a short video that I believe helps frame the rest of our discussion.
Energy from the sun and wind is replacing fossil fuels to power the transition to a sustainable future. We need batteries to store this energy. Batteries are made from metals such as cobalt, nickel, copper, and manganese. Until now, we've been mining the earth for them, digging deeper and wider for lower quality ores. Nature disappears. Humans suffer. Earth suffers. But there's another way. Polymetallic rocks contain rich concentrations of these base metals needed to make batteries. As stewards of these rocks, we've partnered with top ocean scientists to baseline the environment from seafloor to surface and study the impact of collecting them. If we use them to make 1 billion electric car batteries, we can dramatically reduce our environmental and social impact for the whole planet. We're building a world where metals are not mined and dumped, but rented and returned.
So let me share a few investment highlights up front. Firstly, we sit atop the world's largest undeveloped supply of battery metals. In fact, there's enough nickel and copper and cobalt and manganese to build around 280 million electric vehicle batteries. Now, the revenues you'll find are mainly driven by nickel, and we've seen a lot of commentary around the need to mine more nickel from people like the CEO of Tesla and others. But we contain nickel, copper, cobalt, and manganese. And if we were to put all of those metals into nickel equivalent, we'd be at around 3.2% nickel equivalent. And that very high grade means that we can operate at the bottom end of the cost curve as well. So one of the amazing benefits of this resource are the environmental benefits. And we've carried out extensive studies, including life cycle analysis of the impact of producing battery cathodes using our nodules, our polymetallic nodules, or comparing that to using land-based ore bodies. And what we found is that we can massively compress those environmental and social impacts. And using CO2 as one example, we can reduce by more than 90%. The valuation we agreed with SOAC, we think is a small imprint on our future value, but Scott will talk more about that as we progress. And we already have some amazing shareholders. We have Glencore, Maersk, Allseas, and we work very closely with Hatch with regards to the onshore processing side as well. So we understand that the transition to electric vehicles will test the limits of supply of certain metals. And where EVs are much more metal intensive than cars with internal combustion engines. So we need more nickel because the nickel-rich battery cathodes chemistry is used in EVs, and we need copper for all the electric wiring. So supply shortages of battery-grade Class 1 nickel are expected to emerge from 2024 onwards, and copper is expected to follow a similar pattern. And the metal supply situation can actually derail the EV transition. The risks are threefold. First, increasing supply of EV metals from conventional sources is not easy due to the slump in discovery of new high-quality tier 1 deposits on land. You have low-grade, smaller deposits here and there, but the large, low-grade deposits in some of the most biodiverse areas on our planet. And so scalable supply will be an issue from 2024 onwards if we keep looking on land. And the second thing is that metal prices are on the rise. Analysts are talking about a new commodity super cycle, and that's great for miners, but not so great for the EV manufacturers. Efforts to drive down the cost of EV batteries necessary for mass adoption. And then thirdly, like fossil fuel extraction, conventional metals extraction comes at a steep cost to people and the planet, driving deforestation in some of the most important biodiverse areas on the planet and generating emissions, poisoning ecosystems and people's health, and sometimes involving exploitation of workers and even child labor. So we think the best way to de-risk the clean energy transition is to source EV metals from polymetallic nodules found on the seafloor in the area between Hawaii and Mexico, known as the Clarion-Clipperton Zone, or CCZ, as we know it. And the resource has the potential to solve all three risks posed by the terrestrial EV metal supply: availability, price, and sustainability. And let's start with availability. The resource is abundant. It's the total estimated resource in the CCZ is sufficient to electrify the entire global car fleet several times over. And nodules are found in the most common plantless, desert-like environment on our planet, the abyssal plain. It hosts 300 times less life than land average and 1,500 times less life than where we're currently sourcing our nickel in places like Indonesia. So the CCZ abyssal plain also sequesters 15 times less carbon compared to land average, and again, much higher if you look at areas where most of the nickel growth is forecast to be coming from. And being common does not mean the CCZ abyssal zone does not merit protection. Today, more area is set aside into protected zones, which are the white boxes on our presentation, than there are under exploration licenses, which are the green areas on this map. So the resource comes with some amazing qualities, including the fact that our nodules literally lay on the ocean floor. So we don't need to drill or dig or blast to find them. And they contain all the metals we need to build electric vehicle battery, cathodes, and the copper wiring in the one ore body. In fact, it's like having 3 world-class resources all in one, world-class nickel, copper, and manganese mine. And they don't contain high grades of deleterious elements. So it means when we take them to shore to process them, we generate no tailings and no waste. And the grade is very consistent over large areas, and they're easy to handle, about the size of a potato, and they're microporous, so it means they're easy to smelt. And these advantages translate into an opportunity to dramatically reduce the life cycle ESG footprints compared to conventional land ores. And we reduce carbon equivalent emissions by up to 90%. And because we don't destroy the biodiverse forests that sit on top of many of the ore deposits on land, we can reduce the stored carbon at risk by 94%. But the exceptions are twofold. We will use abyssal seafloor. The upside is we can reduce our land use and we can reduce deforestation, which is critical in our fight against climate change. And the second area worth mentioning is biodiversity. Although we will be impacting a food poor and life-limited environment, it's still home to wonderful and fascinating creatures. Like land-based miners, we'll never have a perfect inventory of all of the species living in the area, and without it, it's impossible to guarantee zero loss of biodiversity, but we're certainly investing in reducing uncertainty around the issue. So importantly, the environmental advantages of this resource stand out, but they also come with some economic advantages. And after allowing for byproducts of copper, cobalt, and manganese, it means that we can produce 1 pound of nickel for minus $2.40 a pound. And as you look at this chart, you want to be as far left as you can. And the resource on our left here is a very unique Russian deposit. It's as much a palladium platinum deposit. But all of these producers over here, of course, are producing nickel at much higher costs than us. We actually have a negative cost of producing nickel. So we hold exploration and commercial rights to 3 areas in the CCZ, Nori and the Tomil area and Marawa. And they're sponsored by 3 developing countries. And to be able to claim an area, you either have to be a member of the International Seabed Authority or be sponsored by a member of the International Seabed Authority, such as we. So we have resource statements over 2 of our areas. We're a Canadian company. Even though we're listing on the American exchange, we are Canadian. So we're compliant with the Canadian 43101 resource, and we'll also comply with the SEC SK compliance statement on the Nori area here. Block D, area is where we've done most of our resource definition and environmental work to date. It's also an area where we have developed a preliminary economic assessment, or PEA, as we call it. And the expected NPV on this area is around $6.8 billion. But if we were to apply the same development plan across both of these blocks, the NPV would be in excess of $30 billion. So one of the amazing advantages of this resource is that it's two-dimensional. So on land, if we were trying to define a resource, we'd be digging or drilling thousands of holes, trying to imagine the shape of it. But instead, these nodules lie on the ocean floor, so we get to take pictures of them. And you can see here pictures of the ocean floor taken by this AUV on the left here. We actually had high-res bathymetric survey data covering more than 178,000 square kilometers of ocean floor in our license areas. And then we take these box score samples at regular intervals so we can test the grade, measure the abundance, and study any organisms that are living in the sediment. And this is our boat that is moored down in San Diego. It's on permanent hire from Maersk, the shipping company, and it's constantly going backwards and forwards to our area, which is about 4.5 days sail west from San Diego. So the regulatory side of our business is very important to understand. That the CCZ is located in what's known as the high seas, or international waters. And since 1994, the exploration and exploitation of this area has been governed by the International Seabed Authority. So the ISA is an intergovernmental body that was established based on the United Nations Convention of the Law of the Sea, or UNCLOS. And it's made up of 167 member states plus the European Union. We secured our first license in 2011, then 12 and 15. And they provide us with an exclusive 15-year exploration license. And we can then apply for an exploitation license over that defined area. The final exploitation code is due to drop very, very soon. The 4th edition of the code was published in 2019. COVID has slowed us down a little bit, but the regulatory environment, we feel, is very safe. And we're on track to lodge our first application in 2023 to enable us to extract and sell these important metals. So to develop this resource, we had to attract some fabulous partners, and it was not by mistake that we have companies from the offshore oil and gas services industry that have spent the last decades gathering expertise. And that's one of the things that's helping us get this industry started, that those companies who have serviced that industry have amassed tremendous knowledge and expertise and assets, and they're needing to find somewhere else to apply it. And so Allseas are building our first commercial harvesting system. Maersk, you know, is a shipping company, but also very involved in the offshore services industry. We're partnering with the leading research science houses, universities, oceanography centers to help us with our environmental impact studies, so we can fully appreciate those impacts and how to mitigate them. And also we work with Hatch, who's a very well-known process engineering firm, and Glencore have entered into an agreement to acquire 50% of our nickel and 50% of our copper from the Nori area. So the transaction sees us generate sufficient revenue to be able to develop our business into first production. And scaling from there is capital intensive. You can see that this is the development plan for Nori D. And essentially, the Nori D area represents 20% of our asset. Will generate around $57 billion worth of EBITDA and has a present net value around $6.8 billion. So I'll hand over to Scott now, who's going to walk us through some of the valuation aspects.
Great. Thank you, Jared. Well, back when we raised the first ESG SPAC in May of last year, we said we were seeking a company that had the potential to create great value for our shareholders, could meaningfully advance climate change solution to planet Earth's greatest problem, climate change, and back a team that was committed to ESG principles beyond just the E. We think the metals company is the answer to our thorough search. Let me turn to our deal. Our transaction values the business post-combination at $2.4 billion on an enterprise value basis, a valuation that allows our shareholders and PIPE investors the chance to participate in enormous value creation potential. With $300 million of cash in trust combined with $330 million of capital committed and an oversubscribed and upsized PIPE, we believe the business will meet the minimum cash condition to close our transaction and provide for the liquidity the metals company needs to reach initial production and positive cash flows from its first project, Project Zero. Ultimately, we believe the net present value for the full portfolio is over $30 billion. Now, let me turn to how we thought about valuation. We compared our purchase price to other valuations seen in the market. While we believe that there is no true comparable for sustainable natural resources companies, the peer group we expect to create and lead, we would note that even conventional metal producers trade at 6 to 15 times EBITDA forecast when measured 2 years out. Just as a reference point, our entry point for this business compared against 2027 estimated projected EBITDA is 1.2 times and provides significant potential upside as we continue to gain the needed licenses for full-scale recovery of the nodules and continue to advance operations for at-scale collection and refinement. As a reminder, this 1.2 times multiple on EBITDA from our NORI-D area represents just 22% of the estimated inferred resource. As Jared alluded to earlier, we think the NPV of the total estimated resource is over $30 billion, more than 10 times the current equity value. We believe the upside in the scalable resource is enormous, even at current commodity prices, and we believe that an uplift seen via commodity supercycle, there'd be even further upside. In closing, we believe if you want to invest in the electrification revolution, and we know a number of people do, this is a marquee opportunity. We believe that we will have access to the cleanest and cheapest source of battery metals. As a society, we have to access these materials in the Clarion Clipper Zone to meet our ambitious electrification goals. We know how to collect these materials in a sustainable way from the seafloor, and we already have the exploration licenses in hand. We have some great companies committed to working with us to collect these materials. We are committed to working inside a proven regulatory framework that we believe balances civilization's needs for a clean source of battery metals to climate change. We believe that we can collect and refine at a lower cost, both environmentally and financially, than traditional land-based alternatives. Quite simply, we believe EV manufacturers are not only going to want to buy from us, but given the supply-demand imbalances forecast in the market, we believe that they will have to buy from us. We believe that we're well positioned to fill the gap in the metal supply chain, and we want to thank you all for your interest in the metals company. With that, if we have time, we'd like to open it up for any questions.
We don't really have time for any questions. What I'll say, because there are a few questions in chat, you can engage with both Gerard and Scott on our virtual networking platform. I just posted the link in the chat. There it is. So Gerard and Scott, like I said, we had a few questions. Don't really have time to get to them, but for everyone watching, you can engage with these guys on our platform. Guys, thanks a lot. A lot of thought-provoking stuff here for sure. And so I wish we had more time, but that's the way it goes. Thanks a lot.
Thank you.
Thank you.
All right. I'm keeping this thing moving here. We are rolling right along. My next guest, Greg Pandura, President and CEO and Chairman of Mineworx, trades on the TSX. It trades in the U.S. on the OTCQB market. Greg, welcome. Greg, do you hear me? Don't know if...
Thank you. How are you?
Hey, you hear me? Excellent. All right. How are we doing today?
Yep, I hear you.
Okay, excellent. I hear you.
We're doing excellent.
We hear each other. fantastic. If you have your presentation, there we go. I see it shared right now. I'm going to bring up your presentation up on the screen, and then I'm just going to give you the floor, and you can go right into it.
Good. Thank you very much. Good afternoon, everyone. My name is Greg Pandura, President and CEO of Mineworx. The future in mining will definitely be precious metal recovery through environmentally friendly extraction methods. Mineworx is focused on developing patented and proprietary technologies related to this end. Traditional mining is becoming more capital intensive to locate deposits, as well as actually mining and processing them, especially with smaller and lower grade deposits becoming the norm. The focus on green technology and mining is becoming prevalent. We began our journey many years ago as a junior miner with mining assets in Spain and have evolved to where we are today, focusing on greener solutions for mining as well as on the recovery of precious metals from various recycling sources. The recovery of platinum and palladium from diesel catalytic converters is mainly an untapped opportunity. Up until now, recyclers have been able to mix processed diesel catalytic converters with the gasoline converters when sending to smelters for precious metal recovery. But as of recently, most smelters are refusing to accept diesel catalytic converters due to processing issues in their systems caused by silicon carbide in the materials. The low-hanging fruit is a very large market with no commercially viable solution for the recovery of the billions of dollars of platinum and palladium available in these end-of-life catalytic converters. We have a green technology in a system that is intended to process 10 tons per day of diesel catalytic converters. A crucial factor in this business is supply chain management, and this is covered by our partners' 20-year expertise in this industry. Any successful business understands the importance of supply chain management, and when you are dealing with the millions of dollars of precious metals inventory on a daily basis, as you are in this business, proper purchasing, quality control, and distribution safeguards are vital to your success. Our initial plant will have expected revenues in excess of $100 million per year, with anticipated margins of over 20%. 80% of the world's supply of platinum and palladium are used in catalytic converters, and of this, only 30% is recovered. Precious metal prices obviously will continue to rise. The newer, higher valued types of catalytic converters are nearing the end of their life cycle, and a wave of inventory will be available. Presently, there's no viable solution to deal with this upcoming wave. Our solution falls under our guidelines for a low-hanging fruit opportunity. Smelters are now imposing penalties on recyclers for mixing diesel with gas catalytic converters, or outright refusing to accept them. Past solutions available to recyclers are quickly drying up. We will have a ready market available to us as we proceed forward. Our technology, to put it simply, just for simplification purposes, the whole catalytic converter comes, we cut out the core, the metal container of the catalytic converter is then scrapped, and we basically process the core material or the honeycomb. After various grinding procedures, the material is ground into a fine powder. Once this occurs, it's ready for the chemical process side. The platinum and the palladium are extracted from the fine powder or the ground materials into solution through a chemical process. In the third level, or the third phase, the recovery phase, the platinum and palladium are recovered as a concentrate from the solution utilizing a precipitation process. Final phase is basically a refining phase where the concentrate is then sent to a refinery for upgrading and sale. We're expecting to achieve well over 90% recovery of our PGMs. And of course, in this process, we'll be eliminating the environmentally unfriendly emissions which come about from smelter processing. As already mentioned, our partner is a large recycler on the eastern US seaboard and has expertise in all aspects of supply chain management, a key component in the success of this business. The capex for the commercial plant is approximately $4 million and is anticipated to process 10 tons per day of catalytic converter material, and expected to generate in excess of $100 million in annual revenues with over 20% margins. Obviously, a very exciting business model. We are in the final stages of pilot plant assembly. All the engineering, all other components has been completed. And as I said, we are in the final stages of assembly, and we'll be going into the test mode phase very, very soon. Just to give you an idea on the wrap up or rollout milestones to be achieved here. This chart shows the milestones along the way for the completion of the pilot plant. Fabrication and assembly are near completion, and we are presently nearing number 4, where it shows beginning of May. So that's the point where we're at now, with integrity and testing about to begin. And obviously, updated news on this will be conveyed on an ongoing basis. We are on track to have process testing and baseline testing completed in early June. And that's basically running with water and inert materials in the first phase. And then once all aspects are checked off, calibrated, that sort of thing, then we'll replace that with chemistry and materials containing PGMs or platinum group metals. Recovery and efficiencies will be optimized at this stage. Preparation for relocation to the Davis facility in Tennessee will begin in late June, and we expect to have process optimization completed in August. The pilot plant is anticipated to be fully operational in September, and with that, the construction of the commercial size pilot plant will begin at this time, and we anticipate that plant to be near completion around year end. Our corporate structure, or divisions, if you like, involves material recycling, research and development, and design build fabrication, as well as mining. We started out as a junior miner in Spain many years ago, and have evolved since that time to a technology company focused on the environmentally friendly recovery of precious metals. We are a 20% stakeholder in a Vancouver e-waste facility that is about to enter its commercial phase of production. Our participation in this project has been completed, and we have no further operational or maintenance responsibilities going forward with this project. The mining division has 2 assets in Spain, but our focus is on the iron ore property. Currently, we have historically high iron ore prices, with indicators suggesting it will be continuing for quite some time. The iron ore concession is a large brownfield project with a potential resource of over 100 million tons. The ore is high grade at 65% iron ore with very low impurities. A product that is in very high demand for steel manufacturers worldwide. We'll probably focus on the European market because the steel mills in Europe will be anxious for that particular product. A drill work program has just started, which will confirm the large amount of historical data we have accumulated over the years, and a NI 43-101 compliant resource report is expected later in the summer. This particular concession was owned by the largest Spanish mining and steel manufacturing company in Spain up until 1989, when we were fortunate enough to acquire this property, and we've sat on it for some time. But with the iron ore prices the way they're going, it's obviously time to move forward. We have a lot of interest in that particular project. Due to the anticipated value of this project to the region of the province of Murcia in Spain, the concession was recently declared a strategic initiative by the Spanish government, which may allow us to construct a small processing plant to prove economic viability of a large processing plant. This would allow us to earn significant cash flow from a low capex project, which would add considerable value to the concession. We will have various options on how to best monetize this project as we accumulate further data from our work program and strategize on directions on how to properly maximize shareholder value. We have management teams in Canada as well as in Spain, and they will continue to evolve as we move towards project completions in each of these areas. We have an experienced board and who have been with us for quite some time in our history, and we have recently added 2 new members to the board, and these people here Harvey and Curtis will focus on strengthening our business development and financial initiatives, and they have a strong background in obviously in those areas. Shows our capital structure. Important to note here, we're well funded with $5.75 million in hand for operating capital to fully advance our current projects, and that capital is sufficient to cross the goal line for where we're going. So the investment theses here, it basically focuses on the catalytic converter project, since this will be the first revenue generator for the company. The initial rollout will focus on North American expansion, and this is obviously a global opportunity, but we wish to solidify our position in North America first before we expand beyond those borders. So thank you for your time and your interest in our company. I believe our exciting company needs to be followed closely, as we will be reaching many milestones in a short period of time. And each of these achievements will be reflected in additional ongoing shareholder value. So thank you. And if there's any questions, or if we have time, be more than happy to answer them.
Just one question here, Greg, before we let you go. I guess what is the biggest growth driver for you guys right now?
Well, the biggest growth driver is the catalytic converter business, which I didn't get into the numbers of a lot on the potential growth factor there, but there's no competition in the horizon on the diesel catalytic side. It's a huge market. We will be basically the only game in town, and to have a environmentally friendly processor of diesel catalytic converters in North America is a enormous benefit, both on the green side regarding the regulatory bodies, but more importantly, from a revenue generator. Each plant will generate well in excess of the $100 million annually, which I mentioned. Gross margins are exceptional, over 20%, and we'll have the capability to expand that within North America very quickly. And
Greg Pudura is the president, CEO, and chairman of Mineworx. You can see the link up on the screen. Greg, thanks a lot, man.
Good. Thank you very much.
All right. It is 4:05. Man, we are right on schedule here on Spencer's Track. Going to bring on my next speaker, Ilan Sobel. He's the CEO of BioHarvest, trades on the CAC in Canada, on the OTC markets in the US. Ilan, welcome.
Spencer, it's a pleasure to be here, all the way from Israel.
All the way from Israel.
All the way, just outside of Tel Aviv, Israel.
Hey, that's where all the good parties are. All right.
you know your cities.
Ilan, I believe you've got a presentation on the screen share. I'll bring that up when we right now. Tell us a little bit about BioHarvest.
Well, actually, I'm gonna, for the sake of time, I'm gonna move straight into the presentation.
Okay.
All right?
Great.
Because that's a great segue into my presentation. So thank you, Spencer. Okay, so good afternoon to everybody that's watching right now. My name is Ilan Sobel. I'm CEO of BioHarvest Sciences, and it's a real privilege to have this opportunity to share with you in 15 minutes some of the magic of our company. We as a company are at the eye of a storm of key trends that are really changing our world. We're at the eye of the storm of health and wellness as consumers have, as a result of what everybody's been through in the last 12 months with COVID, so focused on driving better health and wellness for themselves and their families. We all realize the role that biotech and food tech needs to play in the context of feeding the world and in the context of making the world a better place. And for us to make the world a better place, we all have to leave the planet that level better for our children and our grandchildren. And that's about a maniacal, purposeful focus on sustainability. So we as a biotech company, we are really anchored in the heart of the storm. And I'm going to share with you a little bit to understand exactly who we are and what we do. So who are we? We are farmers, but we're not just regular farmers. We are what we call new age farmers. And we're in fact biofarmers. You might be asking yourselves, what is biofarmers all about? Well, we farm in bioreactors and not in traditional greenhouses or conventional farms. And what we do every single day is we grow your wellness. But we do this in a very unique way. And we do this without having to grow the plant. We grow plant cells. We grow plant cells with critical active ingredients that the human body needs in order to survive. These include secondary metabolites like antioxidants, polyphenols, cannabinoids, cosmeceuticals, pharmaceuticals, as well as primary metabolites like proteins. And we do this with our patented biofarming technology that we have spent 10 years and $40 million developing this unique, innovative technology platform. And when we developed the platform, we realized clearly that nature is the perfect source. But today, nature acts as an inefficient, inconsistent, costly, and in many cases, contaminated factory of wellness. So what we do is we produce plant cells with these critical active ingredients that are identical to those that are originally sourced from the parent plant and have clinically proven health benefits. But we do this at massive industrial scale, and we're the only company in the world that can do this at this scale with a fingerprint consistency. We're able to increase the concentration levels of the critical active ingredients found in plants in our cells. And we do this with critically high bioavailability and efficacy. Importantly, what we do in our biofarming process is there are no contaminants or heavy metals. It is non-GMO. Yes, very, very important to emphasize this, non-GMO. And we can ensure when we grow our cells that we're able to take out critical elements that the human body does not need, like sugar and calories. And we're able to do this with unparalleled advantages for the environment. For example, when we grow our grape cells, one bioreactor is equivalent to 10,000 square meters of farmland. Our process requires the plant just once to create the cells. And then we're able to access, from a manufacturing perspective, cells that are stored in cell banks in strategic countries across the world. So at our core, we are a plant cell growth company. And our way of farming, which we call biofarming, has technical application for many business verticals, addressing over $500 billion opportunity. The company today is focused on two verticals, one being superfruit nutraceuticals, and the second one being cannabinoids. And I'm going to share with you a little bit about our innovation that we're driving in each of these verticals. Let's first look at the superfruit nutraceuticals vertical. Our product that we're bringing to market, which is proof of concept of our unique biofarming technology, is called Vinia. Vinia is made of red grape cells and contains the entire matrix of polyphenols with an extremely high concentration of piceid resveratrol in its natural structure that has significant benefits for the body. Vinia contains piceid resveratrol from the skin of the red grape, in addition to 4 other types of critical polyphenols: tannins, catechin, anthocyanins, and quercetin. The VINIA concept is based on the French paradox, where we know that the French population generally has a very fatty diet, lots of lipids, lots of butter, lots of meats, but they have very, very good cardiovascular health. When the scientists understood exactly what was driving this cardiovascular health, they realized it was from moderate consumption of red wine, 2 to 3 glasses of red wine every single day, not 4 because it would have too much sugar and too much alcohol, and not 1 because not enough polyphenols. And when they understood what it was inside the 2 to 3 glasses of red wine, which was helping drive the overall positive general cardiovascular health, they realized it was a combination of pie seed resveratrol and a number of other critical polyphenols. So we are able, through our biofarming process, to grow cells from the red grape with the critical pie seed resveratrol. We're the only company in the world that is able to grow pie seed resveratrol at an industrial and commercial scale, because we increase the concentration of the pie seed resveratrol in our cells by 100 times more than how it is found in the grape. And together with the polyphenols, we have this very, very highly soluble and bioavailable powder. In 1 capsule of VINIA, it contains the same amount of pie seed resveratrol. So 1 little capsule like this, Spencer, hopefully you can see it, contains the same amount of pie seed resveratrol as 1 bottle of red wine, an equivalent to 1,000 red grapes, but importantly, with no sugar, no alcohol, and no calories. When we understand the power of the VINIA from an overall efficacy perspective, it's driven by the unique chemical structure of our pie seed resveratrol, which is 25.5 times more water soluble than other types of resveratrol in the marketplace, which allows for significant dissolving of the pie seed resveratrol into the consumer's intestinal tract, which then allows it to go quickly into the bloodstream. And when it goes into the bloodstream, which we call bioavailability, we see that with VINIA, we have very quick entry into the bloodstream, 20 minutes, a peak at 1 hour, a peak at 5 hours, and then it's long lasting for 12 hours. And because of these unique properties of its solubility and its bioavailability, through our science, we have conducted multiple clinical trials or published in peer-reviewed scientific journals, which have demonstrated the power of VINIA as a natural vasodilator. So with VINIA, we're able to significantly increase the dilation of the artery, allowing more blood flow and more oxygen and nutrients able to reach the body tissues and organs. And we're able to increase the level of nitrate oxide in the body and reduce the amount of ET1, allowing the significant increase in the overall dilation of the artery. Because of our science, we're able to make in markets like the US, which represents 40% of the dietary supplement market, we're able to make critical claims such as VINIA supports heart health by improving blood flow and delivery of oxygen. VINIA increases dilation of arteries and blood vessels. VINIA supports blood pressure within normal range. And specifically, we're also able to talk about the fact that VINIA is probably the best physiological way to get more energy, because as a result of the increased blood flow and oxygen to the body's tissues and organs, VINIA is actually able to improve physical energy and mental alertness. We have launched VINIA in the Israeli marketplace. We have built a very powerful direct-to-consumer business. We only sell it in Israel direct-to-consumer. And to give you some perspective, in Q1, we delivered just under $400,000 of sales orders, with a full year estimate of over 1.5 million in a little country just with 9 million people. And we will be taking these learnings and going and launching into the big market of the USA. We're coming to America, going after a $4 billion heart health supplement market, plus a $16 billion energy supplement market. And we're very excited that week commencing May 9th, VINIA will be available for the US market. And we're going to be driving a significant brand marketing, direct-to-consumer push as we start to build the pipes into consumer homes to start to layer on many of our other products we have in our superfruit nutraceutical pipeline. Very quickly on the cannabis vertical, we all understand it's a huge market, major opportunity across critical markets like North America. The current industry is fraught with constraints and inefficiencies, high capital intensity, very labor intensive, meaning high operating expenses. Production is seasonal and weather dependent. Product quality and consistency challenges. Product is susceptible to contamination. And many challenges around not having patent protection. Well, I'm very excited to say that with our biofarming technology, we are bringing a level of cannabis to the marketplace that the market has not seen before. Because of our process, we have fingerprint consistency. So we will be able to produce, when we bring cannabis to market in the first half of 2022, we will be able to bring to market cannabis, which is 100% consistency, fingerprint consistency, 100% clean, because we grow it in GMP environment, leveraging the power of our cell growth with a full spectrum complex of cannabinoids, a cost advantage the industry has not seen before, and a sustainability footprint that really will drive a leadership position in the industry. And I'm very proud to say, Spencer, that we are the world's leading company as it relates to growing cannabis in liquid media. And we're actually writing, if I could say, the Bible in this area because there is no literature. We are the scientists that are driving this, and will be bringing a grade of cannabis to the market that the market has never seen before. We've already had significant milestones that we've been able to demonstrate as part of our commercialization, demonstrating the ability to grow in liquid media, the 6 distinct cannabinoids, the ability to actually grow cannabis cells in small-scale bioreactors with a profile that's identical, absolutely identical to the profile of the source cannabis plant. And we've also recently announced the ability to optimize the production of trichomes in liquid media, which is so important because the trichomes are the factories which actually produce the cannabinoids, the terpenes, and the flavonoids. The cannabis that we'll be bringing to the market will be focused in a number of areas. It'll be bringing unique competitive advantage for us to go after pharmaceutical and medicinal market, as well as with the consistency and the cleanliness to be able to provide cannabis that major manufacturers who haven't yet gone into this space because of the challenges around consistency and cleanliness will now have that willingness to lean in because of the quality and the grade of cannabis we'll be bringing to the marketplace. I talked before about being a purposeful company. Everything that we're doing is focused on being underpinned with a very strong sustainability platform based on our biofarming technology. We are working now to actually publish and promote a sustainability report at the end of Q2 or early Q3. We are developing our own ESG framework and an overall sustainability strategy. We're already as a baseline of best in class from a biotech and specifically a cannabis company perspective in this area. And we're obviously focused on continuous improvement in the future and to drive a leadership position from a sustainability perspective. So I'll stop now. Hopefully that answers the question around who we are. And looking forward to some questions, if there are any questions from the audience.
Yeah, I've got one here, Elon, from myself. What kind of regulatory hurdles do you have to clear in the U.S. or more broadly, I guess, but in the U.S. specifically?
So, obviously, in markets like the US right now, you're seeing a lot of deregulation. Fortunately for us, the ability to when you're dealing with non-CBD cannabis, so we're talking about high levels of THC, the legalities allow you only to produce and sell when you're actually within a specific state. So for us, from a regulatory perspective, the whole focus that you see from an industry, which is about actually having federal legislation and legalization of cannabis, is not a big deal for us. And the reason why, Spencer, is that because of the uniqueness of our technology, our ability to actually build a plant in key states, for example, in California, in Illinois, or major markets, our technology allows us to do this at a minimal capital cost. So the big challenge for many companies on the cannabis side has been around the legalization. For us, again, it's not a major impact. The other area where we're seeing a lot of challenges from a regulation is around the consistency and the quality of the cannabis. So again, this is one of the advantages where we're able to bring consistent quality and a level of cleanliness which will supersede where the current regulations are today, and actually will lead the industry as far as what can be done, what can be achieved in ensuring that we bring in the best possible grade of cannabis for consumers, specifically in the medicinal area.
Right. I guess I meant for the Vinia specifically, though, because I've
okay. So on the Vinia, okay, now moving to Vinia.
Yeah.
From a regulatory perspective, we are a dietary supplement. So being a dietary supplement, when the FDA has a very clear structure function guidelines where companies, if they have the science, they have the ability to make structure function claims within specific guidelines of the FDA. So what you saw, what I shared earlier, are structure function claims that are all made under the authority of the guidelines of the FDA. And obviously from our end, we have all the critical science to support those structure function guidelines. So this is something that's very important in the industry because unfortunately the $46 billion dietary supplement industry is fraught with companies that are making claims but don't necessarily have the science behind it. And one of the critical focus areas of our launch is to actually lead the narrative and to make sure that the consumers understand that they need to actually ask the companies that they're spending hundreds of dollars on every single month. Are you soluble? Is your ingredient soluble? Is your ingredient bioavailable? Does it enter into your bloodstream? And do you have clinical trials to demonstrate the efficacy? Because unfortunately, in the US today, you have 80% penetration of dietary supplements across American households. That drives the $46 billion category. And a large proportion of that is ineffective. And people are not spending their hard-earned dollars in a way that's actually improving their health and wellness. And because of us being anchored in science, we're very focused to drive a leadership position in the industry and start to educate consumers on how they need to be looking at how they're spending their money in this category, ensuring they're only consuming products that have that solubility, have the bioavailability, and have the efficacy.
I gotta say, points for creativity on this one. I've never heard of anything like Vinia before. So Ilan Sobel, thank you so much. Unfortunately, we are out of time. I had some more questions, but you can engage with Ilan on our virtual app, so our virtual platform. So check out Ilan there.
Well, also I say, Spencer, one last thing, if I may. If people have questions, they can reach out to me at Ilan, I-L-A-N, at bioharvest.com, or our head of investor relations, which is Justin at bioharvest.com. We have a service level agreement of 24 hours to get back to investor or potential investor questions. And that's the way we roll as we bring on board our investor community as part of this exciting journey that we're on to really change the world.
All right. Thanks a lot, Ilan. Appreciate it.
Take care. Thank you for the opportunity.
All right. That brings us to our final presentation. I know what you're thinking. You're thinking already? I know. I'm with you on that one. Alan Davis is the CEO of BioRes Technologies. Alan, good afternoon.
Good afternoon to you too.
How are we doing today?
We're doing great.
Excellent. BioRes Technologies, tell us about it. And I believe you also have a special guest.
I do, and I'll introduce him at some point here as we get a little more into the team.
Sure.
So I initially want to start off with saying BioRes Technologies is, to be as simple as I can, a plastics replacement company. Okay. Plastic. That's a word that everybody knows, everybody has some familiarity with, and everybody, to some degree or another, has some feelings about. And generally speaking, those feelings are not very good. We all know that plastics pollute the environment. They're harmful to fish and wildlife. They can make us sick too. They're very difficult to recycle, and they're very difficult to replace in any way, shape, or form. So it's a very difficult problem. How do we get rid of it? How do we change it? How do we replace it? How do we do anything that puts us on a better footing than we now are in with regard to plastic? I'm hopeful that I'm going to be able to convince you during this 15 or so, 20 minutes, that while we do not have the perfect solution to all these problems, we have the best solution that's been introduced to date by anybody. It's a solution we think that can solve a vast majority of the problems that I mentioned. As I said, it won't solve all of them, but it'll go further than any other technology or company that we've seen on the market thus far. Now, what is it that this technology that we've come up with is basically a polymer, or resin as it's sometimes called, and actually has a long history. We didn't just create this out of midair. The actual technology goes back to the late 1990s, early 2000s. It was created by a member of our team who worked at that time for a company that was founded by a fellow named Hans Franke, who was then president of Chevron Europe. And it was substantially funded by Gordon Moore, the legendary co-founder of Intel. So dating way back when, you had a couple of very well-known individuals who had an interest in this space. And what they recognized was that an oil-based plastic was very problematic, and something had to be done with it. And so one of the people that worked for them, who now is working for us, created a new polymer that was 100% plant-based as opposed to oil-based, which is what all plastic polymers are made of, fossil fuel-based. And he created a new way of attacking the problem. And unfortunately, timing wasn't perfect. It was at a period of time when people didn't really think twice about the harm that plastic was causing to the environment and to others, including human beings and fish. And so they produced the product. They actually built a manufacturing plant in Michigan and produced some samples. But because of the timing, honestly, the company didn't go very far. It actually existed for about 10 years, and then it just went away, but not before the original inventor of the technology filed a patent in the year 2001, and that patent has now almost expired. But in the interim, he has come up with a upgrade to that original patent, and it's our intent to file a new patent based on the upgrade, which will be new intellectual property and will the proprietary basis of the company of BioRes. What is it about a plant-based polymer that's different than oil-based? Well, it's not toxic, it's biodegradable, it's compostable, and it's strong yet flexible. It's basically a very healthy way, if you will, of creating plastic without having all of the harmful side effects, which everybody's pretty much aware of. That's the history of where we are. We have a very strong team made up of individuals who are very experienced in the space. They've produced both oil-based and plant-based plastics. And we also have a very experienced sales and legal and regulatory group with substantial operating experience in various kinds of businesses. As you can tell, I'm not an engineer. I'd be the first to tell you that. What I do and have done for over 30 years is to form new and interesting companies. That's my passion, if you will, is to form companies that will significantly change people's lives. And so I formed one of the early cable television companies. I formed the first Wi-Fi company in the United States. I formed an early stage data storage company. And all of those were a labor of love because I was able to plant the seed and rely on the experts to really bring those companies to fruition. With me is another member of the team who's I've been working with very closely on this for over a year. And his name is Mitchell Steer. And there he is.
Hello.
Mitchell is our Executive Vice President. He's the Chief Administrative Officer and he's General Counsel. And he also has a significant background in plastic, having worked for a very large plastic packaging company for many years. And so he's well aware of all the issues and all the problems. And Mitchell will be with me on the Q&A section of this. So we'll be back to you, Mitchell. Thank you. Okay, so let me tell you first about something that you may already realize, but I want to go into a little bit of detail. And that's the market opportunity to replace plastic is unbelievably enormous. It's been estimated by analysts that the plastic market worldwide is somewhere between $600 billion and $1 trillion. Now, 35% of that is packaging of all kinds. But in addition to packaging, the plastics industry covers an unlimited array of products. Almost everything you can imagine has been made of plastic, from construction parts to toys to medical products to gardening products. It's an unlimited array of products. So what we had to do, given the enormity of the market, was to focus initially on a couple of market segments that we thought were very significant and of a big concern to people out there. One of them is the food serviceware market, which is now being driven by COVID-19, actually. So you have people with takeout, they're taking out with obviously clamshells, and they have utensils and plates and bowls and trays and so forth and so on. This is all food serviceware, and almost all of it's made of plastic. So so that's a big recognizable segment, and it's also often referred to as a single-use plastic, which basically means that people use it and they throw it away right away. The second area is replacement for plastic bags, and again, an enormous market, ranging everything from carry bags, which are bags that we use to carry goods out of stores, whether it's clothes, whether it's food of various kind. But the plastic bag segment goes beyond that. It also involves obviously things like garbage bags, yard bags, basically. So you have these very thin, flimsy bags, if you will, that are used to carry goods out of a store, including drugstores, by the way, as well as these much more heavy bags. And our technology is designed to produce any and all those kinds of bags. So that's basically what we're up to. We already have significant interest by companies who have been contacted by us and are very informed about what we're doing and the technology that we're utilizing. For example, Hasbro has sent us a letter of interest as one example. They're interested in replacing all their packaging. And one funny story actually is that one of the feedstocks that we can use, hemp is the main feedstock, corn is another feedstock. The main one is hemp, but another feedstock is potato. And so they asked us whether we could produce a Mr. Potato Head out of potato. And we said, absolutely we could. So that absolutely got their interest. So we also have the interest of a very significant finance company up in Canada that owns 1,400 fast casual and full service restaurants. Obviously, all the food service applications which I talked about, they're very interested, and they want us to produce samples in order to see just their degree of interest. What's our competition? Fair question. Our competition is, of course, first of all, the legacy plastic companies that control 99% of the market. These companies base their polymers or resins, which is a substitute name for polymers, are all based on oil, fossil fuels. And that's primarily what we're trying to replace, as I mentioned previously. But in addition to that, there are what are generally referred to as bioplastics companies, biopolymer companies. They represent a very small section of the market. I'm sure you've heard of some of the types of technology that they're utilizing. For example, PHA, PLA, PET, you may have heard those terms. those companies, they're basically bio-based, that is plant-based substitutes for a plastic. But unlike ours, those plastic substitutes, even though they're plant-based, have a lot of problems. And the principal problem they have, and it's admitted by all of these companies, is that their costs are significant. When I say significant, they cost 2 and 3 times the cost to manufacture as the oil-based plastics. And so that makes them very difficult to sell. And that doesn't get into other performance characteristics like brittleness. They're not as strong as what we're producing, which is primarily hemp-based. And there are other potential problems. Some of the feedstocks that are being utilized, like sugarcane, and others, are in corn, certain kind of corn, GMO, genetically based corn, are basically taking away from, they're diverting food, or they're taken from pulp, and so the deforestation issues. So we don't have any of those issues. Since we're relying on feedstocks that are readily available, and farmers are happy to make them available to us at a much lower cost. Now, what do I mean by lower cost? I'll give you. I'm going to give you the best analysis I can, based on some studies that have been done. One is that we have estimated, based on these studies, that the cost to produce our polymer is approximately, and this includes a profit to the farmer who's supplying us the hemp or corn, is approximately 5 cents a pound. The cost to produce the oil-based polymers, which primarily are made up of 3 kinds of polymers: polypropylene, polyestrine, and I forget there's a third poly. Sorry, we've got the third poly. The price of those polymers, including the cost of rail to deliver them to the plant, are well over $1 per pound. So the difference is 5 cents a pound to produce to get our polymer to a plant, a manufacturing plant, and compared to over $1, which is the cost for utilizing a oil-based polymer. And even polymers made like PHA and PLA, PET is a good example also. Those are way more expensive than what we're talking about.
Hey, Alan, I'm just going to jump in here for a second. We're up against the clock.
Okay.
So if you can, do you have any final thoughts for us?
Yeah. I was just gonna say one other thing anyway. So yeah. That's fine. So in order to do what we're doing, we have to create a manufacturing line. Manufacturing lines to produce what we're talking about are very expensive. And so we're looking for investors who, in the totality, will supply us with $3.5 million to get started with this endeavor. And we're very happy to take Q&A. Mitchell can join us now, and we can have questions.
So I'm going to throw the link to the platform right up there. We're up against the clock as far as Q&A. There are a couple questions just about the cost of manufacturing. We don't have time for them now, unfortunately. But guys, as I've said throughout the day, all of our presenters, our virtual platform will keep going. Right, today's event is a one-day event, but the virtual platform is going to be is going to be live for a few more days. So if you have questions for Alan or Mitchell, chat moderator, if you can, throw the link up there, and so everyone has it. But I want to thank you both for the time today, and good luck, and we're going to be keeping tabs on your progress.
Thank you very much.
Thank you.
All right. Sorry about that, Alan. All right. Guys, that has to be a wrap. We had fun together, I know, but all good things must come to an end. That being said, I do have some housekeeping items I want to address before I sign off for the day. Number one, I'm going to share my screen, okay? This is the poll/trivia thing, contest, whatever, that I've mentioned throughout the day, okay? Slido.com, S-L-I-D-O, what did I say? S-L-I-D-O. SLIDO.com. The code BZ Cleantech T2. Fill out those questions. One person will get a lifetime subscription to Benzinga Pro. One person will get a lifetime subscription to the Benzinga Options newsletter. And one person will get a lifetime subscription to the Benzinga Breakouts newsletter. So check that out. Again, SLIDO.com. Code BZ Cleantech T2. Okay, that's housekeeping item number one. Housekeeping item number two, the virtual platform, which the link is in the chat right now, is going to be live for a few more days, not just today. Check it out right there. Let me throw it up there one more time. Pat, how do you get to the next question? Let me, Pat, maybe I have to be the one to do that. So why don't I start at the beginning? And then, okay, let's do this. I'll keep this up, and then I'll change it after like 10 or 15 seconds, and then I'll do that as I'm signing off here. So I just put I put the link to the virtual platform in chat. Again, everybody who was at today's conference will be available on there to network with, ask questions to, until Monday, I believe. So check that out. I want to thank all of the speakers and sponsors that made, here, I'm going to switch to the next question. All the speakers and sponsors that made today happen. Couldn't have done it without them. I want to thank all of you who hung out with me today, whether in chat or just lurking in the back. I'm much more of a lurker myself, so I understand the lurkers. I see you, lurkers. I see you. Just because you're not in the chat doesn't mean I don't see you. Oh my God. The poll is really moving here. My vote was for energy storage. That is quickly not going to be in the majority at this rate. I'll keep it up there for a few more seconds. The full streams of my track, of Neil's track, will be available on YouTube. If you missed any part of today's session, that's okay. Streams are going to be available on YouTube. I want to mention that this is but one of many virtual events we have on the docket yet to come this year. If you go to benzingaevents.com, I would bring it up on the screen, but I don't want to take the Slido off. But benzingaevents.com has the full schedule of all our events to come this year. We've got here, I'll just tell you. We've got our next small cap conference. It's going to be May 13th to 14th. We've got our Cannabis Capital Conference. That'll be a big one. June 3rd and 4th. Our next boot camp is going to be June 26th. We've got basically more than one event every single month for the rest of the year. So benzingaevents.com. While you're there, you can sign up for the newsletter, which will alert you every time an event is either scheduled or upcoming, and it'll keep you in the loop for Benzinga events. There's the link. Thank you, chat moderator, for putting that in the so Pat Mulligan, says I must be knackered. Pat. I'll be honest, I don't quite know what knackered means, but yeah, I'm knackered, man. I am knackered. What else was I going to say? Any feedback? Email events@benzinga.com. Things you liked, things you didn't like. Don't be afraid. We won't bite. Well, most of us won't bite. I mean, I might bite, but the rest of them won't. Events@benzinga.com. So I'm done here, but we're not done today because here's what's going to happen. I'm going to end this stream, and when I end this stream, it will redirect. Actually, it'll redirect within our platform, not on YouTube, within our platform to our next breakout session. We're talking with Matt Maley, fundamental versus technical analysis. Matt Maley, if you don't know him, he's the founder and CEO of the Maley Report. He's also the author and editor of the Benzinga Stock Picks newsletter. If you're on YouTube, you got to hop on over to our virtual platform. I'm going to put the link in there in the chat right there. This is where the breakout session is available. I just put it in there. BZ, Cleantech, Retail, .connects.at/view access. That's how you access our next breakout session. It's up on the screen there. It's in the chat. Okay. So if you're on YouTube, this is going to end and then we're done for the day. As far as Benzinga events, I do want to mention that Brad Weber is coming up with technically options at 5. But as far as the event, it is still going on the virtual platform. So there's the link to that here. I'll change the Slido. I'll just skip that one because. Okay, I'm not going to sign off until I'm sure that I have more likes than Neil's track. Neil's at 232. I'm at 256. That satisfies me as far as having more than Neil. If we could get to 300, that would be even better. If I could rub that in his face. Help me get to 300 before I'm done here wrapping up this stream. Yes, to answer your question, who was it that asked that in the chat? Solar Up. Yes, Money Mitch will be doing his thing tonight in about an hour from now. So check it out right here on Benzinga YouTube. Obviously, we're going to be back to our regularly scheduled programming tomorrow, all day. You know, everything from pre-market prep to get technical to SPACs to Power Hour, options explained at the close, all that regular programming tomorrow. Thank you, everyone, for attending today. I hope you learned something. You know, I learned a lot, to be frank. I have but one small clean energy investment in my portfolio, and I have some research and some homework to do, I think, after today. I always like listening to investor presentations. One, because obviously, like, they're designed to be convincing. So you don't want to fall in love with every presentation because they're designed to be that way. But they really can get the gears turning in your head. Like, here's a business or here's an industry that I don't know anything about. These guys seem interesting. Let me check them out and do my own research from there. Right? That's sort of how I look at it. I've attended enough of these conferences. I've seen enough investor presentations and that's how I use them. Right? Is I'll use it as like my entree into a whether or not it's a specific company or like more broadly like an entire industry. Right. So that's how I look at it. But investor presentations are valuable to me for the way they can sort of get the gears turning in your head. Thank you very much, everyone in the chat here. Let me change this. So as I mentioned, Slido.com, one person will win a Benzinga. It'll be emailed at random. Okay. It'll be emailed at random. I'm not going to announce the winners now. We'll email the winners. It'll be chosen at random. Somebody on the events team, not me. We'll email the winners of our poll/contest. Okay, so as I said, redirecting to Matt Maley within the Benzinga platform. If you're watching on YouTube, we've got Brad Weber, Technically Options, coming up next. But I think I'm done. I think I'm going to wrap. We're not quite at 300 likes, which is, I'll be honest, a bit of a bummer, but we got more than Neil, so I'll take it. Here, you know what I'm gonna do? I'm gonna stop sharing the Slido real fast, and I'm gonna just bring up our events calendar so y'all can see what I'm talking about. Where's my events calendar? Here it is. So as I mentioned, small cap conference in May. Cannabis, guys, that's the one I'm hyped for. Right there. Cannabis Capital Conference. I wish it wasn't virtual. I wish we could go somewhere. Hopefully soon. We will have a real in-person conference. But in the meantime, it's what we can do, and I'm super hyped because I've talked about this a bunch over the years, but the cannabis companies that I own that I like, and SPAC Broker, thank you very much. Solar Up, thank you very much. Len Nolan, thank you very much. Oh, you know what I didn't do really today is I didn't really play. We had like several more trailers and videos that we made that are really good, and I only played a couple of them. So let's do this. As I see myself out, let's end this video here with what should we play, Nicole? Which one? We have Benzinga swag. We have our nice video of what our guests say about us. Let's do the all-day live stream. Let's do that one. I think that's fair. So let's go ahead and play that. I'm out. Thank you, guys. Hit the like button. I'll see you tomorrow.
Yeah.